turning up the pressure on Senate Democrats to get to yes for this vote, announced a delay in $18 billion for infrastructure projects for New York City, and then later yesterday announced another $8 billion in green energy projects. And he said that the states that were going to be impacted, all of them are states with Democratic senators. So it's very clear how the White House is trying to really turn up the pressure on Congress to get something done. Guys?
Emily, is the focus of all the attention in the Senate and whether or not they can get enough Dems to help them?
Welcome back to Opening Bell. We have a mixed market this morning after records that we have seen, so many records in 2025. Let's see what John Kadunis, CEO of Calamos Investments, has to say about the big picture. It's great to see you. Good morning to you, John. You're still feeling optimistic, right?
I'm still very, very optimistic. I think the fundamentals are still very, very strong, and there's no reason for panic. I know the government shut down. You know, if you look at history, the government since 1976, I think, has shut down around 20 times. Once in between 2018, it shut down for 5 weeks. And if you look at the results, I think during that time, the S&Ps actually went up. So the market kind of understands that this is really a really political kind of nonsense that, unfortunately, we have to deal with, and the market's been shrugging it off. Now, it doesn't mean that if it lasts for a long time and during certain cycles, it may not cause some issues, but it's definitely causing issues for certain people. But for the economy and for the market, it would have to be a lot more drastic than I think it's going to be for it to make any difference.
Yeah, nice and nice of you to differentiate between the federal workers that may be affected versus investors who are less affected. And in fact, we see the up arrows, as you noted, over the last 20 shutdowns. At this point now, I know that you are feeling that fundamentals are looking pretty good. What do you mean when you say that?
Well, you know, we continue to see corporate earnings come up, very, very strong and surprisingly strong, right? So the economy is still has a pretty, very, very profit margins are continuing to increase. So we're starting to see some of the policies affect the economy in a very, very positive way. And that's something that's going to take some more time. We're starting to see it sink in. And the reality is now that finally the Fed is in a way where it's starting to ease, and we are predicting a couple more cuts before the end of the year. Everybody is starting to see the pattern and the trajectory of where we're going, and it is pretty positive.
And when we think about all the investments, it's a different playbook. I mean, you're talking about some of the policies, and as we see, people are talking about all the investments that are happening in AI. Less government spending, that it's not comparable to years past. There's different things that are happening, and that may be, in fact, contributing to some of your optimism. I mean, I think that the Fed's dual mandate of inflation and full employment, what are your thoughts there?
I think you hit it on the head. I think AI is a tremendous factor that we have.
All right, good morning. All right. Tesla's up. Deliveries up. I guess people rushing in before the tax rebate or whatever tax incentive goes away. I think it's like $7,500, right? So Tesla's higher this morning. Nvidia is up. Snowflake's higher. Broadcom is higher. Micron was higher this morning. Let me just check Micron. I closed my, I had some call credits left on. I took those off yesterday. It looks like we're going to continue higher on Micron. Oracle is up a bit as well. Oracle.
Then will reduce our interest payments by $350 million. And that will enable us then to start adding back parts of our value proposition that we were not able to do previously.
So lifting some of
All right.
debt on that company, Mike. I mean, this is Warren Buffett's biggest deal in more than 3 years.
Yeah.
We know that he's announced a succession plan. I mean, is this potentially maybe one of the last deals we'll see him lead?
It could be. I think it's very typical of the kinds of deals that he has lately done, which is it's very opportunistic and it's kind of an add-on to a relationship that he's had for a long time. It's not him prowling the landscape and finding, a big one to do. He has said he would stick around beyond the date when he's handing over the CEO role to help with a big acquisition. If in fact one came along, you get the impression that he's kind of itching for one last big one. In this case, though, it's fascinating, the relationship over the last 6 years or so between Berkshire and Occidental. Berkshire bought $10 billion in preferred stock. It yielded 8%. Occidental's redeemed some of that. Berkshire owns 28% of the common. So he's handing cash, a lot of which he was paid by Oxy on the preferred and some of the common dividends to Occidental to improve its balance sheet. And because he owns 28% of the company, he's kind of paying 28% of that purchase price to himself, Berkshire Hathaway.
Sure.
But it's just obviously kind of a can't lose. I don't think it's a game changer for Oxy. It's definitely an improvement in terms of balance sheet, putting them in a better position. Stock's in a tough. And it's below.
Okay. NASDAQ 100. We've got about 45 stocks advancing out of 100. About 20 are declining. The rest are unchanged. Got the hiccups. Okay, let's take a look at Broadcom. Okay, Broadcom is currently at 345 and change, 345. Right at fair value, the 20-day moving average. We're just chopping around. Bollinger Bands are coming together. Broadcom. Okay, nice credits here. We'll see what we can close that for.
About the potential for this bull market to continue, but some of the risks we've identified.
924.
In your portfolio makes some sense. So on one side, given our enthusiasm for earnings growth,
Okay, we'll be starting here shortly.
continuing to be overweight areas of technology, communication services, financials, where they're highly profitable, earnings are growing, and they have kind of an attractive outlook from that perspective. But in order to offset some of those risks, we think there is a potential for both interest rates and inflation to remain a bit more volatile and higher than the market expects. And so that proves problematic for those bond portfolio allocations. So we think having a diversified portfolio of real assets, infrastructure, real estate, commodities, natural resources, and precious metals, including gold, help to manage or offset some of those risks. So that's the second part of that barbell, Allie.
So I'll see if any of those risks materialize, but we do have the S&P on track for yet another record. So it's Michael Aroni. Thank you so much. Appreciate it.
Thank you.
Well, coming up on Yahoo Finance, opening bid.
All right, 60-minute looks good. We're currently on a sell signal. 60-minute sell signal. 5, 15, 30 are on buy signal. 60-minute needs to flip. Let's see what Trace looks like to start the day. Okay, let's go zoom out here. Okay, we have resistance right where we're sitting right now. Up to 67.50, 67.65, and 67.75. None of these are 99 percentile, looks like. Okay.
Really hammer it home. retail market has a really
Okay, we got 4 minutes to go. 4 minutes to go.
for sure.
Broadcom's higher. Snowflake is higher. I bought some Snowflake verticals yesterday. Tesla is going to be fine. I'll be taking some Tesla off in the first 30 minutes or so.
So for folks who have more of a risk appetite versus those who want to be more protected on the downside, you offer multiple products when it comes to Bitcoin, which you believe is here to stay, as you said, John. It's great to see you, and I'm waiting on your book. I mean, I had the pleasure of having The Sky's the Limit, John Calamos. Now we're waiting on John Kadunas' book one day. John Kadunas, CEO, Calamos Investments. Thank you. Quick break. We'll get ready for the start of trading. We're moments away.
Snowflake, Broadcom higher. Apple is bouncing right here. Don't forget to check out the Founders Notes Gamma update. 6750, 6765. 2 minutes to go. 2 minutes to go. Support 6700. We want to stay above 6680.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start.
Okay, so week ADP data yesterday most likely locked in the October cut. 98% probability.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Welcome back to Opening Bell. We have the countdown to the start of trading. Joining me right now, Sam Thomas, and she's looking at OpenAI's valuation, which is soaring.
Absolutely. Look, it's reached a valuation of $500
VIX
billion.
is lower.
A number of
Okay.
reports out now that talking about this after the former employees and current employees did sell roughly $6.6 billion worth of shares. So that does mark quite a significant jump up from what we had previously been talking about in recent weeks, about a $300 billion valuation here. And that allows it actually to surpass the SpaceXs of the world, which sits at 400.
Looking for blow off tops. Okay, this 6700 level. JP Morgan collar, the short strike calls are at 7,000. Okay, a lot of rich falls here. All these are call rich on the right bottoms. Okay, here we go. We're about ready to open. Here goes Broadcom, moving higher. Broadcom. Supermicro was looking really good too this morning. Okay. S&P 500. Okay.
Intelligence race right now.
Okay, well, as we look at that, we're just a few seconds away. Some of the final quick market thought.
No, we're already open, Nicole. We're already open. Why is CNBC late?
What shutdown, Nicole? That certainly seems to be what the market's feeling right now. Obviously, we've got a lack of data to work with.
Okay, Apple pulling back. Tesla pulling back.
Services data we'll get tomorrow, and then perhaps more of the Fed speak, maybe hanging on to sort of every word that these people are saying.
MicroStrategy. Bitcoin is higher. Bitcoin.
We'll see how quickly the government shutdown comes and goes. Theoretically, it could be ending soon, right? But we will have to wait and see. In the meantime, Symbonis, thank you. Catch you at 10 o'clock.
Snowflake. Apple. Okay, MicroStrategy. MicroStrategy. I'm going to take some profits off. I have October 17th calls. I'm going to go ahead and take the profits here into strength. MicroStrategy. I'll reassess. I'll reassess at some point, but we popped up into supply, so I took MicroStrategy out. Okay, futures just dropped off here. Futures. S&P with the profit taking. S&P 500. Okay. Snowflake is higher. Snowflake, I had calls from yesterday. Snowflake. Snow. All right, those are up. 240. Need to get to 240. NASDAQ NDX is on the move. NASDAQ. Nice look to NASDAQ. NVIDIA.
Good morning. Yeah, you are seeing gains, as you mentioned, in the chip space today. AMD, one of those that is gaining ground. And one thing that we've been watching is report.
Okay, NASDAQ 100 lost a few.
Discussions to add AMD as a foundry customer.
Advancing stocks mostly declining at the moment. Okay, give it a few minutes for the markets to settle down. AMD pulling back. Tesla pulling back. Riot back up to 19 and change. 1937, 1928. Merck, a little profit taking. Snowflake higher. NVIDIA is pushing, looking for a pop.
So far in the pre-market is something that we're continuing to watch. Now,
Sorry about that. Okay, Microsoft pulled back just now. S&P is starting to bounce. Okay, from some buyers here, look like we might head towards. Looks like we might head towards these higher strikes. Hedging flows turned up.
It's sending essentially shockwaves across the sector. When you look at shares of Equifax, those are down more than 7%. TransUnion down more than 8% on this news. The company is saying this is a direct-to-reseller model. It'll cut the price of a score by 50%. They're saying that this will give transparency and savings for lenders and brokers. Analysts say the move cuts into bureau margins. Still, analysts says
Netflix pulling back more. Netflix lower.
Because consumer data and infrastructure is still in the hands of the bureaus, and so they're still central players in the broader ecosystem when it comes to credit scoring. But again, that shift is to provide greater price transparency. Under the new model, resellers will pay just under $5 per score, and there is a funded loan fee of $33 per borrower. So, in other words, the lenders can start to work directly with a FICO instead of dealing with the union. So that's why the TransUnion Equifax being dinged this morning. Yeah, and look, Fair Isaac FICO is the number one performer in the S&P 500 today with this move of about 15%. And the other names, Equifax and TransUnion, with down arrows 8% and 9% respectively. So certainly feeling the pressure today. Let's get to last but not least, looking here at Berkshire Hathaway moves when it comes to Occidental Petroleum. Yeah, which we had indications of this at the beginning of the week with that Wall Street Journal report, but it is.
All right, give it a few minutes for the markets to settle down.
Occidental Petroleum's petrochemical unit, it's OxyChem. It's a cash deal for $9.7 billion. They've again agreed to sell this deal. It's Berkshire's biggest deal in a few years since 2022, and that was back when it paid for the insurer Allegheny, and at the time it paid $11.6 billion. So this is a chunk of change. But Berkshire's been sitting on a war chest of cash, and people, analysts, and strategists have wondered when they would deploy this. Although shares of Occidental Petroleum are a little lower.
Okay, Tesla fading.
Been indicated higher in the pre-market. We'll see how things shake the session. The company saying it will use a good chunk of the proceeds to pay down debt, $6.5 billion. That's one of the challenges with Occidental Petroleum. It's been kind of a heavy laid down with debt, Nicole. All right. Well, thank you for all of that, Diane. I mean, a lot there going on. Tesla's just only slightly higher now, despite some really good deliveries and energy storage numbers. Thank you, Diane. Good to see you.
Good to be with you.
And folks, coming up next, we will have Main Street Research's James Demmer will join me, and he'll tell us why he thinks maybe buy the dip could work for the rest of the year. Right now, we're at records. S&P record, NASDAQ record.
Okay, all of the New York Apple's dropping off. We got Amazon dropping off now, giving back some of yesterday's gains. Broadcom pulling back. Okay. Oracle's up a bit. Okay, just waiting for the S&P. Is just kind of choppy right now. S&P choppy. All right, let's go look at the top 10. MicroStrategy. Looks like a Bitcoin day. Looks like Bitcoin's going to be today. Riot, looking for a break above 20. Riot.
Holding spending afloat because the bottom 80% is struggling, and that potentially puts many other things at risk. So we're going into the holiday season. Nike, of course, we heard from them, and they're doing much better than expected on that turnaround plan and where they are. However, still pretty cautious about the holiday season, sort of warning there's still some speed bumps ahead, and so macroeconomic pressures, they cannot be ignored. We still don't know the full effect of tariff policy and what that will mean to consumer spending. And Mike, earlier in the show, I know you were talking about sort of some cracks maybe starting to emerge with the consumer picture and how we're feeling finally maybe pushing through to how we're acting.
Okay, Riot looking for more upside. Riot. Let's see. Let me place Riot's looking good. Okay, looking for Riot to get above 20. If Riot can manage to get above 20.
Specific trigger, or is it just kind of, the weak jobs number piling onto some other signals? Maybe there's some indications from some of the, credit card receivable pools that it's just not all perfect there. Or it's just an outgrowth of the building anxiety about, lower end household ability to kind of make it work.
Yeah, well, we've mentioned the tricolor subprime.
Yeah, that was another big
straight
part
to Chapter 7. CarMax loan loss provisions were a little bit eye-opening. First Brands bankruptcy. So there's some thoughts about, but Affirm, we mentioned this with Kramer yesterday.
Yeah.
Affirm's off 20% from the highs.
Yeah. I mean, it's a wild stock. It just whips all over the place. But yeah, and absolutely, it's taken on some water. So again, we're at this position where
NVIDIA pulling back a bit.
it's priced for soft patch, low, Fed cuts. We get some help next year, and it ends up being just another soft landing type scenario. But you are seeing a little wear and tear on some of these indicators, and the jobs market's just not that far from really kind of setting off alarms, even where we are right now.
We did get Challenger layoffs today. A little bit lighter on layoffs month on month, but we're going to do 1 million layoffs for the full year.
Yeah.
We haven't done that.
1 million announced layoffs.
Announced. We haven't done that since 2020. And then hiring intentions.
Okay, S&P still pulling back. S&P. Okay, fading.
So that might have just the idea that you're pausing.
Let's go look at hedging flows continue to drop off. Okay, give it a few more minutes before you do anything. Market's showing some weakness at the moment. We hit an all-time high yesterday and again this morning. London session swing high right before the open. Rejecting price. London session swing low is coming up. We could see a reversal off of this level. Okay.
Not that far away. It was mid-December of last year. It had that massive run post-election. Now, historically, if you take a look at a 5-year, it does sometimes have these super aggressive peaks right when the overall NASDAQ is kind of finishing up a rally. So, yeah, you see that there, like late 2021. That was the peak in the NASDAQ before we got the. Now, whatever, we'll see if that actually plays as a pattern. But it's a pretty similar slope up to there. You see the compared to the NASDAQ composite.
We should also mention a little bit of crypto. Citi does hike their forecast for both Bitcoin and Ethereum. I think they see 132K by year end on Bitcoin, and then 12-month 181K, where they call it digital gold.
Wow.
Well, it's fascinating because everyone has decided. You look at the history, and October is strong.
Okay, so we're looking for a move down here that reverses. Okay, so we'll see it on trace. We'll see it on trace. Okay, let's see what a 0 day looks like. 0 day, 96 percentile, 66, 80s, 92, 96. Nothing 99% yet. Okay, so we're taking out the London session pivot low right here. Okay, so we'll see if this reverses or not. Maybe take some calls down at this level.
I mean, speaking of turkey shoot, doesn't it become the topic of Thanksgiving dinner, right? I mean, that was what happened, right? Everyone's saying, and your uncle's asking you at Thanksgiving dinner, should I be buying Bitcoin?
Sometimes to positive effect, and sometimes.
To be fair, yeah.
As for OpenAI, we mentioned that latest funding round sending its valuation soaring. Our Mackenzie Sagalos is in San Francisco watching that this morning. Hey, Mac.
Hey, good morning, Carl. OpenAI informed investors on Wednesday that it's locked in its $500 billion valuation. The company has officially closed a $6.6 billion secondary share sale. That makes it the most valuable private company in the world, now surpassing SpaceX. Now, this deal allowed current and former employees who have held stock for more than 2 years to cash out. But what's notable is the shortfall. While OpenAI had authorized up to $10.3 billion worth of shares, a significant portion went unsold. Now, in terms of who is buying those shares, the investor lineup includes Thrive Capital, SoftBank, Dragoneer, Abu Dhabi's MGX, and T. Rowe Price. Internally, a source familiar with the tender says that the undersubscription is being framed as a sign of confidence. Many employees are choosing to hold their equity, and outside investors are still eager to buy in at a valuation that has nearly doubled from $300 billion earlier this year. This is OpenAI's second major tender offer in less than a year, following a $1.5 billion deal with SoftBank in November. And it reflects a broader trend among AI leaders like Stripe.
All right, we're taking out the London session low right here. Okay, London session low is right here, so let me mark that on this chart. We're right here. London session swing low.
At the same time, OpenAI still has to close that $40 billion SoftBank-led primary round. Some of that funding has come in, but the bulk remains contingent on completing a corporate restructure by the end of the year. Guys?
Mac, I know later on this morning you're going to take a look at some of these new video generators that they've announced and sort of the questions that arise out of that about how we trust anything we see now in video form.
There is this video arms race. I mean, you've got players like Google and ByteDance already in the game. And there has been some blowback. I mean, the sophistication of Sora 2, that's the name of this latest iteration by OpenAI, is extremely impressive. I've talked to a lot of technologists who just say that this absolutely raises the bar for the product that was launched in February of last year. But Sam Altman, his response.
Okay, so we're taking out this liquidity right here. Okay, this is actually a little bit higher. Right about here. Okay, we'll see. We're taking out some liquidity right here. We'll see if this reverses. Looking for a reversal. I might try some longs here. S&P 500. Okay, let me see what happens. Let's see if we start to reverse now. 0 day. Let me go. Where's the next level? Resistance is at 67.35 and 67.50. 67.50. Maybe some lottos. 67.50. 67.50. Okay, we're starting to reverse. Okay, those are $1.10. Okay, let me put this over here on my. trade screen.
That's just the
Okay.
absence of 100% tariffs and an ability to essentially
And let me take some puts and just fill them in just in case we do continue lower. Okay. I'll take 66.70. Put that there. Okay, so I have a puts and calls ready to go. Okay, S&P looks like we're going to push higher. Let's see. Okay, so S&P looking for a fair value gap now. We have a gap from this morning. We got some liquidity down below this level. We just took it out. London session pivot low right before the open. Mark the London session high and low. Okay, in your 15-minute chart. Okay, I'm going to go ahead and go long here. Okay, I bought some 67.50s. A little early. Earlier, not generally the best. SPX bought 67.50. A lot of those. $1. Okay, $1.05 for those entry. $1.10. 10 average. Okay, just bought those. Okay, I'm going to scale in, right? I'll do 5 at a time until if we start to roll over some more, I'll get stopped out on a small position. Let's see what happens here. Still a little early. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Looking for a bounce, October 2nd. This is Thursday, second trading day of the new month. We hit a new all-time high yesterday. Let's take a look at 0-day setup. 0-day setup on the 5-minute. Okay, we're 1-to-1 up volume mostly at the moment. 1-to-1 up volume. Okay, I got my finger on the trigger to sell the market if we start to dip here. Let me go to the 1-minute chart. 1 minute. Okay, watching everything else that's going on here. Micron pulled back a bit. Oracle starting to dip. Okay, looking for Trace to continue this reversal. Let's see. Okay, so right now we've got support right in this area, 67.10, back to 67.35, 67.50, just overhead. Okay, we're dropping back off here. I'll lose 50 cents. I'll stop out. Okay. Bitcoin still moving higher. Bitcoin still showing strength. Okay, Micron. Let me see what Riot looks like. Riot's trying to break through 20. It's pushing a bit higher. Watch Riot. The Bitcoin-related stocks, derivatives, options, and different positions, those are looking better.
Man, if you don't do it, it's not going to show up in your sales. It's not going to show up in your sales. I think people, to your point, I think people are just tired of chips and salty snacks.
Okay, 1-to-1 down volume starting to hit SPY. A little bit more selling.
Volatility on the Tesla this morning after Q3 deliveries come in with that beat, 497K, got up to about 470, which is say 18.
Broadcom pulled back in. Broadcom.
Then down to 454. We'll watch this closely. Of course,
Okay.
they put together a nice quarter deliveries, well above Q2, which was 384K. Meantime, Dow up 116 on this Thursday. Nope.
They're healthy for me. I mean, they're really not, but they have some whey protein that makes me feel good about what I'm actually eating. But you cover Coca-Cola for us. Coca-Cola has done pretty well over the past 6 to 12 months.
Yeah, certainly what we've seen is that focus only on the beverage industry at large has really led to, return momentum behind volume growth, and really, especially that Coke
still showing weakness right here.
Also a really key driver for their portfolio as they really hone in on what exactly consumers want right now. As you just saw on that screen, that's health and wellness. In addition to that, that's wanting, more protein within
Nope.
their offering.
Showing weakness here. All right, I'm out of these. I'm going to take these calls off. Okay, I'm out for now. They're still taking out some supplies, so this still may work. Okay.
Alternatives to maybe what they drink every day and looking for a healthier option. But Coca-Cola has just been able to hit that key audience just a little bit better, really enticing them with what they really want in this sort of environment, and especially within that value component as well.
Okay. Want to get this going here? Still hanging out right around 90 cents on these calls.
People used to love these companies because they had high dividend yields and the results were relatively steady. Not the case this year.
M-Chip is popping up. Okay, so we got semiconductors. Looks like they might see some strength here. M-Chip on the move.
You have also the issue about consumer taste. I don't know about whey protein and
Come on, Inez. Yes, you do. It should be. It's all sodas.
But look, there is something to be said about this headwind for these companies because when it comes to the consumer taste, because
Okay, watching. Still looking like it could turn. S&P still looking like it might turn here.
I mean, the government doesn't want you to be in this space. You've got doctors that don't want this, so they have to constantly be evolving their snacks and putting more protein in those snacks because this is the way.
Okay, the top 10, M-Chip. We got MicroStrategy. MicroStrategy, nice little bounce. I sold over here at the open. Okay, M-Chip looking good. Trade Desk, TTD. Trade Desk turning up. TTD. Trade Desk. On semiconductor. PayPal. A couple of you mentioned PayPal yesterday. PayPal reversal.
Not so easy to invest in private companies. If one sees the valuations on an OpenAI, is it as simple as going out and buying even more NVIDIA because that tie-up between the two companies?
Okay, looks like they're going to reverse this now. S&P 500. Looks like we're going to reverse. Got a fair value gap. Looking for the first fair value gap. Could come back and test this. So let's see if it comes back and tests this level. That would be your entry. Put a stop. Could put a stop underneath that low right there, I guess. See if this follows through. Still a little early. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is October 2nd. If you had a really great day yesterday, maybe you want to wait a little bit longer for entry. I found that these signals early in the morning for Trace tend to be a little bit more erratic. After about 10 o'clock, they get more supportive. Okay, let's go see what Hero is saying. Okay, let me go to...
100%, and they're doing very well at it. I mean, one of the ones that I have watched is Tether because Tether in Q2 reported $5 billion in net profit, or 4.9 billion. And
all right, a little bit more selling again.
Their profits, and it's the number one stable coin issuer in the world. I mean, we don't hear that much about it here in the U.S. because it's used very much abroad, but just last month they announced that they're launching a U.S. regulated stablecoin, and that Bo Himes is going to be heading that division. So this is a company that you want to watch. I mean, we just had a valuation of around $500 billion. So it's a company that also is not going to go.
Okay, we're still sitting here trying to figure out what's going to go on. Hedging flows, taking out stops. This is the London session pivot low right before, I think it was 5:30. 5:30, we had the London session low. A lot of times we'll see these stops get taken out and then reverse. We're still drifting a bit lower right now.
Are they bubble-like territory for you? And what's the signal to the broader market, if any? You know, it's tough to say. I mean, look at what OpenAI just did, right? They just did around $500 billion. Those numbers seem crazy to me. I mean, they just continue to seem crazy. So at some point, does it feel a little bubbly? It does to me, but I'm not specifically myself personally in the private markets. I'm just not. We have access to it, but I personally am not. But it feels bubbly to me. But look, AI is going to change the world. Quantum is going to change the world. We've seen how it.
Which way we're going to go here? Which way are we going to go, S&P? All right, while we're waiting for the S&P, the top 10 on the NASDAQ 100 again, M-Chip, MicroStrategy, On Semiconductor, Global Foundries, PayPal, Starbucks. Starbucks cutting a lot of corporate positions. Reducing, I think 1%, they're reducing their store count by 1%, I guess non-performing stores. Okay, Starbucks looking pretty interesting. Let me go take a look at Starbucks for a swing candidate. Starbucks. Okay, so if you are a portfolio manager and you're playing to outperform the S&P 500 to make your bonus by the end of the year, you're looking for stocks like this that have potential. Not saying buy Starbucks here, but looking for stocks like this that have potential. Lulu is another one. Lulu trying to turn the corner. Even United Health, maybe this breaks out of this consolidation. You're looking for stocks that are going to perform, not something that's maybe at all-time highs. Let's see what Palantir is doing. Palantir taking a break. This is holding up really well. Looks like a cup and handle. Fortinet's another one. Fortinet. Security-related stocks, or that's pushing above the 50-day. So I have Fortinet. I've had that for over a week now. Let me see. What do I want to do with that? Fortinet, do I want to buy more? Fortinet. Fortinet. I have January 90 calls. Okay. So we're just a little bit out of the money. So you're looking for stocks like this that have a profitability that could look good going into the third quarter. FTNT. Okay, let's look at earnings on Fortinet. Okay, they beat expectations. So they're at the lows. Think about this for a second. Get 13% earnings growth. That's decent. 13% revenue growth. Earnings surprise. They beat the top expectation. They're making 1.63 billion versus 1.62. So they beat by 100 million. So yeah, this looks okay. Fortinet looks good. So I'd be looking for stocks like this that have a potential to follow through. Okay, Fortinet, S&P 500. S&P 500 just continues to trend. This could pull back in a little bit. We're waiting for direction. Right now, we're just chopping around. Okay, we're chopping around right here. Trying to make a decision whether we're going to bounce back up to the highs. 1-to-1 up down volume continues. 2-to-1, 2.5 on the NASDAQ composite. Let's look at the NASDAQ composite. NDX. Okay, that looks okay. Buyers at the low of the day for now. NASDAQ composite, marginally. NDX looking better. All right, NASDAQ composite looking better. Okay, let's look at IWM. IWM is just kind of sitting here. IWM. Yesterday was spoiled this yesterday. That was everything was working. Calls are expensive now though. Okay, so Coinbase, that's one that we bought some. We bought calls on CONL. Okay, that's following through. Bollinger Bands are opening up. COIN, CONL. Let's see what BITO looks like. BITO. BITO was his name-o. BITO. BITO. What's going on here? BITO. BITO. Okay, that looks good. BITX. BITX. That looks good. IBIT. IBIT. Okay, that looks good. BITX.
Yeah, thanks so much for having me, Allie. I think what investors can learn from this experience is you have to actually jump in when it feels the most painful. We were adding to a number of the chip names in April. We were adding to Tesla. It wasn't easy to do, but if you believe that the technology is real, and we believe it is, then you use volatility as your friend, as a long-term investor. So I'm surprised, but not surprised.
Okay, Supermicro. Okay, we've got inside bar that tends to continue along the path of the prevailing trend. Okay, so a very strong day yesterday. Some people taking a little profits here. Let's see if we follow through.
In a positive way. This technology, however, is much more robust than the internet was and eyeballs on a screen, which was how we were valuing companies back then. So I'm pretty excited.
All right, tick cumulative is bullish, so we should see a follow through. Let me check out junk. Remember, you junk gapped down yesterday. Okay, junk still looks bearish. Junk. Junk, we got a warning signal day 2. Let's see what high yield corporate looks like. High yield corporate. That's still trending. High yield, HYG, still trending. Okay, Apple. Okay, there goes Snowflake. Snowflake going.
Purchase of some debt collide with the optics of a shutdown here.
I think when you talk to senators on the Hill, what they're really focused on right now are the
Okay,
US
Google.
farmers, the concerns that they have for U.S. farmers, when
Google.
it comes to soybeans in particular. You've seen Senator Chuck Grassley already kind of speak out and say, look, these farmers are in a position where they need some sort of assistance, they need some sort of deal, they need to be able to export their product. And I think that's one of the big things we're going to be watching for around Capitol Hill, not just specifically with this whole shutdown, but in general, the lawmakers like to say they can walk and chew gum at the same time. Obviously, as you point out, Carl, other issues that do need attention, and we'll see if there's some sort of funding that the Trump administration can come up with for farmers, and what, if any, role Congress is going to have in that.
Yeah, Hassett seemed to suggest yesterday, not much. He talked to Punchbowl saying we don't need Congress to work on that. That's to be determined later. Emily, thanks. Talk soon. Emily Wilkins. Let's turn to the broader market today. Once again, trading around record highs despite the shutdown. Joining us this morning is Dan Niles, founder, portfolio manager at Niles Investment Management. What a morning to have you, Dan. Good to see you.
Good to see you too, Carl.
Sounds like you think this one shutdown,
NVIDIA.
than the one in 18.
Yeah, but it really doesn't matter, Carl. You go back and you look at the one in 18, and during the entire tenure of that shutdown, as I wrote about, the S&P was up 10%. So I think everybody knows this is going to get ultimately resolved. I don't think there's anybody who thinks the government's too small. And so I think people are going to go and focus on more important things to some degree, and I hate to put it like that, but they're going to focus on Q3 earnings that are about to start to get reported soon. They're going to focus on what's going on with the AI trade, and then they're going to focus on the most important.
Okay, so let's go take a look at the S&P equal weight index, see what breadth looks like. S&P equal weight continue to trend higher. So removing the weight of these stocks, the markets are generally bullish. Okay, Apple with a little bounce. Broadcom just bounced. Okay, NVIDIA looks like it wants to continue. NVIDIA looks like, look at the volume.
Think about it this way, right? We have a history of this. In the late 1990s, every internet company was going to win. Now, think about where we are today. How many won in search? You got one. You got Google. How many won in social media? You really only have one. You got Meta. How many's won in e-commerce? You got one. That's Amazon. And you have a bunch of smaller players, obviously. Now, if you look at the AI space, people think everybody's going to be worth $1 trillion. And that's ultimately going to coalesce down to a few players. But in the near term, when you've got rate cuts, when you've got animal spirits, people want to believe. And if you go back to the late 90s, NASDAQ was up 86% in 1999. To start the next year in 2000, the S&P declined 5%. But the NASDAQ was up another 24% in the first, 2 months and change of 2000. So right now, people want to believe. There's no problem with these circular investments that you see happening, not everybody putting up great numbers in AI. But until people start to deal with that, the market, much like in late 99 to 2000, I think keeps going higher, fueled by rate cuts.
So, Dan, do you think the rate cuts, the ones we're likely...
Okay, so the markets are just sitting here. I'm waiting for a direction, whether we're going to move lower or higher.
...necessary to keep the economy from buckling a little bit here? And what are the implications of that if we don't, quote, need them?
I don't think you need them. But our job isn't to try to figure out what should be happening. It's to figure out what you think will happen. So the analogy I would draw is I remember being on your program back in 2021. Saying,
okay, we're still hearing some selling here.
They didn't raise, and the S&P finished the year up 27%. Now,
okay, we're pushing lower.
It was a different story when they finally figured out maybe the worst inflation in 40 years isn't transitory, and they started to raise in the most aggressive manner possible. So right now, it's hard to argue you need these extra rate cuts when you've got GDP growing at 3%. You've got inflation that's been...
Okay, so right now, hedging flow is dropping off. All right, so this early little bounce didn't amount to much. We're still dropping off.
And so they're looking at the jobs picture, which is obviously you've got negative numbers coming through. Now, also, you don't have immigration, and you have people, aging out of the workforce. So you can say, well, how many jobs do we actually need? But if you really have a dual mandate, how do you justify cutting when inflation's nowhere near your target and you're saying it's transitory again, and you really screwed up not that long ago? But that's reality in terms of what might be going on underneath the surface. But what I'm trying to say is in the near term, I don't think any of that matters like in 2021, unfortunately.
Yeah, so your point is that all that aside, S&P is a superior instrument. You're happy to just own that. And if you have a little bit more risk tolerance...
Okay, Alibaba. I had to hold on to Alibaba for ages. Finally got a profit. I'm taking Alibaba off. Okay, Alibaba. I've been in this for Got to be 3 months. Alibaba.
Google accelerate from 28%.
Has to be at least.
And then Microsoft, fueled by OpenAI, went from 30.
Yeah, I was in over here.
People forget is Amazon's got Anthropic.
And I was in the,
Anthropic
what was it, the
at a
150
year-one
call?
revenue growth rate of like $1 billion to start the year.
I was
It
in
got up
the
to, $5 billion by August, and it should be up to $9 billion by year end.
200 call. All right, so finally got a profit on this one. Okay, S&P dropping off. S&P dropping off.
For companies. So that thing is flat year to date, and it's not going to take much to get that going. High-end, mid-end consumer is strong, which is where their customers are. And they've got these ad deals like with Netflix.
Coinbase. I want to keep an eye on what's working today. The Bitcoin related names, nice pop on these. Bitcoin fading a little bit right now.
And people don't care about circular investments, which I don't think they will for a little bit.
Well, yeah, it's already gotten going. It's at 190 now, Nvidia. But Dan, just quickly.
All right, so Coinbase looks good. It's above the 50-day, 921, crossing up to the 50-day. Coinbase.
Heck no. You don't fight the market. I mean, that's like trying to fight this thing in 2021. I think in the short term, you're going to get signals that this thing is over. And so for me, I lived through the late 90s.
What's Palantir? Palantir made a new high for this week. This morning, faded a little bit there. Starting to bounce now. Palantir starting to bounce. Palantir. Palantir. Okay, above that weekly high right there last week. 190 is the next level. Cup and handle looks like it's going to break. The depth of the cup is your measured move, about 50 points on top of this. So around 230, 240, something like that. In the next, couple of months. Okay, M chip just popped, fading a little bit. Let's see what Riot, we need to get above 20. If we get above 20, Riot could see a squeeze. Right now, we're still hanging out below 20. Top 10 stocks on the NASDAQ 100, MicroStrategy. Nice reversal. Hit the 50-day and got rejected. I'd probably take some profits there. Look for it to regroup a little bit higher low. Marvell breaking out. Chips are looking pretty good. Chips are looking really good. M chip, microchip. Okay, squeezing. This one could go. Microchip for a swing. RSI is rising. Okay, semiconductors. If you don't want to buy individual names, you can try semis or SOXL. Okay, these are looking good. AMD, need that above the 50-day. Finally, AMD finally above the 50-day. Okay, that's a big plus. Okay, I'm going to probably buy some AMD. AMD, finally above the 50-day.
Providing the company memory chips as part of OpenAI's Stargate initiative here in the U.S.
Okay, AMD, we got a little bit of a dip here. I'm going to watch this AMD. I would really like to get into some AMD, watching what's NVIDIA doing. NVIDIA is trying to pop. Okay.
And FICO rolling out this new mortgage licensing program, sending that stock surging, and some credit bureaus like Equifax.
Okay, we just filled the gap. Are we going to reverse here now? Okay, we're going to reverse. Or we're going to continue lower. Hard to say. The moving average is flat. We made a high, made a low. Now we're looking for a direction. We're probably just going to chop around inside of this, I would imagine. Maybe a doji. Let's look at up-down volume. Up-down volume is 1-to-1 for the most part. SPY is 1-to-1 down. Qs are 1-to-1 up. The Dow Jones are 1.85 up. IWM is 1-to-1 down. New York Stock Exchange is 1-to-1 down. Composite is 2-to-1 up. Okay, so this is all mixed. Let's see what the New York Stock Exchange looks like. When in doubt, always check the New York Stock Exchange. It's trending, but wouldn't be surprising to see a little drift lower today, or maybe some give back to what we saw yesterday. People chasing, maybe missed out on yesterday's gains, hoping for the same sort of move, a follow through. We're pushing the highs, So Dow Industrials trending. Okay, let's see what's actually working today. Okay, so FICO, big gap up, not chasing that. Coinbase, you're probably already in Coinbase. If you were listening to any of the broadcasts last week, I'd started buying some CONL. CONL. I bought some calls, the 40-50 vertical. Okay, I bought the 40-50 vertical, so we're already in the money here on the long side. Let's see, CONL. That's up nicely. 40-50. Those are November 21st options. Okay, so it looks like it's Bitcoin's turn. Okay.
0.3%, Dow Jones down 0.2%, S&P 500 flat. The Philadelphia Semiconductor Index hitting a record high, last up 1.7%. Poland is to sign an agreement on connecting to NATO.
Okay, so we pushed off the 21-day Coinbase, pushed off the 21 days, so it is a bit extended now. I don't know that I would buy it right this minute. Okay. Coinbase. Okay, fear and greed index is starting to get close into the green. Sorry, the greed zone. Greed. I think it is the. I think it's the cable I need to replace. Every time I tap the cable, it makes that scratchy noise. Any of you guys out there, audio engineers? I know, Captain, you have a pretty decent knowledge of audio. Maybe there's a way to clean the contacts or something. I don't know. Blow it out with air, I'm thinking. Compressed air. Okay, we're starting to bounce now. Let's look at trace. Okay, we're still looking pretty iffy right now. Looking for trace to turn up. Okay, so nothing yet. Trace. Okay, so back to what we were just looking at. Stocks that are moving. Albemarle, IBKR. This is on the watch list. IBKR from the watch list. Follow through. Yeah, AMD looking good. I like it. AMD. Okay, let me go to Dow Jones. Nike. Okay, they're selling the pop today. Caterpillar. Very choppy price action on the S&P right now. Not giving us a clear direction. Feels heavy. Feels heavy. Individual stocks are doing okay. United Health is still in a range for the past 3 weeks, going on 4 weeks. United Health, I sold an Iron Condor on that one. Let me see what that goes for. Maybe I can take this off here for a profit. United Health. Okay, we're dropping off a bit more now. S&P is dropping off a bit more. S&P. Okay, so we're giving back some of yesterday's gains. Let's see how far we go back. We're looking for hedging flows to turn up. Nothing yet. I found that waiting for hedging flows this time of day give you a better confirmation on the trend. The trend is down for now, so I'm watching hedging flows. If it starts to turn around this time of day, I'll start to look at something long. But for now, puts are working.
Pakistan shipped 180k tons of oil to Germany in September. So a reminder, at 10:30 a.m. Eastern time, we're expected to hear from Fed Logan speaking at the University of Texas conference. No indication whether there's text or Q&A. And then also the bottom of the hour, we get the EI natural gas change BCF. Forecast is for a build of 66 BCF compared to prior, which was a build of 75 BCF.
All right, just looking for this trend. If it's going to continue lower. IBKR looking good. Let me go look at IBKR. Oh, let's see. All right, so Broadcom move right back up into the range. Probably the best area for me to take some profits right here. Let's see what I can close this for. Broadcom. Oh. Okay, that's okay. Okay, I'll just leave Broadcom alone for right now. Okay, so it looks like they're just going to chop us up right now. Okay, they're chopping. For the most part, this is like a little descending pattern. Okay, this is descending for now, obviously. But also thinking range for now. Okay, just this little bit of price action here. Not really anything to jump on at the moment. We did pull back to yesterday's close. So we filled the gap. Give it a few more minutes. Give it a few more minutes.
Well, that's a really good question. I think in the short term, yes, and long term, no. Investors should just ignore that and take great companies or great ETFs or index funds and just leave it alone and do as little as possible. I think that it's counterintuitive that I think investors, the less they do, the better. Just get your allocation right, get it in place, and just forget about it and go live your life.
All right, good advice there, George C. Thank you so much. Appreciate it.
Thanks for having me.
For all your market action straight ahead, stay tuned. You're watching Market Catalysts.
Time is going to get an EIA natural gas change forecast for build of 64 BCF, prime is a build of 75 BCF.
CAFE requirements. This is very good news for manufacturers and OEMs like Ford and GM that make big SUVs.
Palantir bouncing. Palantir looks like it might go some more. All right, so stocks are looking a little better here.
Good news in the short to medium term, but clearly they need to continue to focus on EVs because that's the long-term play here.
Let's see what Trace looks like.
Let you go about Rivian. I understand you think
Okay.
the growth is sort of yet to come here for this car maker. Why is that?
Yeah, this is really interesting, Courtney. When you think about consumers that are willing to consider EVs, they really won't consider EVs over $50,000. So in Rivian's case, their current product lineup is much higher than that. A number of their trim levels on those vehicles were not eligible for the federal incentive due to the cap on the MSRP price. But, if you think about Tesla, 90% of their sales come from the Model 3 and the Model Y, which are, literally below $50,000.
Yeah, Angel, 3040 deltas, those are a bit out of the money, either side of price action. So it's basically like a strangle. So once we get established a direction, I take the other side off, or I don't do it at all. So once it starts moving in a direction of one leg or the other, those will quickly become like a 40 or 50 delta if the market moves quickly. Okay, Bitcoin still Bitcoin.
When we come back this morning, Berkshire making its biggest purchase in years, acquiring Occidental's chemical business.
Bitcoin still in focus, looking good.
And some exclusive comments from Oxy's CEO in a moment. Plus, how a shutdown of the government could change the Fed's rate math with Paul McCulley, former chief economist for PIMCO, who's arguing the data delay could be a good thing. And then watch shares of Fair Isaac, FICO score provider, surging
NVIDIA.
as credit bureaus plunge. We're going to explain why later this hour. A big show still ahead. Don't go away.
Okay, looks like we might turn here. SPX hedge flows turning bullish. Okay, hedge flows are turning bullish now. You can see them starting to turn up, and the time is 10 o'clock. Okay. We've got a 99 percentile down at 66.85. $66.85 is a 99 percentile down here. Okay. So that is what it is. Anything up here, 99 percentile. Let me go zoom out here. No, so it's that one strike down there. You can see the hedging flows went down below that level. That line went down below this 99 percentile right here. Okay. 66.80. That hedge line went all the way down here. That algo. Hedging flows went down there below it. Now we're starting to turn up, looking more bullish now. Just need to see the New York Fangs turn up as well.
1 minute ago, that's with the EIA natural gas change data. Also, surely expected to hear from Ben Logan again. Notification from text or Q is expected.
All right, hope everyone's having a good day. It's just kind of a slow morning, a little drift lower into yesterday's price action. We tapped the top of yesterday's highs. We'll see if we're going to reverse here, if they're going to suck people in and drop it back down to 66.85 or not. So cautious for now. Bitcoin looks like the focus while everybody else is watching the S&P 500 or individual stocks like MicroStrategy, MChip, Trade Desk, AMD, all those stocks looking good. Let me take a look at AMD. All right, we're still in a range here. AMD pulling back from the high. Okay, I like that it's above the 50-day, but that's not enough to take a long on AMD just yet. Looks like an early ABCD pattern, maybe. Here's A over here at 9:35 at the open. Fade right back down. Higher low, or are we going to roll over here? We don't know. We're waiting for that direction.
This morning to break down the company's rationale for selling.
Our shareholders are very happy with our portfolio and happy with our performance. The problem has been getting our debt down faster. So this resolves the one outstanding issue that I think will now unlock our stock and allow shareholders to feel more comfortable, hopefully to add to their positions and others to come in.
Shares of Oxy down more than 20% over the last 3 years, but there were some years in recent times, Mike, where it was a burner. It was burning it up.
Absolutely, yeah. When it had, obviously oil prices moving in the right direction, it was considered to be a kind of a good operator and a good play on all that stuff. Plus, you have the Berkshire Hathaway kind of perceived backing and then explicit backing. Berkshire Hathaway essentially improving Oxy's balance sheet by giving this almost $10 billion worth of cash in exchange for this business, which does kind of go along the lines of some other Berkshire businesses. Berkshire owns Lubrizol, it's another chemical company, and of Berkshire Hathaway to just continue to be a play on the real economy, the global real economy. It's just very nuts and bolts stuff, and it hasn't necessarily helped Berkshire a few times that it seems in
all right, so 66.85 is that
why would that be? You see back in the
99 percentile. Do we go down and test that?
Berkshire actually held up. Berkshire's like the next biggest stock after the Mag 7, essentially $1 trillion.
Hard to read at the moment.
It's got hyper quality
Markets are hard to read at the moment. You can see how we're just kind of sitting here.
It ends up being defense when the offensive stuff's backing up. And now, of course, NASDAQ 100 is going to the moon. Berkshire Hathaway got very expensive. Basically, it's record high price to book levels at the time of the Berkshire Hathaway annual meeting. At the moment, that Warren Buffett said.
Good sell order block, sell order block. You see that?
So I think all that working
Okay,
together
since the open,
Berkshire valuation
sell order block, sell order
This is the
block.
biggest deal in 3 years. Not a big deal in the grand scheme. They still have $340 billion in cash. This is a $10 billion transaction. And of course, they haven't done anything of this size in a while. It just probably shows they're not seeing a lot of fat pitches out there.
Really interesting stuff there. And of course, you talked about the energy sector sort of potentially just generally lagging.
Yeah, that's
the price of oil holding back.
NVIDIA.
Nothing
What's
you can do
NVIDIA
about
doing?
that, but you can kind of get
NVIDIA trying to push a bit higher. NVIDIA.
now for CNBC News Update. Silvana Hanau has that for us.
Okay, the leaders again today. MicroStrategy. MicroStrategy at the top of the range. Maybe take a little profit there. Starbucks. Eliminating something like, I want to say 2,000 corporate, 1% of stores. M chip. Okay, S&P sounds like we're going to move lower. M chip fading from the high. So anybody who chased is probably regretting chasing at the moment. I would just give it a few more minutes. Broadcom. Okay, all these stocks. Broadcom looks like it wants to keep going. Daily, you can see the Bollinger Bands clearly are contracting. S&P making a new low here. S&P testing the low.
That is the fourth largest annual drop on record. And they say the shrinkage means the ice mass in Switzerland has declined by 1/4 over the last decade as a result of climate change. Switzerland is home to the most glaciers in Europe, Courtney. I didn't know that. The most glaciers in Europe. Thank you very much, Silvana. Well, after the break, former PIMCO chief economist Paul McCulley with his take on why the government shutdown-induced data delay could actually be a good thing. Plus, Apple reportedly shelving its plans for the company's Vision Pro headset. We'll tell you where Apple is setting its sights right now. That's coming up.
Okay, the New York Fangs are mixed at the moment. Okay, watching Broadcom, AMD. The chip's doing okay. Maybe you trade SOXL or SMH. These are pulling back, SMH. You can't chase these. These are way up here. XLK had a good week. XLK so far this week. We gapped up. Okay, Broadcom bouncing. Okay, look how choppy this price action is. Okay, you look at stocks like Broadcom. Okay, that's starting to break out. So maybe we got something there. Okay, we had this little range here. Now we're breaking out. Broadcom looking good. I already have an iron condor on this one. It's in the middle of the range. Okay, this is my position. Broadcom. So I'm looking for it to stay below these highs. What's Micron doing? Micron, okay, at the upper Bollinger Band, looking like it might roll inward. Okay, Coinbase, this is the best. Bitcoin is in favor today, in focus, CONL. A leveraged ETF. Okay, so it's broken out. All right, so look at Coinbase. Okay, look at these stocks. We're broken this high, okay? So over here, there's very little volume. Look at the histogram on the left. There's very little volume to impede price action into the gap, which is right there. All right, so we can see a move into the gap. More than likely, that's what we're going to see. Okay, so price action can move in this direction fairly freely. There's not a whole lot over here on the left. Margin, volume. The daily volume looks good too. RSI is rising. So this looks really good. MACD rising, stochastics rising. Everything about Coinbase right now looks good. And you got Bitcoin moving higher. So I would focus on Bitcoin today. Okay, Bitcoin. Nice move on Bitcoin. We talked about this yesterday. Most likely would see a test of the upper Bollinger Band. If the Bollinger Band's opened up top and bottom, what would we be looking for? We'd be looking for a fast move. Okay, now we're moving the other direction, S&P. Looks like we're going to move in the other direction, S&P 500. Okay, so still in this range. Understand what we're doing right now. We're range bound. We're range bound for the time being.
Great to get your take on this. I mean,
We're just range bound.
Ahead of us, most likely. There has actually been some balanced, maybe even hawkish Fed speak since the last Fed decision.
This line overhead is the London session pivot low. We took some stops out down here, so we're looking for, do we continue to step down? All right, so we got two. See what we got going here? An area consolidation chops people up, and then we drop down again. Consolidation chops people up. Do we drop back down, or do we start to move upward? Right? We don't know yet. So right now we're in a range condition.
The accumulated data for the last 3 to 4 months bellows loudly, I think, that the Fed needs to be moving from restrictive to neutral and doing so with dispatch. So the irony is that without data, the Fed is
okay, looking a little bit more bullish now.
A lot of noise about what it's going to do, and I think we're going to see 25 basis point cuts at the next 3 to 4 meetings, which will take us to a 3.5 zone for the policy rate, which I think is neutral and is also very consistent with where the yield curve is with the 2-year.
Okay, we're starting to reverse back up now.
And the 10-year around 4. The only thing that's wrong with the yield curve is it's not validated by the policy rate, and I think this clears the path for the Fed to do that in a measured, steady way. Right. So if the Fed is on this, normalization path, getting down toward neutral, because its risk management assessment has now tilted.
Yeah, we just got rejected again at the range high.
The labor market. What does that do for the internal dynamics of the Fed, where the debate seems to stand right now? Because as I mentioned, you have
Coinbase looking really strong. I'm going to add to my Coinbase, I think. Coinbase, I'm going to add.
Yeah, and I think that's very normal that the FOMC.
Okay, I have the 40-50.
To what the dot plot is saying. They stress that all the time, and I totally understand that it's not a promise, that it's not a commitment. So that's normal. They would be saying that. But I think there's also genuine disagreement within the committee about the path, not so much the next few cuts, but where the terminal rate is. So I tend to interpret the hawkish sort of talk is people saying, I really don't want the terminal rate to be below 3.5%, 3% in that sort of zone.
Okay, Bitcoin looks good. Very strong. Supply, we don't see supply on. Okay, we don't see supply on Bitcoin. Let's go to Bitcoin. BTC, USD. Bitcoin. Okay, the 1-minute chart. Okay, let me go to the 15 so it's not so scary looking. 15-minute chart. Okay, look at the daily. You can see where supply is. So I'm looking at Coinbase for the next few days. Should start to higher highs, higher lows. on the shorter time frames. The daily looks like we're just going to keep pressing higher along that upper Bollinger Band. You can see the lower Bollinger Band is opening up. TTM is going from yellow. We'll go to cyan shortly. So that's telling you the momentum is bullish. We want to be adding on dips intraday, like this little dip here. Coin, COIN. Okay, so we got a little flag. Here's an A pivot. Here's your A pivot up here. Okay, looking for a B pivot now, down here somewhere. Okay, you got this fair value gap. You got a fair value gap right here. Okay, so we're looking for price to come into fair value gap and then take off to the upside. Okay, we're looking for it to bounce and go this way. Okay. Left to be seen. Okay, this is a fair value gap right there. Bitcoin pulling back. Sucking some longs in still. Look like we're going to do something else here. S&P 500. S&P 500. Okay, still in these ranges. Okay, we've got some selling volume coming in now. Still in a range. Okay, I hope you can see why I'm not doing much of anything right now. All we're doing is we're range bound. Okay, we are in a downtrend from the open. Looks like we're going to drop off it a little bit more. Okay, so that this level down here, 66.85, 66.85 is a 99 percentile.
What are your expectations for what will happen when tariffs are in full effect, what that will do to inflation, and then put it together for what that means for the lower income cohort?
Yeah, I buy into the proposition that the tariff hit will be a staggered one-off, if that's not a oxymoron. It's not going to lead to a persistent inflation
Oxymoron.
but actually during the process as it starts trickling from the wholesale level down to the retail
I think this
level,
guy's from Connecticut, I believe, if I'm not mistaken.
on the bottom half of the income distribution.
All right, so I'm your host, Cousin Vinny, coming to you from theclosingprint.com. You can clearly see that we're kind of stepping down, range bound. Look at the hedging flows are moving back up, though. Hedging flows. Okay, but we are stepping down. Okay, we are stepping down. These little, okay, we're going to break down through this again. Looks like we're going to break down.
So during the process, I think it actually will tend to exacerbate what we're talking about.
Okay, so we made a new all-time high this morning. We're fading that, and we're continuing to drop off. Okay, so the trend is bearish.
And just leave us with this reality that we're living in a cage-shaped economy, and there's not a whole lot the Fed can do about it. Yeah, it does seem that's the case. We'll be tracking the staggered one-off effects as we get the real data coming back. Paul, it's not an oxymoron. Thank you very much. Thank you.
Okay, we got a lot of stocks fading. Let's go take a look at the New York thing.
We'll talk about what it means for consumers after the break. OpenAI just launching a new AI video generation app you might have heard of, but the launch is facing some backlash. We'll find out why later on. Stay with us.
Trend Tracker is sponsored by CME Group.
You hear the selling bearish flow here. Okay, pretty decent drop now. Keep it in context. Keep it in context. We made new all-time highs, so you should be anticipating that we're going to give some back. 2 steps forward, 1 step back. The trend is very bullish. 921.50 up and to the right. Clear bullish trend. No ambiguity here. We have a lower high. Okay, so we might be getting a little divergence there. Okay, let me go to a chart that I already have instead of marking up another chart. Let's go to the S&P. Okay, I haven't marked this one up in a while. Haven't touched this chart in a while. We made a new high this morning. So we're up 40% from the April 7th low. That's crazy. If you get too focused on the, what's happening today, and you lose sight of the bigger trend, I don't think anybody in the trading room is doing that. But if you are, you got to keep in mind that the market's not going to go straight up, right? 50-day, pull back to the 50-day, still about 3.25%, 3 3/4, almost 4%. 9 EMAs up there, 21 days there. Okay, this is getting a little cluttered. Let me move this over. Okay, 9 EMA is there, 21 day is there, 50-day. Okay, chop, chop, chop. Okay, so you can see very clearly the divergence. We made a new high. Okay, so we made a new high, and RSI made a new lower high. Okay, so that's a divergence right now we have to pay attention to. Still very bullish.
At 2 p.m. Eastern Time.
And over the last 12 months, joining us now, very pleased to say, is Ben Chikanos, who is the Aerospace Director, S&P Global Ratings. Thank you so much for your time, Ben. So how are you looking at this company? I mean, it just feels like time and time again, we do say, we hope that
All right, we're 40% off the April 7th low.
like it right now.
They've had a few good months in terms of deliveries.
If 80% of your portfolio is long only, in my 401k IRAs, I'm 80% long, 20% cash. Still waiting for the first, 3 to 5% pullback for the year. July was a decent little pullback there. But since then, we've just been trending. So my 401k IRA long positions are doing just fine. Have made no changes. Okay, so if we look at TRBCX, I often talk about TRBCX. Okay, TRBCX, we got long back here in 2022. Okay, I need to adjust this as well. This is one of the larger positions I have in my portfolio, my IRA, long-term portfolio, 145% since entry, 145%. We're still in phase 2 markup, as you can tell. The trend is still up.
So that will be, I think, a factor on at least the near-term performance.
You need to have at least one of these in your IRA. You can also do, there's another one, RGAFX, the American Funds Growth Fund of America. Just look for Growth Fund if you have a 401k IRA at your work or a business, some other type of vehicle. Look for RGAFX or TRBCX, T. Rowe Price and American Growth Funds. Look for Growth Fund. You'll probably find it. If you got Vanguard, I'm not sure what the Vanguard equivalent is. I think Lenders Run mentioned Vanguard, right? I think you did at one point. You can also do, let's see, VGT, which is the Vanguard Information Technology ETF. If you think technology is going to outperform over the next 10 years, then I would definitely be buying this. Okay, VGT, VGT. Also, cybersecurity is going to become even more important, more ubiquitous. CIBR, this is another one to look for, something similar, cybersecurity in your 401k. Okay. So this continues to look really good. You can do SPHD too if you're able to look at this, look for something like this, a high dividend, low volatility fund in your 401k. I like a SPHD because it gives a dividend every month. I have the dividends rolled over into more shares every month, so reinvested. I've been in this since late 2014, and since then this thing has just been doing fine. 2014. Okay, you can see this just keeps going. Late 2014, I got into this at 23 and change, 22 and change. It's more than 100%. It all adds up. This might be only 100% in the ETF itself, but the reinvestments make it a lot higher than that. The reinvestments in shares all along the way. Every month, the last week of every month, you get awarded a dividend. That's SPHD. If you're not familiar with it, what's in SPHD? If you're not familiar with what's in SPHD, this is the components. Okay, you got a good bit of energy stocks, electric energy. This is going to be a big growth area, electric energy. Okay. You got a lot of staples, Kimberly-Clark, Coca-Cola, Campbell Soup, ConAgra. You've got pharmaceuticals, which have been doing really well thanks to the negotiations with POTUS. Okay, pharmaceuticals are well represented. You got the rails. You've got KMI, Kinder Morgan. You got some tech in here as well. All of these pay a really nice dividend, have been paying dividends for more than 20 years. It's low volatility, but high yield. Okay, so that's SPHD. Okay. Dividend ETFs. Okay, we're continuing to move lower here. Okay, S&P continues this path lower. Is going to be profitability on this one. $15 wide bullish call vertical. You're only paying $5.50 for it. So the risk reward setup is pretty good. And in a low volatility environment like this makes the risk lower. But you definitely need to move to the upside. Okay, so I'm not doing a whole lot, as you might notice. I haven't done much today, and it's mainly because of the divergence that we're seeing in the market. Okay, we've got a lower high and a higher high. Got a lower high on RSI, a higher high on price action. That's a bearish divergence. So I'm at least looking for maybe a test of 50% of yesterday's range, maybe even a test of the 9 EMA, but we're clearly in a 9, 21, 50-day bullish trend. Okay, Bitcoin, that did pull back a little bit, Bitcoin. Bitcoin, okay, holding at the upper Bollinger Band. This could pull back in a little bit before moving higher. Okay, consumer staples. Let's look at stocks like what is moving on the markets today. Let's see. Okay, here's Nike, 3M, Industrials, 3M, NVIDIA, Doji, Caterpillar, Shooting Star, Sherwin-Williams Paints. Okay, this looks like a nice little base down here. Maybe it turns back up. Looking for stocks like this that have made a pivot low to start moving higher as portfolio managers attempt to beat the markets over the next couple of months for their bonuses. Fortinet, Lulu. What was the other one? Datadog? No, it wasn't Datadog. Let me see if it's on the list here. LRCX on semiconductor, Ross stores. Okay, we'll continue to show weakness. Okay, the markets continue to drop off here. Okay, let's see. I took off NVDX shares, NVIDIA calls, MicroStrategy calls. Still holding on to Coinbase calls. Snowflake. Snowflake is fine. Okay, the New York Fangs. Okay, all of those have pulled back from the high. Apple's trying to push a bit higher. Apple. NVIDIA fading a bit. Core Scientific. I have January calls for Core Scientific. CORZ. CORZ. That's off right now. Let's see. NVIDIA. Snowflake. Broadcom. Everything is pulling back a bit with the index. Google. Netflix is at the low. Microsoft pulling back. Tesla giving back the morning gains. Maybe a trade there. We got higher low on Amazon. Higher low on Amazon. Let me just enable blocks. Okay, here we go. Buy order block here early this morning at 10 o'clock. Higher low. So the object here would be to make it to this level right here. The area of supply resistance overhead. If you're trading Amazon, looking for a push to this level. Okay, S&P 500 continues this path lower. S&P continues the path lower. Path of least resistance right now is lower. Call walls right there, 5,700. Did that adjust? I don't think that adjusted, did it? Okay. Call walls 67.99. All right, so they moved it up to that 67.50 is a call wall on the S&P. The futures 67.99. 67.50. 7,000 is the JP Morgan collar, or JP Morgan collar short strike. S&P still pulling back.
US is to sell $22 billion in reopened 30-year bonds on October 9th, settle on October 15th. And the US is to sell $39 billion in reopened 10-year notes October 8th, settle on October 15th.
S&P still pulling back.
The US is to also sell $75 billion in 6-month bills on October 6th to settle on October 9th.
Okay, we got to get any kind of bounce here. Okay, hedging flows continue to make lower highs and lower lows. Okay. So we got that 99 percentile down at 66.85. Still there. Okay, we're going to keep going. Looks like we're going to keep moving a bit lower. 66.85 is the 99 percentile level. We'll probably test that. 1 day estimated move is 66.90 anyway. 66.85, that 99 percentile is just below that level.
IMF spokesperson Kozak says global inflation is a mixed picture, with headline inflation higher in the UK, India, Australia, and core inflation higher in the US. Fed appropriately lowered rates, but gives upside risk to inflation. Fed must closely watch incoming data. IMF's Kozak says monitoring partial US government shutdown impact will depend on duration and scope. IMF hopes for compromise to restore full government funding. Many companies in the US have been absorbing impact of tariffs, limiting impact on inflation, and unclear how long that can last.
USO. USO. It's at the lower part of the range. What are you thinking, Joel? Lower part of a range? Okay, still drifting lower towards that 1 day estimated move. 66.85, 66.85 is a 99 percentile level. And I keep trying to, a little short covering here. A little short covering for now. Okay, just a kind of a quiet fade to lower back into yesterday's range. I'm not really that concerned about this right now. The one caveat, of course, is the junk bonds gap down, but high yield is staying. Okay, junk bonds looking a little bit more bearish. Okay, it looks like the 50-day is right below, so I would expect to see an inflection at the 50-day. If no inflection, then perhaps we'll get our 4%. The 4% would be the S&P 500.
Nasdaq down 0.05%.
4% S&P 500 if it gets down to the 50-day.
Projects that really is just a lot of pork in the overall budget. So I think short term, there's going to be a little bit of pain, but long term, it's really going to benefit the country.
So with that said, some of the concerns that we've heard as we've been, in the lead up and now 48 hours in is concern about how this could potentially affect GDP overall with some of these potential mass firings and also if it will affect consumer spending. Do you have any concerns there?
Okay, do we get a nice little bounce here?
Absolutely. But, with the jobs numbers that were supposed to come out tomorrow, there's going to be a delay on that.
Okay, hedge flows are turning up now. Hedge flows.
These numbers from the Bureau of Labor and Statistics, excuse me, that aren't going to be coming out because of the shutdown. So the impact that that's going to have on interest rates at the next Fed meeting, those are the impacts kind of near term that's going to affect the long term that we're really looking at. As far as consumer spending,
Okay, nice reversal underway.
I believe that it's really not going to have that big of an impact because it's really not going to affect most consumers going forward.
Short
And you
covering.
mentioned the Fed and then the absence of data in this data blackout because we're not getting that jobs report. We didn't get any of the unemployment claims number today. How does the absence of that data, if we don't get it ahead of the October meeting and all we have to work off of is the ADP data that we got yesterday, how does that potentially impact the Fed and its rate cutting decisions going forward?
Honestly, you could probably just put a hold on
You got shorts covering right now.
Because as we know, Jerome Powell has made it very clear that they're hanging their hat on the jobs reports. As unreliable as they've been over the last couple of years, and just even most recently. However, having said that, I think they're not going to make a decision until they actually have some data. So if we do have that,
Shorts are starting to cover down here.
they're probably
Just shy of 66.85. We're right at the key gamma strike.
That we've gotten, in the wake of our last rate cut, we've heard from quite a few of Fed officials, and some with a very differing commentary. What are some of your takeaways, and who did you think had the most impactful thoughts or may potentially be the most influential in the room?
Well, when you look at Goolsby's interview just a couple days ago, he was actually talking about he was in the camp of lowering rates at least 1%, if not more. And then you had Murin talking about the economic strain and why we need to lower rates, and he was at the full other end of the spectrum saying.
All right, you see that key gamma strike was just tagged there. Got the hedge wall right below.
Rates going forward because the economic impact that it's going to have, not just on the national debt and servicing that debt. As expensive as that is, but on small businesses all the way across the country. That is the lifeblood of America. And so the debt service on small companies, if we can lower that debt service, it gives them the ability to expand and hire.
Okay, just a little bit of short covering for now.
And so with some of this uncertainty, we've seen this massive rise in gold. Every day I'm talking about another new all-time high. I'm looking now at the chart under pressure a bit today, but still hovering near an all-time high that we certainly could reach by the end of the day with what we've seen from its performance of late. What are your thoughts on gold? Are you bullish here? Can this rally continue as long as we still have this uncertainty?
Absolutely. We see gold going.
All right, so we took out the London session pivot low right prior to the open. And we continued to move lower. Not surprising, the S&P 500 made a new all-time high and faded. How many times have we seen that happen before? Okay, we made a new all-time high, then faded. Now shorts are covering. Okay. Okay, so S&P looks pretty good if buyers continue to show up here. Okay, looks like buyers are showing up.
We see silver being north of 200 an ounce over the next couple of years.
Yeah, we've certainly seen a meteoric rise for both of the metals, over the quarter at least. But you have some stock picks as well that I want to dive into. The first one, API Group. Walk us through this choice.
Yeah, I really like API Group. APG is a great stock. It is fundamentally strong. They have a strong balance sheet, a lot of cash on hand. And even in the downturn during COVID, they performed very, very well. We see that going north by another at least 20% over the next 12 months, especially as the economy continues to grow and turn around. Lows for the exact same reason. We see lows going above 280, north of 285 over the next 12 months as well. Because as the economy continues to grow and spur on, there's going to be a lot.
Okay, so many stocks, if you're looking for setups, okay, with the markets in an iffy position with a bearish divergence, if you're still looking for maybe what we're seeing is some rotation, could be some sector rotation. Let's go take a look at that. Okay, let's take a look.
Consumers to tighten their wallets, and the first thing that goes, we've often seen
The sectors. Okay, so let's go to daily first. Okay, and let's see what this rotation looks like. All right, so you see tech is still in the leading top right quadrant. Utilities are picking up. You can see utilities in the top here. Utilities. That's because fixed income investors are anticipating that the Fed will continue to drop rates, which means they'll be chasing XLU utilities. You got over in the left quadrant, top quadrant, XLI, XLV, XLP starting to gain some strength. Financials pulling back a little bit. Real estate and energy, which was strong, has pulled back. You can see that quick reversal on energy. Consumer discretionary is moving from weak to lagging. All right, so we see some rotations, basically, what I'm saying right now. Okay, so just more downside. Okay, we're still in a range, I guess, right here.
Low tick alert -800.
Low tick, that could be some capitulation lows here. We are making higher lows and higher highs on tick cumulative. So right now we're just taking a break, it looks like. That song bugs me. I don't know why. Maybe because I hear it so many times, over and over and over on repeat. All right. I hope everyone's having a decent morning. We're giving back some of yesterday's gains. We're moving 50% back into yesterday's high. Okay. So S&P. Let's take a look at the 60-minute chart S&P. Okay. So sometimes we get a little extended. Okay. But what would you say? What would you say about this chart? What would you say about the 60-minute 20 EMA? Would you say it's trending up and to the right, while every so often we get a little dip? Would you say the dotted red line is trending up and to the right? If you said yes, that you see that moving up and to the right, then you want to be long above the 20 EMA. Now, it doesn't mean buy up here at the high. You want to wait, see if this test holds like it did here. Yesterday, we bounced right off the 20 EMA. We got the confirmation, which is what you're looking for. So have a 60-minute chart of the S&P 500 if you're trading it. You should be looking for a bounce, a confirmation bounce where buyers step up bigly and push this higher. You want to see the confirmation bounce, okay? So earlier, late last week, we pulled back below the 20 EMA, but we hit the 20 EMA on the daily and we bounced. 90 RSI is rising, so it's showing the strength of the trend is pretty persistent, even though we have a divergence on the daily. I would always check the 60-minute chart, check the weekly. What is it all saying? Weekly, trending. Yes, we're a bit extended, so I wouldn't be surprised to see this pull back to the 10 EMA. We had a pullback of sorts last week, a consolidation week. We didn't, make massive moves higher. We didn't close at the highs. But for the 9th week now, we're up 9 weeks in a row. Okay, we've had a couple of weeks where we had inside weeks where we didn't make much progress, but we did make a higher high and a higher low. Look at last week. See, last week we made a higher low and we made a higher high. We closed inside the range, but we still made a higher high. Same here. Do we pull back in? Stay above last week's low, 6,600. Okay, if we lose 6680, then I would think that we could see some pretty quick moves to the downside. But for now, S&P is just consolidating, it looks like.
The one we're showing now is of CEO Sam Altman shoplifting GPUs. Others feature cartoon characters from Pokemon and Nickelodeon in disturbing roles. Now, critics are questioning whether OpenAI is repeating an old pattern, racing ahead of the guardrails. The company insists it has robust safety systems in place, like strict content moderation.
People are so worried about AI. My son's worried about it for good reason. He's going to be growing up with it. I'll be retired, 10 years, 15 years from now. Retired in the sense that, I'll probably get tired of doing this broadcast all the time. I don't see that happening in the next 10 years, if you're concerned. But, this is fine. The market's AI is fine. We can agree to disagree. I think AI is going to be fine, just like the internet. When I was growing up, watching the Jetsons, all I remember my parents talking about, "Wow, computers going to take all of our jobs and everything." There's an extreme need for blue collar type positions like steel workers, plumbers, electricians, HVAC people, people that get their hands dirty. There's nothing wrong with those professions. That's actually a very reputable um, part of the economy to be in. People go in. Kids go to college and they go into finance or they whatever. You know, you need to develop a skill set throughout life, not just whatever you're focused on, in my opinion, but also have the ability to fix things. Like I was always taught, take it apart, figure it out. Replace the parts that's not working. Plumbing, electrical. A lot of people will just, oh, let me just hire somebody to do it. I don't know. What's Vinny talking about? I get sidetracked sometimes when the markets are, doing something other than what we're looking for. Right now, it's fading. We want markets to just keep going up nonstop. I'm being sarcastic, but just watching how the markets are trading. AI's, yeah, it's going to eliminate some positions. Remember when computers became very popular back in the 80s? The first processor was the 8086 processor. Remember that slow thing? It was like a brick, 8086 processor. And then we started getting into, 16 and 32-bit processors for those of you who are technical. I'm sure I'm going to screw some of it up because I'm not super technical in that respect. But remember that coding, learning how to write code for the Windows operating system. I forget what they call the modules, but they're pieces, that make the whole operating system. And learning how to do that, when I was going through college, learning Fortran and punch card. Remember punch cards? Anybody remember punch cards out there? Old enough to remember punch cards? Learning how to program. If you dropped your cards all over the floor, then you had a problem. But learning to code basic and assembly language and C and C++, you know, that that opened up a lot of professions. So computers didn't take jobs away; it actually created more jobs. So same thing with AI. AI, we'll figure it all out. But the media's got everybody going crazy about the bad side of it. The good side, I don't know. Just my opinion. You can take it or leave it. But what I will be doing is trading stocks that are capitalizing and making money, which is what we look for. We're looking for companies that are actually making money from this AI venture, right? So software as a service companies, SaaS for short, software as a service companies like Palantir, who have this ontology that sits on top of everything. If you think about security, this ontology compares things in such a way that I'm sure I'm going to screw this up, but in such a way that it knows if you're not the person that's logging in, security wise, or from the military or the government standpoint, using Palantir's software suites for their needs. I can see how they are already making money. They had a great quarter. We talked about that yesterday, right? They had a great quarter, Palantir, the last quarter. So I'm looking for this to continue to break higher, right? Palantir, they crushed earnings last time around, and they're probably going to continue to crush earnings. Their Rule of 40 score just keeps going, 94%, more than double the Rule of 40, combining the company's operating margin and revenue growth. You know, revenue growth accelerated 48% year over year, 1,000 basis points. A lot of people are missing the big picture when it comes to Palantir. So I'm into Palantir. You know, I can't tell you what to do, but this was trading what 170, 178 at the time. Palantir. Okay, we're at 186 now. That was May. We did make a little dip recently in late August into September. So now we're moving much higher, but Palantir looks good. Microsoft, I'm sure they're going to do fine. Microsoft. Okay, it looks like we got more shorts covering, so I'll get back on subject here. S&P, if you're thinking about maybe take some 50 delta calls. Now, I would think 50 delta calls will work if we break above this pivot high right here and start moving. Okay, then our next resistance level would be this range over here. Okay, but if we break out right here above this box, if we break out, then look for this next level. Look for a reversal now. Okay, we'll look for it also on trace. Okay, we're starting to see now. I've noticed this recently that if you get into a position too early, that most likely waiting until about 11 o'clock, 10:30, 11 o'clock, you get your better entry. So the early entry sometimes will work out, but you can see the fade this morning just kept dropping. And, you know, we had to wait a little bit longer for a bullish setup. Looks like a bullish setup is starting to materialize right now. So I'd be looking at something like 67.20s, 67.30s, something like that. This is still a 99 percentile right there.
On the trajectory of scores overall, but absent the director's criticism, would this ever have happened? I mean, was this in a drawer somewhere that this was eventually where we would end up one day going direct?
It was always a possibility. It was absolutely always a possibility, but I would say that the director was a catalyst.
Really interesting stuff, and of course, this is the discussion about sort of lowering the cost. Obviously, a big boon for you, a miss for some of the middlemen, as they've been described, for the Equifax, the TransUnion, Experience of the world. For consumers, though, what are the savings here?
Well, I think in the end, all these costs wind up trickling down to consumers. So if we can contain the costs through the system, the consumers ultimately benefit. I mean, FICO scores will cost less in many cases, or they'll be flat versus last year. And so that's going to benefit consumers for sure.
Is it material to earnings for FICO itself?
We're in a quiet period, so I can't speak to, next year's numbers, guidance, forecast, but I would tell you that this is good for FICO, yes.
Right. As for overall scores, you mentioned coming down a touch over prior years. We talk a lot about lower cohorts in the consumer, signs of weakness, subprime auto delinquencies. Can you sort of characterize where you think we are in overall sort of credit conditions?
I think consumers are extended, and we're not seeing big problems yet. But the economic cycle is a thing, and we do wind up working our way through it. I don't know if the reckoning comes sooner or later. I can't really predict the timing, but I would say that the pressure is building.
I mean, the general take among the economic optimists, is that household balance sheets certainly.
All right, so right now what we're just doing, we're just sitting here waiting for the markets to give us direction. If we're going to bounce more, you'll see this hedge flow start to rip upward. Okay, waiting for that to happen.
Things that could potentially crack, if it's wage growth, job creation, their spending habits, which would you worry about breaking first?
Well, I can't really say. We're a lagging indicator, and so what we see those things happen, and then what happens to the FICO scores are it follow that as opposed to predict it. So I can't really say exactly what that is.
I understand you're in a quiet period, but generally, as you see rates come down and potentially open up the door for more individuals to take out loans, whether it's a mortgage or otherwise, do you see your activity pick up? And at what point do you think that may happen to you as we watch the Fed very closely with their decision about rates?
Well, so there's no question that FICO benefits when there's more mortgage.
Okay, looking more and more like a long setup here. Looking more and more like a long setup.
There's definitely higher volume today than there was a year ago. So we're on the swing back up. It'll be a while before we reach anything like prior peaks, but we do anticipate continued volume growth.
How do you think the credit bureaus are going to respond?
Well, this is another option for customers. We're not any customers that choose to continue
Okay,
with
so
bureaus are welcome to do so. We work closely with them.
See how far we can push this.
We have all kinds of.
Okay, looks like we're going to make a round trip now. Maybe we'll make a round trip. We're at 6704 right now. Okay, we're looking for a break above this level. Note the histogram. Okay, note the histogram. Okay, we'll be coming out of a squeeze here shortly. Volume is picking up. Note the volume picking up on the reversal.
Well, I can't say. I guess one thing is, we are all today standardized on FICO Classic mortgage scores, and the new direction is to update the scores and move to a new generation of scores. Vantage, our primary competitor in scores, has
Okay, Bitcoin bouncing.
We have FICO 10T, which is our latest and greatest score, which we believe, we know, and we've done the work, outperforms Vantage. And so our next step is to get those scores.
Okay, so we're not out of the woods yet. They could still slam this down. Okay, so I mean, you have to think about the daily too, right? The daily, we've been on a significant uptrend. Okay, so an RSI, I keep looking at RSI. We're making new highs. It feels like a blow off top in a lot of ways. Brent talked about that this morning. Okay, Brent talked about this morning. These stocks in the bottom right corner. Okay, getting very expensive. Call skews are up and to the right, which means that they're extremely expensive. Okay. Intel's expensive. So people are chasing these. So what happens when people chase buying calls as a stock is ripping higher? They almost always wind up regretting it, right? I would be selling premium up here. Okay. Let me just take a look at that.
Responsible AI, and applying blockchain to AI so that we have an audit trail so that we can actually.
Okay, so this is real time right now. So you can see Intel. Intel is really expensive, 98.39% risk reversal. Looking for that to pull back in a little bit. All right, so we're still in this range. S&P is still in this range. Okay, so wait until it gives you a signal, folks. All right, this is just chopping people up. Okay, this over here and this over here, just chopping people up. Unless you took a short from up here at the open, trying to take a position right now. We don't know exactly what's going to happen. Are we going to break out above this level, or are we going to break down? We don't know. Hopefully, it will reverse and move higher. That way, we can take some of our longs off into Friday. By the way, tomorrow I got to leave at 3:30. Gonna go see my daughter at her college. Coinbase. Let's see what Coinbase is doing really well. CONL. Nice little pop here. I really want to take some more. I want to take more call verticals on this one. It's a bit extended, so I'm looking for a little dip and then a rip again. The daily on the right, Coinbase. Bitcoin's looking good. Bitcoin turning back up. Okay, Bitcoin got a little pop there on Bitcoin, making higher highs and higher lows. I'd be focused on at least something in this space like IBIT or MicroStrategy. I took my MicroStrategy off only because I have calls that expire tomorrow. We hit the 50-day. BITO, BITX. Look at these positions for more upside. Coinbase. Of course, Coinbase. Okay, Core Scientific. Okay, Riot. Looking for Riot to push above 20. Okay, Riot still got some people up here keeping prices below 20. The dealers want to keep prices below 20. Any move above 20 will cause a squeeze, as dealers have to buy shares in order to hedge their short positions at 20. So 20 is a critical level we need to get above if you're trading Riot. You can wait until we get above it. Okay, I'm going to close some Riot for now. I'm going to close some Riot. I have a profit. Okay, S&P still chopping around in this range. You can see how we're just staying in the range. We're not making any progress right now. Could very well just drop off here. Okay, we could do this too. We could drop more. I do see we got a squeeze going on. You can see that the TTM is turning cyan, so we know that we got Bollinger Band squeezing. Okay. Let's see what they got going on. Schwab.
Chart looks almost identical to United Health. The prospects of the business looks similar. You know, they both went
Tony
through the
Zhang.
same,
He's pretty good options trader.
points, if you will, over the last couple of years. You know, this is
Okay, Palantir turning up. Palantir.
Year. But recently it bottomed around that $300
BKKT and RR. Okay, we'll check it out there. Edmund. BKKT. Ooh, that looks good. Nice. Okay, RR. RR. BKKT. That looks good, Edmund. RR, thank you for the share. Rich Tech Robotics. Oh, yeah, that was one we looked at a few weeks back, right? This was started the trend higher. It just consolidated. This is probably going to go. Okay, it only moves about 50 cents a day. Rich Tech is up 30 cents, so just keep in mind you're only looking at 20 cents more. Robotics. This should benefit, Edmund, because the Trump administration, I don't know if they've done it yet, but they want to put tariffs on any robotics that are coming into the country. China has gone gangbusters over creating robots.
I was looking them up ahead of our conversation and saw that they're in the bottom 20 in terms of PE ratios of anything traded on the NYSE. So very interesting.
Coinbase.
I want to ask a question about their earnings before we move on to your last pick. For Q3, they're coming up October 21st.
Okay, Coinbase. Bitcoin looking good. Coinbase.
In terms of, how you play this one or
okay, so you got your A pivot, Coinbase, you got your A pivot, you got B. We want to stay right near VWAP, maybe a little bit lower and then higher. Coinbase. Okay, S&P 500 doesn't look like it's going to hold this area. It's still a range, Respect the range until we get a breakdown or a breakout. Okay. Just range bound right now, sideways. TTM histogram is a little tell there, still squeezing. What are the New York Fangs looking like? Nvidia still hanging in there.
Doesn't take away from the fact that 2025 is a year that clearly is an issue for them from a financial perspective. But
okay, Apple popping.
The significant decline in revenues, they've continued.
Apple going. Watch Apple.
To shareholders, we're looking at about $2 billion.
Thank you, Corey. Thanks.
Shareholders in the form of dividend and share buybacks.
Tesla pulling back to the first.
Shows that management is at least
put wall.
Confident in their outlook for 2026, and that is not going to deteriorate further. Is the way that I'm reading that.
All right, so let's move to your last one. You're bearish.
Apple going here. Watch Apple. Market's going to have a hard time moving much lower if we can get Microsoft to turn back up. Apple's turning up. Apple. Okay, Apple's taking off to the upside, making new highs, right? Apple. Apple is breaking out.
Towards the second half of this year, but so far that hasn't really materialized. In terms of the digital business of online gambling, they're seeing some early signs of growth there, and the growth from a percentage perspective looks strong, but if it's coming off of a really low base. So, this is a company that earns nearly $1 billion a year.
Apple looking good.
Growth of digital, we're only talking about 30-40 million.
S&P making a new low here. S&P. Or S&P making a new. I hate when this happens. S&P making a new low. Okay, we're breaking down. There's your answer.
This chart, it clearly shows that investors are, they're not. There are no signs that this is recovering. The recent rally here into that $27 level a couple of days ago clearly got sold off very heavily as soon as it kind of rallied, and I think that's a sign that there's.
Okay, we're taking out more stops.
All right, well, Tony, we appreciate you being with us today to break down a few of your.
Okay, you can see the histogram just turned back down. Histogram. All right, volume's picking up. Volume picking up again. Okay, here's volume picking up. Looking more bearish all of a sudden. What's hedge flow doing? What's the hedge flow doing? Still turned back down. Hedge flow turned back down. All right, 66.85 is still that 99 percentile. It looks like we're headed there. Sorry about that. Got something stuck in my throat. Okay. XME is turning. Okay. Metals, XME, XME. Okay. You talk about gold and silver. Okay. Okay, so gold pulling back in. Brent mentioned this too. It was probably be a good short up here. Okay, looking at silver turning back in. Okay. Silver is down almost 3%. Okay, so what I'm going to do here. All right. So this range is a little bit larger now, looks like. $66.85 is that level where we have 100%, 99 percentile. So we're looking for that to get tested. We just kind of grinding lower, range bound at the moment. Range bound at the moment. Okay, do we break to the upside now? Very choppy day. Unlike yesterday, we had a nice rally after about 11 o'clock. We just kept going. Amazon showing relative strength. Okay, Apple definitely. Apple showing relative strength. Apple. Okay, let's see what that does. It just feels like a trap. Looks like a bull trap to me. Oracle this morning was higher. It's pulled back in a bit. We're still well below the London session pivot low, swing low. All right. Microsoft still looking pretty bearish at the moment. Microsoft above the 50-day. Last couple of days above the 50-day, back below the 50-day. So this is a key area. You can see why I focus so much on the 50-day. Until we get this decisively above the 50-day and start trending, it looks just like we're chopping around. We're still in the upper half of the Bollinger Band, so that's good. 20 days trying to turn up. Maybe it turns out to be a decent entry down here, Microsoft, and it closes back above. That might be a nice setup. Let me see what Microsoft looks like. Down here. Looks like it's going to turn, right? Let me turn on blocks. Okay, we got a lot of fair value gaps on the way down, so they sold Microsoft. Just going to turn back up. I'd like to see a move above this level here, Microsoft. Okay, so move above that level, maybe along with a stop underneath. Okay, stop here. Okay, look like the lows, a stop underneath the lows right now. Let's see if we get anything going on Microsoft. Microsoft back up to the high. From this level, back up to the high would be about what, a 4-to-1 risk reward. Stop underneath the low of the day. Watch Microsoft. Apple's still going. Apple looking pretty strong. Apple. 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 The 50 deltas are $1.70 for tomorrow. Okay, so if we get any kind of follow through on Microsoft, or excuse me, Apple, looking for a follow through. Apple. Apple trying to go here. Let's see, maybe take some of these. Let's see if we can take some of these. Take Apple for the long side. See if Apple keeps going. Okay, Microsoft's starting to turn. I like this setup on Microsoft. Okay, Microsoft, maybe tomorrow's calls just a little bit higher. Microsoft, if they reverse this up, move this a bit higher. Okay, what is this? Why is this showing up? Oh, all products. Okay, good. Microsoft looks like it's going to run here. Consider a short-term trade on Microsoft if this pops back above the 50-day. It's been above the 50-day all week. Microsoft. Okay, the 40 deltas at $2.40 on Microsoft. Apple, watching Apple. Looking for Microsoft to do something here. Okay, S&P 500 still in a range, still inside this range, no direction. Keep faking people out in each direction. Hedging flows, they're kind of just staying right here. So we really need to see a big change in trend if you're thinking about going long or short. Short has already been working, so a reversal here wouldn't be surprising. $66.85, looking for that level to get tested.
To accelerate, make our programs bigger.
Okay, we're looking for a reversal. We still don't have a good signal. Need to see this line start to jump higher. Okay, we need to see that hedging flow line jump higher. That 99 percentile is still there. Okay, we got plenty of time going into lunch. Maybe we see a reversal. Not the best time to take new trades between 12 o'clock and 1 o'clock.
And then what is, I'm sure you've lined this out already, but sort of your CapEx expectations.
Many of you already ascribe to that idea, staying away from new trades around 12 o'clock to 1 o'clock. We're looking for B and C pivots. I'd like to see some of these reversals kick in. Okay, Coinbase. Okay, Bitcoin continues to move higher. Bitcoin, Coinbase, moving higher. Coinbase. Okay, there's your B pivot. We were looking for a B pivot earlier. Here's your A pivot up there at the high. If you're a new member, you don't know what I'm talking about. We're always looking for this pattern, ABCD pattern. Okay, that's what we have right now. A up there at the highs.
Specifically, some of the products we make for them here. So we entered a partnership where we can allow others to build for our customers.
Okay, you got C right there. Hold on one second.
After, I mean, from dominance to a real.
All right, we're getting the breakout we're looking for, S&P 500. Here we go. Okay, S&P. Okay, watching. This needs to start to jump higher. Okay, I'd like to see this jump. Okay, let's see what S&P looks like. 2. Rolling window, 4 hour, 5 minute. Okay, we're seeing the hedging flows turning up. The white line is price action. Hedging flow is just, you can see, is still very choppy. It keeps hitting the highs and getting rejected up here, hitting the lows and turning back up. So we need to see this breakout to the upside if you're long. If you're thinking long, if you're thinking short, look for this to turn back down now. Okay, so we know where we are. relative. Okay. Microsoft, Apple. Microsoft turned the. Did I buy that Microsoft? Did I buy it? Microsoft. Did that limit? Did I get my limit? Yes. Okay. Good. 517.50. 517.50s. I bought some 517.50s for Friday. Microsoft, that's up.
Welcome back to Money Movers. Occidental Petroleum, one of the worst performers in the S&P today after Warren Buffett's Berkshire Hathaway announced a 9.
Okay, S&P, we need to see this launch to the upside.
Joining us this morning to break it all down is Roth Capital Partners senior research analyst Leo Mariani.
Okay, so you can see these trades are coming off here. All right, see these trades right here? Okay, see where the red is? Watch these trades. I'm going to scroll back. You can see these have been coming off. Okay, as we start the day. Okay, that's GEX 0 day. Okay, this is looking a lot better. Let's see what net open interest looks like right in this area. Okay, you can see the larger strikes, the larger histogram bars here, and it gets kind of vacant until it gets up to 67.50. 67.50 is what we were looking at earlier. All right, that's looking a little better. Apple's taking off.
Which means you're gonna have to put, kind of more capital into it over time, kind of per unit of growth EBITDA.
Right, and so does that explain the price action? And in a moment where we got WTI at 60 and an OPEC meeting that looks like we're going to get even more production.
Yeah, look, I think the stock's been kind of all over the map this week. E&Ps have had some pretty wonky trading here, week to date. Initially,
Amazon's on the move. Watch Amazon.
Monday, on basically the news was originally reported by the Financial Times. They're going to sell the business unit here. And I think, look, the terms probably came in a little.
Okay, we're still rallying now. Okay, so looks like the Seek and Destroy algos took the 66.85. It dropped below that. Price didn't get there, but the algo did. Algo did.
Look, to your point on oil, it certainly doesn't seem like we're in a great place. Oil prices have been trending south all year.
Okay, this is a higher volatility area over on the right. You can see that the red zone, that's a higher volatility area. Okay, this area right in here, price can rip pretty quickly.
But despite the direction of the stock today here, I understand you're raising your price target by 2% to $46. That's above where we are right now. Why is that?
Yeah, look, I think it's primarily because of the leverage reduction. So prior to doing this, their leverage was around 1.4 times net debt to EBITDA at kind of current oil prices. And that's coming down almost a half a turn to around 0.8-ish times net debt to EBITDA. So I think that does reduce the risk of the business ultimately. So, we did bump up our target, in a small amount as a result of that.
For investors who really are in this space for the capital return, do you think that feeling gets a little more comfortable?
Okay, Apple pushing here.
Well, no, I think certainly for Oxy, the answer is yes, right? I mean, given that they've kind of hit their debt target, the message for the last couple of years has been when they do that, they're going to actually be able to accelerate
Lemonade. Yeah, I like Lemonade, Tony.
I think there's certainly
Riot's trying to go. Riot's pushing.
There's also a chance they may, raise the dividend again as we get into next year. Now, a lot of that capital returns will be.
Riot's pushing the highs. Did I sell Riot? I don't think I did, right? Riot. Yes, I did. Okay, Riot. Want to get back into some Riot. Or should I just leave it alone? Riot. Riot. Looks like it wants to go. Riot. Okay, I'll add a few more shares of Riot. S&P, still chopping around in this zone. S&P is still chopping around. Okay, you can see the hedging flows. We need to see this rip up into this red zone over here on the right. Volatility picks up when it gets above this level. Okay, so if we can see S&P push a bit higher, that would be good. Microsoft, nice reversal. Microsoft. Okay, another stock that I was looking at was it Trade Desk? Trade Desk. Okay, remember I was talking about stocks that are moving off the lows. The 50-day is overhead, but stocks that are moving off the lows, good quality companies. These are positions that we need to see evidence that institutions agree. They're looking to buy. Now remember, they have to outperform in this fourth quarter. They have to outperform in order to get better bonuses, outperform the S&P 500. So if these start to reverse, you'll start to see institutions jump in. You can see this volume by price band over here on the left. Okay, so we need to get back above the highs here, 55. That could rip high if it does happen. United Health, still range bound. United Health, I have a iron condor on this one. Looking for direction from United Health. Okay, I'm looking for direction. This is my position now. You can see Bollinger Bands are coming together. RSI is still staying pretty strong. I got 5 of these, 285 per contract. Let's see. Do I want to close the call side? I'll just leave it alone. Put sides working. Okay, so S&P sounds like we want to go some more. Microsoft is going. Microsoft, S&P. Okay, we're looking for this direction. Okay, it's after 12 o'clock, so halftime reports on Apple still going. Apple, we got news that Apple, got Morgan Stanley raises Apple's price target 298 to 240 from 240. Thank you for that, Angel. We're seeing it in price action. Apple still going. Apple going. Apple looking good. S&P pulling back down now.
And I think when I speak to the trend being your friend, what I'm specifically speaking to is that any dip in the markets is highly likely to be bought. Now, of course, the markets can go down and probably will sometime this month. But consider that something like 25% of
okay, we got some nice little upside potential up to about 67.50. If we can catch a break here.
It's not just AI. So again, Frank, giving you more on this, and not to take anything away from Shannon and Jason, what you may want to say, but if you look at the strong recent rally in pharmaceuticals and healthcare, little give back today. I got it, but still.
Lulu. Okay, Lulu doing a little better. Lulu. Okay, Lulu back to the 180 level. Okay, Lulu's just grinding off the low. This is another one that I would be looking for institutions to do something with. Starbucks had earnings. Not earnings. Starbucks notifying the markets that they're going to be cutting jobs at corporate and reducing store count by 1%. Snowflake turning up. Snowflake coming out of the Bollinger Bands, out of a squeeze. Broadcom back into the squeeze. Oracle still inside the squeeze.
What I think that it's important here is that there's more than just the AI trade as it relates to utilities. So we talk a lot at at Newberger about the potential for a global industrial impulse to help drive growth in 2026. And so you think about the power demand that exists not just in the AI trade, obviously more pronounced
Fortinet
in terms of talking about
above the 50-day, looking for this to head towards the 200-day overhead. Fortinet, FTNT, Fortinet.
of infrastructure improvement that is necessary. You look at the necessity of improving infrastructure not here just in the United States, but also abroad. And you look at things.
Okay, Fortinet reports again November the 5th. Fortinet. Okay, they got double-digit earnings growth and revenue growth. Fortinet looks good. Fortinet looks good.
For instance, the performance just isn't there in terms of wanting to potentially diversify away some of the beta that you're getting in the U.S. large cap names, particularly technology. And so for me, when I look at this, there are certain sectors that are no doubt, potentially kind of the second derivative of
Apple.
the AI trade. This broadening out, though,
Apple looks like it wants to break out of this 8-day base at highs. Okay, so look at Apple, right? So what do we do with Apple? Apple, first thing I see with Apple is it pushes higher and then bases. Pushes higher and then bases. Pushes higher and then bases. What do you think is going to happen next? I'm thinking higher. Volume looks good. That's institutions. MACD is up. Stochastics looks good. That's telling you to look for closes in the upper half of the daily range. So what does that mean? It means that with stochastics rising, we can expect to see prices dip and get bought, okay, and close in the upper half of the daily range. When stochastics is rising, this is what you look for. Stochastics is embedded above 80. Look for closes in the upper half of the daily range. Look at the volume. That's institutions. Okay, so the dip this morning got bought, Apple. Okay. Microsoft. Dip getting bought. I bought some Microsoft here. Okay. Microsoft. Stochastics at 80. MACD grinding higher. Volume shows institutions the past 4 days have been buying. It's above the 50-day, so I'm expecting more buying in this area above 510 and the 50-day. RSI still fluctuating around 50. Need to see a close higher on Microsoft. That's what I'm betting on at the moment.
I mean, it's 35 days in 2018, but the market, the S&P was up 10% during that time. And then we've had 14 shutdowns since 1981. It's been historically a non-event, right? GDP.
Yeah, I would agree.
Close to 3.8%, as Shannon described.
Yeah, money's coming out of precious metals. We'll probably see it. I think that's a good point, Joel. Money's coming out of silver and gold, probably going into Bitcoin.
You asked me what would I be doing here? I think Jimmy makes a great point on the chase. The chase is real. Obviously portfolio managers, a lot of lag there where we're not performing as they had expected for the year. So, we have to submit those report cards at 12/31, right? So I think that's a real story. I think as it relates to the earnings story, clearly it's been a lot of concentrated growth in the AI.
All right, so Lulu looking good. It's probably going to be 180, 185 by tomorrow, next week. Lulu's looking good. I had some shares I bought after earnings. I took those off yesterday. Averaged about this level, so it's basically flat. I didn't want to sell it at a loss. I have calls too. I have January 175 calls on Lulu, 175, 185. This looks pretty good. Lulu looking for a higher high. Okay, New York Fangs are mixed, but generally are trying to make higher lows and higher highs.
So a little bit of trimming, but you still want to stay with what's working. I want to bounce something off you, Jim. I'm going to get your take on this first. Tom Lee out with a note earlier today.
He says, among other things, history shows probabilities favor the S&P at 7,000 by the end of the year. He goes on to say there's a strong seasonal tailwind underway, and the upside is higher given the Fed is dovish. And I want to ask you guys about that. Are we sure the Fed is dovish without the information from the jobs report, potentially from CPI, potentially from PPI? But I'm going to continue. We urge looking through the messiness of the shutdown and even the lack of data. Stocks are weak. He says he would buy the dip. Don't go defensive. Tom Lee saying do not go defensive. Agree or disagree? And is every dip viable? I mean, at a certain point, doesn't that strategy?
Excuse me.
Of course it has to work at some point in time. And again, I don't want to be carefree in saying that right now look, and I read Tom's notes. They're always worth reading. And one of the things he pointed out, and this is to your question, Frank, is that with the Fed kind of now flying blind and all of us flying blind.
Bitcoin having a good day. I'm thinking about adding to Coinbase, COIN, via CONL, Coinbase, COIN, CONL.
We may have the shutdown over by then, but still, if you look at the probabilities, I believe they're close to 100% that we get a cut in this month. And I think, again, this shutdown really corroborates that. With the overall target of 7,000, sure, why not?
Okay, there goes Riot.
Again, I don't mean to sound carefree. You know, I'm kind of an analytical person. We all know
There goes Riot. Okay, they're trying to break it through 20.
People chasing performance, it's not to be trivialized. It's happened in many years like this where you've had a strong year, whatever we're up 14% year to date on the S&P 500, and especially with that whoosh down that we had post Liberation Day. Let's face it, some people, some managers raised cash, and now they're struggling to catch up. That was just simply, it turns out, the wrong move. I'm not judging them; it just was the wrong move. So any dip here is going to be viable, and as I think we're all saying, it inures to more than just.
Okay, there goes Coinbase. Coinbase looking good. Okay, let's take a look at Bitcoin. Bitcoin. Very nice Bitcoin move. Looks like money's coming out of precious metals and going into Bitcoin. I would agree with you there, Joel. Astute observation. Okay, this looks good. Pressing the upper Bollinger Band. Note Bollinger Band's opening up top and bottom on Bitcoin. Volatility picking up. You got TTM turning. Volume looks good. Apple's still good here. Apple.
One of the things that you really need to look at, though, is that there's a lot of discussion about the quality of the small cap universe. There's a
Bitcoin, Riot looking for a push through 20.
low earnings or no earnings growth, frankly. And so that has been a pushback, Frank, in terms of people allocating to small cap for this year.
Okay, looking for a push through 20.
Is that we're actually seeing some of those lower quality stocks perform in this rally. So if you look at quality small cap companies who have earnings, who are growing those earnings, those have really lagged this more recent trade. So I would offset some of the enthusiasm in terms of let's take this trade off the table with the fact that we're only actually in the first phase of small cap performance.
Okay, that hedge wall right there.
Really what's going to be driven by those improving borrowing costs, and what we do think is going to be
That hedge wall is most likely going to get taken out at 20.
So we would caution not to move too early on this, given that you've only seen one part, or really that first phase of the small cap trade outperform in this period. Being able to see those quality companies in the small cap universe.
Actually, I'm going to just keep it here.
Performance, I think, is where you're going to see that kind of move into 2026 and where you're going to want to be positioned.
All right, but you got to trim somewhere, I would think, right? You got to either take some profit.
Okay, let's look at the Nvidia's. Nvidia's just range bound.
I don't disagree with Jason. I mean, could you see some tech profit taking over the course
Snowflake,
of the next,
Broadcom,
absolutely you could, especially
Google pushing the highs, Netflix at the lows, hammer, Netflix hammer.
financial sector for those investors who might be underexposed to financials. I could see just
Daily.
trimming off some of your tech to fund that. The other thing, though, I do want to talk about what Jim said. There were a lot of people that took money off of the table. And
Netflix daily hammer. Okay, Microsoft flagging at the moment. Looking for more upside on Microsoft. Stay above the 50 days, all I'm looking for. I'd like to see it close near the highs of the session.
So I do think there's still some cash on the sidelines that can be repositioned in the fourth quarter.
Very quickly, though, haven't seen it yet. I know generally the fourth quarter is the strongest quarter of the year, but there's just so many possibilities. We also have
Coinbase. I'd really like to do something with Coinbase. Bitcoin still pushing here. Bitcoin. Okay, Bitcoin's still going. Okay, Coinbase. Coin's still going here.
I know you're saying 100% priced in for this October meeting, but we might not have the economic.
I didn't say that. Jim said that, but I would agree with that. I would agree with that. I want to attribute them to Frank Paul. I am not at all Pollyanna. In this policy environment, Frank, we would all be remiss to sit up here and say that there's not going to be something that comes out that could potentially unseat this rally. However, if you go back to the fundamentals of what drive the equity market, that's earnings. And right now, from our seat, we think that those earnings estimates are conservative. And so, that asymmetric opportunity sort of exists when you just boil it down to what does earnings season look like for the
Shannon's making the point, but I want to accent it. We are talking about the future, and believe it or not, we are actually humble, and we admit we don't know with 100%
Coin.
certainty what the future will hold.
Okay, ABCD pattern on coin playing out.
Professional expertise, and we make the predictions because that's what we're asked for. But by no means is anything about the future a slam dunk.
That's a fair assessment. It's almost a Dead Poet Society thing right there. I like that.
Compare me to Robin Williams, I'll take it.
Jason, I'm going to come over to you. You mentioned some of the unloved sectors. One area I've been talking to CEOs in is the materials sector. Double digits earnings growth expected for Q3. It's kind of that secondary play that Shannon was talking about when it comes to AI. If you're going to build a $500 billion data center, you need rocks, you need water, you need concrete.
Yep.
Are you seeing opportunities in the materials sector?
So I'm not there yet, and I think one of the things for me is there's been severe inflation in the kind of building materials. I mean, to build now it's up 30% year over year from what it was last year. So I think there will be opportunities. I think energy is another space. I think obviously, as I mentioned earlier, healthcare. I mean, we saw the deal. Well, I know we'll talk about that a little bit later. The Trump deal with Pfizer and what that will be, for the healthcare sector in general. But I just think. Like to echo my points earlier, I just think that these other sectors that have been unloved, I think breath will be better in 2026. I'm also thinking about the big, beautiful bill that will be stimulative to the economy. And I think there will be other sectors that will participate that have not as of yet.
Oh, we had a side eye from Jim. Jim and I have been talking about this. No, not a bad one.
It's a good sign.
CRH, your shareholder CRH, and that's one of the CEOs I talked to at their investor day this week. Stocks up about 5% this week. One of the things they really
All right, looking good.
9%. On top of that, they're saying, hey, we're an AI play. We get low to single digits of every AI build out. So go ahead, Jim. This is your
okay. Sorry, you made me laugh on the AI thing because these guys are building roads and
Coinbase. Let's see what Apple's doing. Apple flagging at the highs. New targets. Morgan Stanley looking for a break to the upside. It's been consolidating for 8 days.
Sector in general. So if we're building stuff, we're going to need paving material. We're going to need steel. We're going to need copper. And yes, there's that mine closure that's gone on that's pressing up copper prices. But this is a simple trade. We're building things, whether it's data centers, whether it's infrastructure, whether it's manufacturing, reshoring.
Okay, so we're still chopping. We need to see this hedging flow ramp quickly higher. That purple line should jump higher. Okay, if we get into this zone overhead above 67.10, 67.15, if we get above that zone, we move into this area of higher volatility, the red zone. So we can see a fast move there. Above that, we got purple, so that would be resistance overhead. Okay, resistance, fast price movement here in the red zone, fast price movement. Resistance overhead, the purple. Okay, so in here, we could see a lot faster movement. The dealers are short here. The markets are long. Dealers short, markets long. Nice reversal so far.
And the catalyst really driving this is sustained AI spending enthusiasm.
They're still not giving us a nice confirmation. We're still in this range, basically. Still in a range, larger range.
partnership with Samsung and SK Hynix, these are memory makers, to make advanced memory chips and build more data centers. SK Hynix and Samsung both jumping on the news overseas. This really matters for the memory supply chain. Micron supplies advanced memory chips to NVIDIA.
Still in the range.
With expectations that this next generation of high bandwidth memory pricing is going to be significantly higher. So Micron is not, is still part of this
It's
economy.
12:20. Not the best time to be adding new positions right now. Between 12 and 1 o'clock.
Partnership or the nebulous Microsoft deal, it really enforces that hyperscaler capex isn't slowing down, even, this is key, if the promises and headlines lack a lot of details.
Still in a range. Right now, we're in a smaller little range right now. Right there. Let me just do that. Note it that way. Let me just note it this way. Range. Okay.
That's been something a lot of people have been looking at. Are you still bullish on chips, which are a cyclical sector? We're talking about financials, materials. This is also a cyclical part of the market. Do you think this rally continues?
I think it's a good question. Even more so, this is not a slam dunk, but yes, I'm still bullish on chips. And the reason it's not a slam dunk is because we all
S&P, Apple, Apple still at the highs. Okay, Microsoft, Snowflake looking for a follow through. Note the squeeze on the right. Pushing higher. Need to see volume pick up a bit. Okay.
It's been on the move, which I own. It hasn't set a 52-week high, so she didn't mention it, but it's Qualcomm. And Qualcomm, obviously, we know it for the smartphone chips that it produces, but it's been getting more and more into automotive and, dare I say, into data centers. It has been. I see your eyes grew wide. Yes, it has been getting into data centers. My point being is it's not just NVIDIA. And by the way, a valuation on a Qualcomm, something around 14 times. It's not like NVIDIA.
All right, it's not just NVIDIA, but it seems to be chips pretty broadly. One of the things that Christine was looking at was a kind of a shorter time frame for this chip rally. If we look at a longer window, chips are outperforming software over the last 3 months, outperforming cybersecurity. Jason, I know you're a big cybersecurity investor. If we're looking at that second leg, is it maybe time to jump off the chips and move over to the software? I was actually
XSW software he's talking about. Frank's talking about software. Speaking of Frank, I hope Frank's doing well. If you're listening, Dr. Frank, we're thinking about you.
Actually, in the private markets, but in software more broadly.
There's going to be some cyclicality here in this trade, Frank. If you think about, sort of the enabling of AI that really has been driving the chips trade. If you think about what the next leg of that in terms of that, integration of that innovation, software is going to play a big role in that. And so companies are going to be looking to make those investments. I do think we just see some ebbs and flows in this. There might be a period where people think that it's, semis are extended and maybe
Broadcom, watch Broadcom. Broadcom had a pretty decent morning, Broadcom. Okay, Snowflake looks like it wants to go some more. Snowflake. Okay, Broadcom looking good. Okay, so Broadcom. Okay, so it looks like we're going to break above this level. There we go. Broadcom. Daily. Note the Bollinger Band's coming together. I have an iron condor on this one.
Companies that rely on those, a lot of those seats, probably fewer seats, but also seats that are going to
there he is.
With less in terms of the enablement from AI.
All right, Jason Samp, I know you own a number of cybersecurity names. Yeah, looking at the BUG ETF, that's one of the more popular ways to track the cyber sector. Down about 3% over the last 3 months. What's going on? Because the AI revolution, if you will, was supposed to superpower cybersecurity because you would need more of it. Instead, we're seeing investors get away from that trade.
Yeah, so I mean, for me, Palo Alto is obviously the name that we're highly invested in. It's a little bit cheaper than Strike and some of the
Hang in there, buddy.
There has been a little bit of a pullback in that name, but I really like the deal that they just did with Consummate with CyberArk, which I think is kind of in the identity business, which I think it will be accretive for them in the long term. As it relates to kind of the overhang of AI and getting back to a little bit of the semi discussion, I think part of the growth has been
they're shaking people out right now.
This story of an AI bubble was a little bit overdone, right? And I think at least in the tactical in the short run, I think The other thing that kind of comes to mind is, the CapEx story is at least a 2 to 3 year story, right? So I think there's very tangible earnings in the semi space. I think that's clear to me. And then the last thing I would say is just on the SMH. I mean, the SMH.
Okay, here we go. Broadcom,
To Jimmy's point on some of that
S&P,
in April,
S&P. We're looking for this break to the upside.
catch up. And I think if you're looking at that and you're saying, wait a minute, I need to be here because at least from a tactical perspective, the earnings are durable. Let me go ahead and make an allocation.
Frank, integrity demands that I admit I'm getting my face rearranged in Adobe, okay? And that's representative of the non-Palo Alto networks.
Yeah.
That's DocuSign, it's Salesforce. And there's a question here about whether these are cheap stocks that we should be picking or whether there is a secular decline.
Yeah, you missed yesterday. Yesterday was a huge day.
Products, but also the seats from which something like Adobe gets its revenue. And my call on this is I'm sticking with Adobe for now. It has consistently outperformed. I think we can say the same thing about Salesforce.
Riot trying to break through 20. Bitcoin.
I'm doing at Adobe. I'm sticking with it for now, but I have to admit I'm just not having a good time with it, Frank.
It doesn't look like it. We're looking at the year-to-date chart just now. We're going to hit on one of the sectors we've been alluding to. We're going to dig into it. That's healthcare as the sector. It tracks for its best week in more than 3 years. Committee is ready with their playbooks. Halftime's back in just 2 minutes.
Coin, Ibit, Bitto, MicroStrategy, etc. Okay, all the Bitcoin related names, those are doing well. Okay, you can feel the flow, right? You can feel the flow out of something like gold and silver. I think Joel pointed that out very accurately. I think the money's coming out of gold. It's got to go somewhere. Money flow. Silver, gold, out. Yeah, the money has to go somewhere. Bitcoin's catching a bid. For good reason, it made a dip. Bitcoin gave us a dip. Okay, well, we like buying dips, right? So we buy dips in the expectation that the dip is going to continue to get bought. We'll buy when we see buy order blocks push through the 50 days. My bailiwick is the 50-day. Once we get through the 50-day, then I want to start buying and look for people to chase it. Okay, once we get up to supply, we'll start taking little profits there. If it breaks through, then we can add back. Notice what I just said. I like to get long after we push through the 50-day. We got a buy order block down there. Once we hit supply, I like to take profits into that strength. If it doesn't hesitate and it just keeps moving higher, I can always add back onto my position. But with the S&P 500 at highs, I'm expecting that we could see some money flow start to, I don't know, go someplace else. Maybe Bitcoin's the place. Bitcoin looks good, right? Bitcoin looks good. Okay, Bollinger Band's opening up. That's telling you the momentum is clearly becoming more bullish. Look for a fast move. Like over here. Last time, very similar. I pointed this out yesterday. Very similar. When the Bollinger Bands start to open up, look for the fast move. RSI tells you which direction. Right? Does that make sense? Okay. So let me mark this up real quick for you. So when Bollinger Bands start to open, okay, Bollinger Bands start to open over here and here, away from price action, look for price to rip. Very similar look. If you look at the Bollinger Bands, they look very similar. They're starting to open up. Okay. So what should price do? Price should follow that upper Bollinger Band because RSI is pointing the direction, right? So you want to buy dips and sell rips.
Preliminary 2026 Medicaid Advantage star rating data shows 14% of Humana members are now enrolled in 4.5-star rated plans for next year. That's up from only 3% in 2025. The company also
UNH is looking pretty strong. Okay, currently I'm just sitting in iron condors. If this starts to push higher, United Health. If United Health starts to take off to the upside, I'll take these calls off, double up on the put side, and bring my puts up underneath price. Okay. So I want to keep adding. I want to keep adding credit spreads and iron condors. I'm not gonna jump ship just yet on the call side. Probably gets rejected somewhere here, 355, 360. If it doesn't, it starts to motor higher with higher volume, then I'll take this call side off and I'll double up on the put side and lift these up to say 20 or 25 points higher underneath these Bollinger Bands. So I'll take these. So I'll take these calls. I'll take these and I'll lift them up to here underneath that Bollinger Band. I'll take these and I'll lift them up underneath that. Okay. These I'll take off. I'll exit these if we have more strength. Remember, I have June 400 calls. I have the June 400 call for United Health. So I do want this to move higher. I was just waiting for this to do something. Okay. Over here, it based down for what, 3 weeks before popping higher. So we've been about 4 weeks now, right? 4 weeks looking for this to pop higher. United Health.
What you're hearing about from the administration, is you're starting to get a little bit more clarity. And so once you can get more clarity, then you can start to see if the valuation.
Okay, there goes Amazon. Scott, there goes Amazon.
To come in terms of prices. And so I think what's happening is that number one, people are looking for parts of the market that are cheap. Number two, there is a very clear demographic tailwind for healthcare, and so it's where.
Okay, there goes Amazon, Scott. Okay, Scott's been looking for Amazon to break out. Some of you are long with Scott and myself. Looking for it to head to the 50-day. Okay. Okay, we're looking for price action to head towards the 50-day right there. Okay, there's your 50-day. Okay, so that's what we're looking for on the daily. You can see TTM has turned corner. Volume is picking up. Okay, volume and TTM are turning, so this looks good for Amazon. Pushing higher. There goes Amazon. Amazon's scooting higher now. Amazon looking good.
A little bit more clarity on some of these companies and their potential, and perhaps mitigating the downside versus, really amplifying the upside.
We're showing a stock that had a pretty big jump this week. It's AbbVie. Jim, you own that one.
AbbVie's been good all year.
Amazon pushing higher.
First off, you nailed it, Shannon. Unsurprisingly, I can't really add too much to that. But what I
Okay, let's see what S&P wants to do here. S&P, we're going to break out of this range. Okay, what's Merck doing? I did take some profits on Merck yesterday. Okay, we pulled back. This is beautiful. I'm probably going to do something else with Merck. Something shorter term. I told you that I would sell. I had next year, I had leaps. I would take those, take profits, and then get back in. Let's see what else is doing well. AstraZeneca. Okay, that dipped and already bounced. Okay, so these are probably going to go. Merck, they're making deals with the president. Okay, so let me go to 90 call on Merck. Merck, 90 call. Merck, I want to go to 90 call, and I'll go out to November. I sold the leaps. Since short term, this is more active right now, so I'm going to buy some of these November. Okay, 90. I'm going to do 90, buy the 90 vertical. 90, 95, that's $184 per contract. Yeah, I like that. Okay, so Merck, I just bought 90, 95. 90, 95 call verticals. Merck sold the, which ones did I have? Let me just check this out real quick. Monitor, filled orders. Merck, I sold the, Merck, where are you? Merck. Oh, I sold them yesterday. Okay, so I 90.95. June. No, I had the September's, right? September 90 call. I took the profits from the 90 call and I bought the 90.95 for November. Okay. Canon shares jumped 12% as it lands largest U.S. order in 3 years. Okay. CIFR. Wasn't that on the news this morning? SCIFR. Okay, nice reversal here. Okay, so there's still some room here. Cipher Mining. Needham raises Cipher Mining's price target on fluid stack lease. Cipher Mining is maintained by Needham. Okay. All right, so I don't know much about the company, so I'm not going to jump in just yet. It'll be there waiting for me tomorrow or Friday. By the way, I need to leave at 3:30 tomorrow. I'll leave a little bit early tomorrow, 3:30. Need to go pick up my son, and we're going to head straight up into North Carolina to go visit my daughter.
A terrorism incident. According to authorities, the suspect drove a car into pedestrians and started stabbing people while a large number of worshipers were inside for Yom Kippur, the holiest day in the Jewish calendar. Police say the assailant was shot and killed by officers before he was able to get inside. An immigration judge has denied Gilmar Abrego Garcia's bid for asylum. The judge on Wednesday rejected Abrego Garcia's application to reopen his 2019 asylum case, but he has 30 days to appeal to the Board of Immigration Appeals. Gilmar Abrego Garcia was mistakenly deported to El Salvador by the Trump administration in March. And Ukraine's foreign minister says Russia deliberately cut external power at the Zaporizhia nuclear power plant and is preparing to connect it to its own grid.
Mike, kind of a muted day on the markets where a couple days into this government shutdown, it doesn't seem to have a big impact. Remember, the markets finished at record highs yesterday. What do you make of the moves we're seeing?
Apple looking for a higher low.
Obviously, duration matters.
Apple looking for a higher low, higher high.
Prospect of not getting this jobs report tomorrow, having a pretty good fit.
S&P. I don't hear much activity on S&P. We're still in this range. Okay, so if you're betting on a direction, right now we're still range bound. Okay, still in this range. We need to see a pop to the upside or downside, okay? Feels like they're buying the dip. But feels like, and what actually happens is a different story. Now, watching these hedging flows, we're looking for the hedging flows to rip to the upside. Again, if we can make it into this red zone will mean price action will move much faster. Momentum will pick up. Okay, the purple areas above and below. Purple below, purple above. That's support and resistance, respectively. These purple zones down here are support. Okay, you see that positive gamma right there. 66.85, 99 percentile strike. Okay, the support overhead purple is resistance. So we don't see resistance until we get to 67.50. Taking our time. Maybe they run it in the afternoon session when everybody comes back. Comes back from lunch. Amazon looking for more upside. Amazon. Okay, Amazon. Okay, we're going to pull it back in. So I wouldn't be too worried about the markets right now because we're just going to chop around, looks like. Mama said chop around. Okay, S&P. Okay, right now maybe it's a good time to go get something to eat and wait for this range to work out. Okay, wait for that range to work out. Okay, daily. Okay, we're breaking the bottom of this range, looks like. Coming back into this larger range. Okay, overlapping. Coming back into this larger range today. All right, give me 5 minutes. I'm going to go stick something in the oven, and I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's the second trading day of October. Thursday, we have money flowing from fund managers, taking profits, maybe taking some laggards off as well towards the end of the month of September. We didn't have the September pullback that we were looking for. We're going into the fourth quarter. Many are a little skeptical the first couple of weeks of October. We tend to have some theatrics sometimes in October. We got the government shutdown. The markets seem to ignore that. We rallied higher yesterday. So right now, we're looking to set up options so that they're more supportive. Okay, let me go to the S&P. Okay, S&P. All right, let me go to Equity Hub. And you can see right here, okay, was it Monday or whatever? We had this double hump of positive gamma. Right here, 65, 50 more or less. We drop below that, we get very negative, and we could zip lower very quickly down to 6,500. Right now, we're stuck in this area. Stuck in the sense that we have a lot of positive gamma to keep prices from moving lower. We want to see this build up options below. Puts and calls, we want to see that build up over the next couple of weeks. Give us some more support. Okay. So if you look at this chart here and look at what we were talking about, what was it? I think it was Monday. Monday, that was the PM. Monday AM. Okay, Monday AM, we were looking at this. Okay, this is what we were faced with prior to the JP Morgan collar. That's 6505 expiration. You see the double hump? All of this area underneath the positive part of this curve is support and creates a stickiness to price action. So if we go to today's price action, remember what this looks like. Okay, we go to today's, you can see we only have one part of that hump. So the left side of the support curve needs to be filled out over the next couple of weeks. Pretty simple. Okay, I'm going to take a 5-minute break. I'll be right back.
$9.7 million, all cash deal. You're seeing Berkshire pull back a little bit. Oxy pull back a lot, but you're a Berkshire Hathaway shareholder. What do you make of this deal?
I think it's intriguing. I like it, but I have to put it in perspective that versus a $300 billion plus cash pile, this is 3% of that pile of probably what he earns in about 8 months. So it's interesting, but it doesn't move the needle that much.
All right, interesting. Why doesn't it move the needle? Clearly, this is very adjacent to the materials sector, the idea that you need raw materials for a lot of the production that we're seeing.
It's a tuck-in acquisition. I like it. Don't get me wrong. But this isn't, I mean, they've got a huge energy. They have a chemicals business in Lubrizol already. So it's a tuck-in. It just doesn't change the thesis. If they were putting something together that had like many tens of billions of dollars involved, then I'd be like, whoa, what's going on?
Okay, fair enough. Again, Berkshire Hathaway pulling back about 0.75%. Occidental actually down about 7% right now. Want to move on to some other calls. Colgate and Palmolive. Target cut from 98 down to 91, but maintains the outperformance. BNP Paribas. Jason, you own this one. We were talking a little bit about this earlier. Staples under quite a bit of pressure. Sure. Yeah. Actually, a really good note. It's not specifically about Staples, but from Bespoke on consumer-facing stocks over the last couple of months. Really talking about retailers, but I think it fits the bill with Staples too. Under a lot of pressure. Yeah. What do you make of this?
Yeah, so for Colgate, it obviously is down 13% year to date. I think for me, there's some deceleration growth in personal care. I think that's hurting the stock. Persistent inflation in raw materials. We were talking about raw materials earlier, so I think that has been a problem. But For this particular stock, I like 3 to 5% organic growth, sales growth for the names, raising dividend 60 straight years, so the dividend now is at 2.5%. Their management team also is has multiple levers on managing costs and extracting inefficiencies. So I think for me, this is one that obviously has been in the penalty box so far this year, but I think the earnings recovery will come through into next year.
All right. We were just kind of showing that chart. We showed it for a second with the retail names under pressure the last couple of months. I want to talk about the consumer, Shannon. Is this a troubling sign that these stores that they don't only cater to lower income consumers, but a large part of their customer base is lower income consumers? Is this a warning sign about the broader economy, the fact that these stocks have been moving considerably lower, almost a straight line down?
No, I think I see it a little bit differently in terms of the margin that these companies operate in. And so if you think about the slim margins on many of the SKUs that they have on the shelves, I think that investors continue to be concerned about, potential continued tariff transmission. And so you're also, potentially looking for a continued trade down, which we really haven't seen from higher income and higher middle income households into these names. But I think this is more on just concerns that maybe we haven't seen the full margin impact of some of the tariffs. That's just in my view.
All right. Not a call, but some news. BlackRock actually launching an AI tool for financial advisors. Its first client, Morgan Stanley Wealth Management. Jim and Jason, you both own BlackRock. Jason, I'm going to start with you. What do you make of this?
I think it's a very interesting tool. I think it speaks to innovation for BlackRock. Listen, AUM growth is up 15%, revenue growth was up 13%. It's the largest player in the ETF business. So I continue to like this name. I think they're focusing on the right segments, and we'll continue to hold it as a financial core holding in the financial sector for us.
BlackRock shares up just about 0.5% right now. Coming up next on Halftime, we'll look at some of the committee's biggest winners this year as we enter the final stretch. We will debate if there's room to run in these names. More Halftime coming up right after this. let's take a look at the committee's portfolio winners for the year as we head into Q4. Shannon, I'm actually going to start with you because we've just been talking about it. The small caps. Now, it's very interesting. The Russell 2000 coming off its best quarter in Q3 since late 2023. So a big resurgence. How do you feel about the small caps going into this fourth quarter?
Yeah, I think if you look at it from a benchmark perspective, the Russell 2000 definitely has more of those unprofitable companies in it. The S&P 600, if you just want to look at a universe and probably want to be selective within that universe, more higher quality companies, and they really haven't outperformed to the same pace. I think the other thing to think about is that you really hit the nail on the head earlier, Frank, in terms of our view is that the economy is reaccelerating, and that is a critical piece of this trade. It's not just rates; it really does require that economic reacceleration, which is part of our thesis.
All right, Jason Smith, going to some of your winners. You have one winner in common with Jim. It's Oracle. The other two are Uber and Snowflake.
Yeah. So, I mean, it's simply on Oracle, $455 billion in RPO. That's with a capital B, by the way, up 359% year over year. There was quite a move on the earnings report, so I'll leave some meat for Jimmy on that one. As it relates to Snowflake, I think they're just hitting all strides on this one. You know, data warehousing is going really well. You know, up 54% year over year. EPS has doubled, revenues up 32%. So this is a name that, especially as the AI tailwinds continue to grow, Snowflake is exactly where you want to sit.
All right, Jim, really quick though. Oracle, is it time to trim? I mean, we're just hitting it 70% higher year to date. Is this the spot?
For me, demand continues to outstrip supply.
RPO, we heard you.
RPO. Thank you.
Jimmy, same question for you. Oracle's one of your big winners. Is this the spot right here? I mean, is this where you want to take some significant money off the table?
No. I think this dipped roughly 15% from the high that it was set just a few weeks ago. It's understandable, Frank, in terms of the numbers, the returns that we've been talking about. But I think this is where it bottoms and goes higher. And I think as you get into year end, there will be that window dressing, that will be that chase for performance, and Oracle's likely to benefit.
All right, one of the other winners is Win. The other one's Citi, but you're not talking. We already talked about Citi. We talked about Citi every time. Win, how do you feel about it?
Not every time, but okay. Your point's made. Win. I think this is indicative of what many of us have talked about of this being an everything rally. This is a stock that for many years was doing very well operationally, and the share price languished. And this is the year in which finally its merits are being reflected in its share price. I think it continues as the Dubai resort starts to come online early 27.
Yeah, people like the gambling. They like the gambling. Shares of Win, they're up more than 50% year to date. Coming up here at halftime, crude crush, oil pacing for its worst week since late June. We'll see how the committee is playing it. Coming up next.
Are backed physically by gold that are stored in London vaults. And it's a really clean and efficient mechanism, we think, to have gold exposure in your portfolio.
And what's the ripple effect here as gold prices climb? I think of things like gold mining. Are you seeing more attractive opportunities in maybe some of those areas?
Yeah, gold mining stocks have been a big catch-up trade this year, actually even outperforming gold over the year to date. However, I would say in the medium term, if you want gold exposure in your portfolio, gold mining stocks do not serve that purpose. They're still tied to company management, cash flows, dividends. They have a lot of upstream capex costs, so there can be a lot of winners and losers in the space. Having gold in your portfolio is providing that traditional, low volatility, uncorrelated asset that really protects you from drawdowns, provides a heightened amount of liquidity during liquidity squeezes, and really is providing you that portfolio diversification that I would say even the mining stocks in the gold sector do not.
And beyond gold, what's your outlook for other precious metals and industrial metals like silver or copper? opportunities there for investors?
Well, I think silver has been quite a catch-up trade. If you look since mid-2025, it's actually even outperformed gold. And I think that's for tactical reasons, because for the prior 6 to 12 months, silver had actually been underperforming gold before the 2025. I think if gold gets above $4,000 an ounce, which I think is another goal in the next few months, then I do think silver could test $50 an ounce. But this recent rally in silver that we've seen has only brought the gold-silver ratio back to its post-pandemic average. So I do think because central banks are buying gold, because there's so much geopolitical and policy uncertainty in the U.S., now you have
Coinbase still pushing a bit higher. Coinbase.
Gold is still your safe haven hedge. Silver's a catch-up trade. It's still very close to activity. If you look at the escalating stagflation or the R-word recession in the next few months, I think gold will take its leadership away from silver over the next few years.
Yeah, those are very, very words of hope. So hopefully we don't hear those. But thank you so much. I appreciate your input.
Anytime, Ali. Thank you.
All right, I think the markets need a little Dr. Pepper. All right, just watching Coinbase near the highs of the session. Bitcoin pushing a bit higher. Riot, watching the derivatives and stocks that trade around Bitcoin's strength or weakness. Riot, IBIT. Okay, let's take a look at Riot. Okay, here's Riot. Okay, Riot. Don't I have Riot on here? No? Okay, Riot. There it is. Okay. Okay, Riot's right above Tesla. Okay, fairly expensive calls. So if you're going to buy anything, if you're going to buy any calls, do a vertical. MicroStrategy is still pretty cheap. I just want to buy something further out in time on MicroStrategy. Let's take a look at MicroStrategy. MSTR doesn't perform as well as it had in the past. It's been in a downtrend while markets have been, the Bitcoin has been rallying. I guess, okay. I like IBIT better. IBIT, Coinbase. These are all working. IBIT, Coinbase, BitO, BITX, BITX. Okay, S&P is still chopping around. So watch the Bitcoin related names. Looks like money has been flowing in there. Okay, Bitcoin looks pretty much mirror image of everything that's working or vice versa. Coinbase mirror image of Bitcoin. Okay, well, looks like we're going to go a little bit more now. Looks like an ABCD pattern. Coinbase. Okay, looking good on Coinbase.
It's got a suction base so strong it clings tighter than sneaky. Three stainless steel parts: slicer, coarse, and fine shredded. BPA-free plastic, dishwasher safe. The Veg Vortex will turn mealtime into fun time every time. It's something to help your cooking with the Veg Vortex. Scan the code on your screen and order now.
Coming up this hour on Market Catalyst, first up, we'll break down what the government shutdown means for investors. Plus, Buffett inks a $9.7 billion deal with Occidental. Details ahead. And Tesla sees record sales soar for the latest quarter. We'll discuss that and more on Market Catalyst. We are 90 minutes into the start of U.S. trading. I'm Alex. Now let's get a check off the markets. And we are seeing some downside pressure in both the Dow and the S&P 500. They're both off roughly 0.2%, reversing some of the gains that we saw earlier in the session. Remember, both the Dow and the S&P secured record closes on Wednesday, so seeing a bit of pullback there. The Nasdaq, though, still slightly holding on to those gains, trading just flat here on the heels of that OpenAI valuation news. Well, the 10-year Treasury yield holding steady as investors weigh how the ongoing government shutdown could impact the Fed's plans for 2 more quarter-point rate cuts before year-end. Joining me now with more on what this means for fixed income investors, Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. And Kathy, thank you for being here. Let's start with what the bond market is telling us. I mean, we've seen yields go sharply lower as investors continue to price in expected Fed easing. But now with the ongoing government shutdown, that's still unknown when it comes to inflation in the labor market. What should we glean with what's potentially to come?
Well, it's a real problem about the government data. We have private sector data that's giving us some information, but it's not at the level that the government data is. So we're a little bit in the dark, flying blind here, as is the Fed. I think that the longer the shutdown goes on, the less economic activity there is, the greater the risk is that we have a downturn in the economy, at least a much softer economy in the fourth quarter. And that could lead the Fed to cut twice rather than the one time that we expect. But it's really fluid right now because you have conflicting signals. The Fed's dual mandate is intention. Inflation's too high and edging higher, and growth is in the labor market is slowing and looks like it's getting worse. So that's intention, and without information to inform us as to how the economy is going, we're kind of left here in the dark. And I think the bond market's kind of reflecting that. It's just sitting in waiting in a narrow range, waiting for something to happen.
You mentioned that we do have access to that private sector data. What data points are you looking at? What data points is the Fed looking at, given the fact that we're in the dark when it comes to that government official data?
Yeah, I was looking at this ISM data. We looked at the ADP employment data yesterday, consumer confidence. And I think what it continues to tell us is we have an economy that's running on two tracks with wealthier people with higher incomes doing fine and continuing to spend, and in aggregate that's keeping the economy growing and consumption. On the other hand, you have a lot of softness in the labor market, particularly for younger workers or for people who traditionally have a harder time finding employment. So you've got two different tracks going here. And the consumption level is holding up GDP growth, but the weakness in the labor market could lead to a significant downturn the longer this goes on. And not the least of which is if the administration succeeds in firing a bunch of federal workers, that's going to send the labor market into even more of a downturn. So Fed has to watch these numbers. They take a number of surveys. Every Federal Reserve Bank has surveys monthly in their district. They're going to pay a lot of attention to those numbers because that's data that they can gather, and that puts their constituents. So we're just going to keep an eye on this. My bet is that they do cut rates another time in the fourth quarter.
I'm here. I'm just doing some clerical work.
Inflation pressure just doesn't look like it's going to end anytime soon.
Yeah, and I've been having that conversation with a lot of folks out there that inflation is really right direction at this point. We're still significantly above the Fed's 2% target. And someone told me that markets may be accepting the fact that we are just in this 3% range higher for longer. Do you think bond traders believe that as well?
Well, I think that's what's being priced in. But I'm not naive enough to think that the Fed is just going to say, okay, we'll take 3%. I just don't think that that's something that they are willing to do. They basically have to change their mandate. So if you're betting on the Fed just throwing up its hands and saying, well, we can live with 3%, I think you're making the wrong bet. You're betting in too many rate cuts in this cycle. My guess is that the Fed is serious about getting inflation down to 2%. Will accept some rise in the unemployment rate if they see that as creating enough slack to get the inflation figures to come down.
And Yahoo Finance got the chance to sit down with Rick Forster, Charles Schwab CEO, and he said he's seen more retail investors looking into bonds. Kathy, I want to get your reaction to what he told us on the other side. Listen.
The other thing that's come up more recently that we're seeing from retail investors is a renewed interest in fixed income. Well, what's happened is with money fund yields coming down, investors are asking, should we be in a bond strategy that has a little bit more duration to it so that we don't run into this reinvestment risk issue. So we are seeing bonds be of more interest to investors.
Okay, bonds a bit more interesting. Are you hearing the same thing for your clients? And what are you advocating for when it comes to positioning?
Just eating lunch, not going anywhere.
Advocating for not sitting in cash for a long time because of that reinvestment risk that Rick mentioned. We also don't want them to take too much interest rate risk and go too long in the yield curve. So we like intermediate term duration as an average duration, which means you could spread it out and just end up with the average in that 5 to 10 year area. We think that gives you enough yield without the reinvestment risk and without a lot of interest rate risk. And also, we're advocating staying higher in credit quality. It's not that we don't like lower credit quality bonds per se, but we're not getting paid a lot extra to take that extra credit risk. And if the economy slows down, we could see that underperform.
Microsoft's still pushing a bit higher. Microsoft.
Government securities, investment grade corporate bonds, investment grade municipal bonds for people in high tax brackets in that sort of intermediate duration place because we think that that's going to perform best in this environment.
And now you and I have talked before that if the bond market's boring, that's pretty good. That means things are going okay. If you start to see a lot of activity, though, that's typically a sign that something's not going right in this market, right?
Yeah, absolutely. Bonds will react if we have a big sort of change in the outlook. If it's a slowdown in the economy, that worse recession, you can see the long end really rally. If it's an acceleration that gets the employment numbers jumping back up and keeps inflation high, you're going to see a sell-off. So right now, we're kind of at an equilibrium that's not too bad. And you can earn your coupon, maybe get a little bit of capital gains. It's a good environment for a bond investor if you're staying in the better credit needs. But, that lack of volatility will last forever. We always have episodes. So.
They also begun pushing more employees to integrate AI into their daily workload. So this follows a string of layoffs. We saw Microsoft back in July lay off roughly 9,000 employees. Meta has also had its own layoffs. Notably absent, though, from a lot of this conversation is typically Apple, which doesn't tend to have these mass layoffs along its Mag 7 peers.
Yeah, when you look at this story and you start considering, what this means, like 100 employees.
Amazon looking like it wants to go. Amazon.
Diminish that impact on those who are, impacted by this. But this is a company that employs almost 200,000 employees. But are we starting to see these big mega cap hyperscalers that really swelled up their size of their companies over the last several years, starting to kind of normalize that, lean out, and what does that mean for companies that are maybe a few years behind them, the smaller, medium-sized enterprises that were scrambling to get employees? I don't know just yet, but you look at this and you wonder, hey, there's all these concerns on the macro level around the direction the labor market might go. Maybe it's just kind of changing how they're employing people here a little bit. Mm-hmm. But if you're reducing jobs, how many are you hiring? And this is a big employer. So something to think about. And obviously today, not making a giant impact on the stock, if any, 0.5% to the downside, maybe not more than a headline, but a headline you don't want to read a lot of. We don't want to hear Alphabet laying off employees, Meta's laying off employees, because of how big these employers are within the fastest growing segments of the U.S.
And I think adding, unfortunately, some fuel to the narrative that the jobs growth in our country right now remains relatively constrained. I know that that's the Fed's main focus right now is stimulating this job growth. So this
well
doesn't
said.
help.
I mean, and I'm tying to that too. AI replacing jobs.
Right.
Okay, these are the AI leaders. If they're starting to reduce jobs, like, does that add more credence to that narrative?
I think that that's a great question, and I think that is where the concern with, I know you've been saying it for years now, but where AI is not going to be perhaps the boom cycle that everyone has seen it to be. I mean, I guess it has been. But
well, I think and that's, I think what you're saying is right, and I guess what I mean more is it's going to augment things first, right? It's going to make it easier to do your job. But in a way, it feels like, in not your job in particular, or that person or someone at home's watching, but things that are relatively task-oriented, that are repetitive and tedious, AI is coming for that. And so it just depends on how you can change the use of your human capital and utilize that for a little bit more complex things. But we're in unique times.
We are in unique times where anything right now that can face automation, regulation is in a bit of a concern, especially those customer service related type jobs, or for Alphabet, as we're seeing, it's a design related jobs, which
it's getting better too. I know we're harping on this, but went to a quick service restaurant and made the order, kind of had like a little complex order, made no mistakes. Like that's a big step forward from where it was maybe even just 6 months ago, it feels like.
I know, and I feel like this is the same thing to be said for like picking up prescriptions, and you have to deal with now an AI assistant instead of those awful phone agents. I'm a fan of it for that very reason. But last name today is Meta Platforms, which did debut earlier today, a digital assistant dubbed Business AI, which describes the software as a way for the companies to now offer customers more personalized product recommendations and faster way to buy goods via these chat interactions. So speaking to the AI right now reach in our everyday lives, but online retailers can access a Business AI digital assistant across these apps like Facebook and Instagram, as well as their own websites that are powered by Shopify. But the new company-focused AI assistant represents another way they're trying to make businesses really incorporate their generative AI, which Mark Zuckerberg has been very transparent. They're investing tens of billions of dollars into right now. So speaking to really the usefulness of it in our everyday lives, but then what does that mean for the workforce is still a huge question.
I think a ton of this might be just today also tied to this optimism around this kind of updated valuation of OpenAI too, because essentially OpenAI went from 300 billion to 500 billion overnight, where a company like Meta or Nvidia and these companies are trading on a regular, second to second interval during market hours. They're adjusting. But that was a shocking headline to see a 60%, 65, 66% increase overnight in essentially OpenAI's mark to market. Well, Meta's a key player in this space. So if you're willing to spend that much on OpenAI, you're probably willing to spend quite a bit on Meta as well in the projects that they're working on.
That is very true. And everything right now is fairly connected to headlines, like you said, tied to OpenAI, just given that it is such a seen barometer as the health of the overall AI trade. But we'll leave it there for the top of our show today. Coming up next, though, time to talk two names that definitely still fall into the big tech conversation, those being AMD as well as Intel, with Intel on a phenomenal run over the last several months, now up 88% nearly on the year, and up another 3.5% today.
That direction.
Yeah, it's definitely noisy, obviously, because you've seen some of the auto loan numbers didn't look so encouraging. So
yes,
it's hard to really generalize, I guess, at this point. We'll have to keep monitoring it. Appreciate it.
Coming up, no jobs report, no problem. The government shutdown may have shuttered the Labor Department, but we got new numbers from the private sector to help paint the job picture. The details next.
Plus, pharma stocks on fire this week, with some traders laying big bets in the options market. A look at what's driving that action is just ahead. The Exchange. Back after this.
This is The Exchange on CNBC.
S&P turning the corner. S&P turning the corner. Little rounding bottom intraday. Back to the top of the range and getting rejected. All right, this seems like all day long, this is all we're doing. All day long. Like Lionel Richie, all night long. Remember that song? All night long. Lionel Richie. Joby Aviation. Joby Aviation finally getting something going here. Joby. J-O-B-Y. Joby. Joby breaking out of a range. Joby looks good. Joby, let's put this up here for target. Joby. Joby Aviation. Looks good. Okay. All right, Joby Aviation looking good. Let's look at PL. PL.
We're now 36 hours into the government shutdown. The Labor Department is not releasing September's jobs report. We turn to some private companies with data on the
PL, another pop today. PL. Planet Labs. Planet Labs, another pop. Joby Aviation. Also Archer. Archer Aviation, ACHR, pushing higher.
And in terms of AI, the hiring platform says 100% of U.S. roles are exposed to generative AI. On the flip side, Upwork says businesses are increasingly prioritizing human oversight to course correct what they call AI work slop. I'm guessing that over time, as things get better with AI, there'd be less need for human oversight. But in the meantime, work slop. Which maybe is why
Meta turning. Okay, thank you, LA. Meta's turning. We had a nice little pullback in Meta recently. Okay, we got a doji for now. I'd like to see a bullish day tomorrow, but definitely looks good. Meta.
Yeah, exactly. Well, I mean, as we mentioned at the top, maybe this is a respite to not have jobs data. At the same time, we can just drive ourselves crazy trying to go through some of these surveys.
S&P 500.
Exactly.
Meanwhile, the S&P 500 and NASDAQ hitting new highs this morning as the government shutdown is in its second.
Looking for a break of this top of this range.
for Q4, including lowering communication services to a market weight from overweight for the first time since 2023. Joining us now is Scott Croner, U.S. equity strategist at Citi. Scott, great to have you on here. So, big picture, it feels as if, the constructive forces remain in place, I guess, as long as earnings come through.
Well, Mike, that's sort of our mantra. We're going to lead with a view towards fundamentals from here, and we'll allow macros to influence at the margin. But right now, the fundamentals...
Meta, I don't think I have any exposure to Meta at the moment. Meta. Okay, maybe I'll take some FBL shares. It's at an area of liquidity.
How much good news is being priced in the stocks? And we do this reverse DCF work, we call it applied growth. And what jumps out...
Yeah, remind me to look at this tomorrow. Meta. S&P trying to push a bit higher. S&P.
Such that the burden's going to be on beats and raises. I think just making or beating numbers may not be enough to support the stocks near term. Still positive on the tech sector, particularly semis and software. So
Okay, we're trying to break out of this pattern right now. Break out of this range.
I thought the move to consumer discretionary to market weight was sort of interesting, Scott. Are you feeling a little bit better about the consumer, or are you just feeling better about the valuation of the group?
Well, Melissa, I think where we're going with this is what we're trying to do is play this balance.
S&P looking for a range breakout.
We've got two markets we're trying to navigate. The half that's roughly influenced by AI, and the other half that's...
Okay, so if we move into this red zone, prices can move quickly. We can move quickly into this zone. The purple overhead is resistance. Overhead is resistance. Purple below, that's support. Resistance overhead, purple. Red zone, high volatility. Okay, looks like we're going to catch a bid here.
Consumer durables and apparel, which is where the home builders live. And so what we're trying to do here is dial up a little bit the margin, how we're thinking...
Range breakout, we're trying here.
Traditional lower interest rate sensitivity.
And on that score, Scott, I know you kind of warmed up to small and mid cap after kind of letting it pass by earlier this year. Is that mostly a rate story?
Meta.
It's the same thing, Mike. So essentially, when we think of small mid cap versus large cap in particular, much more traditionally economic sensitive. Ideal time to own small cap is coming out of a recession. We're not there. We're still looking at the soft landing backdrop. But soft landing plus lower Fed funds rates does begin to set this up. Now, fundamentally, I'd also make the point that small mid has been in its own form of earnings recession over the past 2 years. With Q2 results, we had the first positive inflection in earnings growth in that 2-year time frame. And so we're looking at that persisting going forward. So a combination of traditional historic rate, lower rate sensitivity, combined with signs that we're turning corner in terms of the fundamental setup, has us incrementally more constructive on the SPID space as well.
Scott, where's pharma in your portfolio, healthcare? We just came off the best 2 days in the S&P Pharma Index.
Meta trying to push higher.
2008. Because of some clouds clearing from the Trump administration. I'm wondering, we've been talking about generalists being underweight the sector dramatically. Are you getting more friendly to it?
Well, let's see. The way we discuss this in our quarterly sector outlook is that we completely appreciate that within healthcare, you've got the equipment and services and pharma components. Both are setting up more constructively from a traditional valuation perspective, particularly versus...
Looking for a break higher.
But we've also said that, look, you've got...
Snowflake pushing higher.
In this sector of ongoing...
Okay, evening session underway. We're looking for a move into the 2 o'clock to 3 o'clock hour.
To kind of clear the policy storm. But what it potentially does is set up for the sector as we look ahead to 2026.
All right, Scott, appreciate you bundling that up for us. Thank you.
You bet.
Coming up, the Trump administration reportedly trying to strike dozens of deals before the midterm elections, with the government potentially taking even more equity stakes. The details next.
Maybe they do it in Lilly. They haven't talked about Lilly. A little bit more Dr. Pepper needed, I guess. Okay. Oh, geez. What is it with fucking Bloomberg? Bloomberg's like, they're supposed to be about financials, and they keep talking politics. Drives me crazy. Okay, we're starting to break out.
Yeah, this is truly a story of tell me the time frame, and it might be a different picture when it comes to Intel. But I thought Rick did a good job of laying out sort of the roadblocks that may be ahead. And the
Range breakout on S&P was starting to move now.
And they start to pop in around the mid 40s. And so I looked at a call debit spread going out over the next several weeks to the October 17th monthly cycles expiration, 2 weeks from tomorrow. And basically look at the at-the-money call vertical. This is a strategy that would really work well if more of the same were to continue, which is increased upside velocity. However, I looked at the 3742 staying below that next resistance zone, giving this a chance to continue to rally before it hits that resistance and maybe has some sort of a setback, if you follow that logic. So with that in mind, it's an at-the-money to slightly out-of-the-money spread. So the debit is less than the width of the strikes by quite a substantial margin. It's $1.25 on a $5 wide spread, and it creates this positive asymmetry between the risk and reward. You risk 125, and you have a chance to make 375. That's a 3-to-1 relationship. Break even at 38.25. You'll need a little help from the market, but if it continues on the trajectory,
Hedging flows, trying to get into the zone.
This one
There's a lot of longs overhead, up to 67.30.
And another example strategy where we do see losses capped.
Palantir pushing higher. Palantir.
Their recent strength, although not necessarily looking
Palantir at the high.
higher on the session, but we'll leave it there for Chartmaster today. Coming up next, though, it's time to discuss the latest and greatest from Tesla. And don't let today's move
Coinbase looking at that D pivot.
These deliveries were 497,000 units in their third quarter, a record quarterly delivery figure from the EV maker. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at npedalides. And
Why?
Continue with talking to officials at the White House. They tell me there are more deals in negotiation right now, so we should expect more announcements in the days and weeks to come. I talked to Caroline Leavitt yesterday at the White House press briefing. I asked her about this and said, what is the ultimate philosophy here from the Trump administration in terms of
Watching the hedging flows here.
equity stakes or revenue streams from American companies? How do you explain the rationale behind this? Here's what she had to say. Yesterday, your administration took a 5% stake in Lithium Americas and a stake in the mine that they're working on, and you've taken stakes in other companies and revenue streams from other companies. Can you articulate the broader principle here? When does the administration see it as appropriate to demand equity stakes or revenue streams from American companies? And what other companies are you going to be demanding those from?
The president is focused on how can the United States government make more money? How can we make our country wealthy and rich again? And cutting some of these unique creative deals with companies around the world and here at home is just one way the president is seeking to do that. And I know the Department of Energy just announced this new deal. It's another great deal for the American people and our government.
So, Melissa, the word from the White House is, this is about a deficit reduction. This is about generating
Nukes, those are bouncing. Nukes.
So you can expect that they're going to do more of it in the future. And I think
What's Oklo doing? What's Oklo doing? Oklo, Sundog mentioned this earlier. Oklo, nice reversal here. Oklo.
access to natural resources that the government can authorize. In those scenarios where the U.S. government has leverage, I think you're going to be looking at U.S.
Oklo looking good.
that transaction saying, well, what can you give us?
Those are excellent examples, Eamon, but
November 145 calls. I'm going to buy some more Oklo here.
various means. And it's interesting that Leavitt
145, 150, 145, 150 for November. I'm going to buy some more of these.
sort of justify this. It's just to sort of portfolio manage a USA portfolio here.
Yeah, I mean, it's literally revenue generation. I mean, the way she explained it yesterday, you heard it right there.
mean, they're saying, look, we've got a federal budget deficit and we need money, and so we're going to go out where we have the opportunity and try to get that money. And that's, it's interesting from an administration. This is an administration that has a lower corporate tax, mission. It has a deregulatory mission, but at the same time, you can look at these things that they're doing as taxes and regulation, right? We're taking revenue stream from you. We're forcing you to do things with your business. And they don't see that as inconsistent. They see that as part of a piece. We're going to lower your taxes, but we're also going to demand some stuff from you on the other side.
Eamon, thank you. Eamon Javers. And you won't want to miss USA Rare Earth CEO Barbara Humpton. That's in the closing bell overtime. Her second day on the job. Stock is up over 20% this week. Now to Christina Partsinevelos for CNBC News Update. Christina.
Well, let's start with the Trump administration, who's asking some universities to sign a deal for preferential access to federal funding. This, according to the Wall Street Journal, the 10-point memo mandates that schools should follow a list of terms such as capping foreign student enrollment and banning the use of...
Looks like S&P wants to go here.
9 schools have sent the memo, including MIT and the University...
Trying to go.
The schools have yet to comment. French police today say they arrested the captain and first officer of a sanctioned tanker suspected of being part of Russia's so-called shadow fleet, according to Reuters, based on its proximity to Copenhagen. The ship may have been involved in recent drone incidents around Denmark that forced several airports to shut down. And Warner and Universal Music are reportedly in talks with major tech companies and AI startups to resolve copyright issues. According to the Financial Times, the negotiations have centered on how the labels are licensing their songs for training AI models and creating AI-generated music. Guys, back to you.
All right, Christina, thank you. Coming up, the options market betting on an October surprise for certain companies. We'll look at the names seeing the biggest bullish inflows. That is next.
Okay, Trace, you can see that the hedging flows are starting to rise.
ETF on pace for its 107th consecutive close above its 50-day moving average. That dates back to the end of April, and it would tie its longest streak in 8 years, up 27% over that time. We're back after this.
Hedging flows are rising more. Now we just need markets to continue to move higher. Notice the stability number here, 83%. That's pretty good. So not a lot of downside. We did have a nice little dip into yesterday's price action. So far, this looks pretty good. Oracle hanging in there. Doji spinning top at the 20-day moving average. Oracle. Okay, Amazon at the highs. Amazon, S&P. Looking for it to break through this area more emphatically. Okay, looking for this to move more emphatically. Start to catch some momentum. Watch the volume. Look at TTM. Squeeze, coming out of a squeeze. Okay, let me see if we got any buy order blocks. Buy order blocks. Yep, there's a buy order block right here. Buy order blocks showing up. Okay. Buy order block right here. S&P. Off the low. Buy order blocks off the low.
Ability to regain that share, perhaps with this lower budget model that they're supposed to be releasing later this year. He didn't say specifically, but very interesting. I thought that he noted those as reasons to be hopeful.
And I think that's a really good point if it plays out that way, because it seems those marketplaces are adopting EVs much more rapidly than we are here in North America. So potential there. But I love your point too, Marley, about how quickly this stock has rallied, because 3% is nothing to sneeze at, but we're crashing back to where we closed 2 days ago.
Snowflake at the highs of the day. Dude took calls yesterday. I took some calls. I just took some off. I just took some of those off. Looking for a surge into the last 2 hours and 23 minutes. Looking for a surge. Coinbase. Looking for more upside. Coinbase.
achieving that.
Okay, we're up at D, just consolidating the gains from this morning.
8 million vehicles for the year. We're definitely closer with this number being outside of even the bold expectations.
And Dan Ives, I think, has a $600 price target, so maybe that's for further out into the future. But I think near-term bulls might have their eyes on those
Bitcoin,
all-time highs around 488.
Bitcoin, seeing some money flow into this
That's where this particular example is targeting.
asset class.
Looking at a 470, 490, 500
All right.
skewed call butterfly. So a little bit more complexity to this example trade. But if you break it into the component parts, it's a
Okay, let's go take a look at what's moving the markets right now.
with a long debit spread. Now, as structured, if you notice I said skewed, basically just means one of the spreads is wider.
Okay, so we got a lot of red on the screen. We're seeing sporadic buying and discretionary. Amazon is up. Tesla's down 3%. Some of the names in here look pretty strong. Lululemon, Marriott, healthcare. Again, I'm going to be taking off at 3:30 tomorrow. Taking a trip up to see my daughter. There's a family day or something. Apple, Nvidia, Broadcom. Broadcom's up 2.35%. Broadcom. Oracle up 0.1%. Palantir up 1%. Palantir still pushing. Palantir making a new high of the week. Okay, Palantir making new highs of the week. Heading for that 190 level. That'll be a double top. Cup and handle or double top. Cup and handle or double top. We got 190 on Palantir. 190 on Palantir. Within sight now, we're trading at basically 187, 186.88. Palantir trending 921.50 up and to the right. Bollinger Bands are paralleling price. Okay, if you're watching Palantir. Okay, if you're following along what's going on with Palantir, you can see the Bollinger Bands are parallel, basically. The 21-day, everything points to more upside. RSI's rising, volumes increasing, MACD's showing strength, and stochastics is higher. So Palantir, look for the follow through. Palantir.
And in terms of just the market-wide setup, Chris, we've had this real orderly action at the index level and very low correlation among different stocks. So it's kind of like, sort of busy under the surface, but it's netting out to, basically just this grind on the index level. When you have these periods when stocks are going their own way with low correlations, does that
Meta.
mean it's a more stable market?
Meta's starting to push now. Meta. Nice reversal, 3-candle reversal maybe. Hammer yesterday on Meta. 3-candle reversal. Looking good for upside. Retest of the 50-day. Bouncing back above the Bollinger Bands. S&P rising. S&P. Okay, we're breaking higher now. S&P. Remember what happens when we move into the high volatility zone?
Chris, great to see you. Thank you. Chris Murphy.
Coming up, Jefferies conducting a channel check on AI chatbots. We'll dig into their findings and which bot took the top spot next. And watching shares of Lithium Americas, we were just talking about Canaccord downgrading the stock to sell on revised Department of Energy loan terms. The DOE now taking a 5% equity stake and a 5% economic stake in the company's Thacker Pass project, currently under construction. Canaccord saying the recent rally is overdone and does not reflect the valuation implications of the revised deal. Lithium Americas is down today, but up more than 130% in the past month.
All right, here we go. Market's on the move. All right. Looking good. Okay, looking good. S&P. Looking good. Okay, Meta's going now. Nice little trade there. Thank you, LA, for the heads up on that one. Microsoft still grinding higher. Microsoft. S&P looking good. Palantir trying to break higher. Palantir. S&P.
Welcome back to the exchange. Jefferies declaring a winner in the battle of the AI chatbots. The firm running a series of tests across OpenAI's ChatGPT, Google's Gemini, and Perplexity to determine the best user experience. While ChatGPT generated the most correct answers, Gemini was the standout. Jefferies writing Gemini could be the quote, leading co-pilot for consumers, especially if it can integrate search, AI overviews, and Gemini AI mode into a single interface. Jefferies raising its target on Alphabet to $285 from $230 as a result. Joining us now is the analyst behind that call, Brent Thur. Brent, interesting stuff. Talk about what specifically you were testing for here, and in what areas you thought Gemini performed well.
Hey, Mike, we took 10 questions. We took our entire research team, and we had the team independently go through and use Perplexity, ChatGPT, and Google Gemini. And everyone independently scored what they found, whether it was looking for a laptop, looking for shoes, effectively doing a restaurant search, different, completely different skills in terms of what we were looking for. And we then ranked it, and ChatGPT came out ahead overall in the scoring, but Gemini was right there from Google in a very close position. Perplexity scores really well if you're looking for a hotel, or a restaurant, recommendations, and you want more.
All right, Coinbase.
I think the message is that all three.
Coinbase still pushing new highs. Coinbase new highs.
And we're going to need multiple agents as consumers. We can't rely on just one agent to do the job. For example, in Gemini, if you took a photo of a Toyota 4Runner in San Francisco, it gave me the listing of the color of the 4Runner that I wanted to buy, and it told me the dealership that had it. If I went on the other systems, it basically told me the Toyota dealers that were in California. So in that case, Gemini came out ahead. In other situations, ChatGPT came out ahead. So I think what we see is a pretty close race. We see a future where we're all
Coinbase, we got D pivot. We're cruising higher now.
and that maybe at one point
Coinbase.
to manage all the agents because there's going to be so many great agents. One may be good at booking restaurant reservations. One might be good looking for other, and more advanced things.
Look at the hedging flows. Look at the hedging flows.
We're continuing to be bullish about Google's position in this race.
That's going to happen right after we rebundle all the streaming apps. Is one thing again, I'm sure. I'm interested in kind of what activity you think this is displacing. Is it mostly just would be multi-step search that you would be doing on your own?
Yeah, it effectively would get rid of that. So in the old world, you go into Google and you'd say, okay, I like this color Toyota 4Runner, and you would then get a bunch of links.
Okay, there's that hedge flow that I was looking for. Let's see if the price can go with. Looks like we're going to try to produce a higher low, higher high, S&P 500. Okay, looking like we're going to go here.
And all the way up to Reno would have that car and effectively would cut through a lot of the steps that you had to go through. So I think a lot of this is manual work that you would go through. You could get there by just using search. But I think what's going to happen going forward is, again, if you go into ChatGPT right now, you don't get bombarded with advertising. So that is an advantage. Many consumers are starting in ChatGPT or Perplexity because they don't want to get bombarded with advertising. So you get rid of that, you get to a more distinct answer, and I think the system's going to become more personal. So, Mike, I get to know you as your chatbot. I know your likes, your dislikes, and I basically will never show you a pizza place because you don't like pizza, you like steak. And so the chatbots over time are going to get.
Okay, there's your buy order block.
Understanding your behavior.
There's your buy order block. Prices, volume starting to pick up. See if we can't follow through and get through 67.15.
Be weird, but will also be fun, and it will be helping our day as we go throughout the day.
All right, weird, fun, and basically a friend in a way. So I guess we have that to look forward to.
Or monthly fee.
That's all. I appreciate it, Brent. Thanks a lot.
Good to see you.
OpenAI hitting a $500 billion valuation milestone today, but it's their new Sora image generator going viral online and drawing backlash over deepfake concerns. Mackenzie Sedalis is more in today's Tech Check. Matt.
Hey, Mel. So just as OpenAI officially becomes the most valuable private company in the world, it's also rolling out its first ever social video app, a TikTok-style feed filled with some of the most advanced AI-generated clips that we have seen to date. It shows just how fast the company is moving compared to its big tech rivals, where large legal and compliance teams often slow things down. OpenAI, by contrast, is willing to make mistakes in public. They're known for releasing powerful tools early and letting society adapt rather than slow-rolling new tech or over-policing creative expression at launch. Case in point, Sora. The new app lets users create and share these hyper-realistic videos like this deepfake-style clip of CEO Sam Altman shoplifting GPUs. But even with safety guardrails in place, there's been public backlash to some of the disturbing clips circulating online. Altman responded yesterday saying Sora is partly about transparency, keeping the public in the loop on its cutting-edge work.
Okay, can we take out this high? Let's see if we can push a bit more. Okay, watching the hedging flows ramping up now.
Video is a missing piece in the race to build artificial general intelligence. Models need to understand the physical world, not just through language, but through motion, prediction, and simulation. Sora helps train those systems by feeding right back into the model, all of it helping to justify that $500 billion valuation.
Guys, Mac, thanks. Mackenzie Sedalis. Coming up, FICO making a big move in the housing market and dealing another blow to big three credit bureaus. Will bring you the details and the cost impacts with FICO shares on pace for their best day in nearly 3 years.
Okay, we have 2 hours and 8 minutes to go. 2 hours and 8 minutes to go. I'm your host, Cousin Vinny, coming to you from closingprint.com. October the 2nd, 1352 on the East Coast, the best coast, the coast with the most. Let's see what we have in the next couple of hours. If we get a follow through to the upside, or if they roll this over one more time. At any rate, I would be taking some profits off into strength. Seems to be some rotation from the big cap tech names. Microsoft is bouncing more. Microsoft. Okay, Microsoft off the low. I'm going to take this day trade off. Microsoft day trade expires tomorrow. I'm going to take some off into strength. Let's see. Yeah, it looks pretty good. Microsoft, nice trade on Microsoft. Okay, hedging flows continue to ramp up here. Hedging flows. Okay. Okay, we could ramp up through this. If we catch a bid, we could ramp up through it. Purple is support and resistance above and below. Purple above and below is resistance. We're moving into a zone of higher volatility, which means we could see this ramp in either direction. Looking for an upside move.
Hey, Mike, that's right. FICO, which is the credit score that's widely used by lenders to determine if you and I qualify for a mortgage and at what interest rates, is now licensing its scores directly to lenders instead of going through the credit bureaus like TransUnion, Equifax, and Experian. Those bureaus are the middlemen and charge more for those scores, and that's why their stocks are all taking a big hit today. The stock of Fair Isaac, of course, is way up on the news. FICO scores are used by 90% of lenders. FICO CEO Will Lansing said in a statement that the change eliminated the markups. Later, he said on CNBC's Money Movers, talked about the impact to consumers.
In the end, all these costs wind up trickling down to consumers. So if we can contain the costs through the system, the consumers ultimately benefit. I mean, FICO scores will cost less in many cases, or they'll be flat versus last year.
Now, you may remember last spring, FHFA Director Bill Pulte, who oversees Fannie Mae and Freddie Mac, attacked FICO and the credit bureau's pricing, saying on X that he is, quote, not happy with FICO and was doing a full-scale review of all credit bureaus. Pulte posted on X this morning that while FICO's decision is a first step, it is appreciated. He encouraged the credit bureaus to also take similar creative...
Come on, let's get going here, S&P. We got 2 hours to make it. Meta's still going.
Well, it's a mix, really. FICO gives it to the big three credit bureaus, and then the credit bureaus upcharge it to the consumer. So it's a FICO score, which if you want to get your own FICO score, you can just go onto FICO online, and I think it's $5. You pay for it, but it's incorporated into the credit bureau scoring.
And Diana, was this ever considered much of a friction point, in the mortgage process? We're talking about small dollar amounts relative to a loan. I'm just curious the impetus of it all.
And they asked the CEO this morning on Money Movers just that. Was it ever really a problem before? Bill Pulte brought it up in May, and he kind of basically said no. I mean, as you look at it, it's $5 for a credit score. Is it $30? It's the question of, if you're pulling multiple credit scores or credit reports, those 5 or 6 reports, does that add up to a couple of $100? Maybe it does, maybe it doesn't. These do seem like small prices, but the idea, I guess, within the administration is anything that will bring the cost of buying a home down. But before May, it was never really an issue that I ever saw.
Diana, thanks. Diana Olick. Coming up, crypto climb, a done deal, and tech tear. That's next in Rapid Fire. The Exchange will be right back.
Okay, Melissa. I like Melissa. She's cool. All right, can we rip this here? Can we rip the Band-Aid off and push higher? Hedging flows continue to ramp higher. Hedging flows continue to ramp higher. Okay, S&P. Really not getting a whole lot of traction here. Still pretty much sideways. We're looking for this to rip higher. SPY. Choppy. NASDAQ. Flat. IWM. Okay, IWM hedges are starting to move higher. IWM, I might want to take some of those 243s off. IWM. Joby. Aviation. Riot did dip a little bit. They still keep smacking it down at 20. Riot. FTNT.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down.
Meta's still pushing higher. Meta.
Accuracy and precision.
I think one of the most important things is you're making
Meta.
a risk-defined way here going into earnings.
So that would be a further downside area to watch.
All right, let's see who's doing what. Microsoft, big move on Microsoft. $49 million trade.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Microsoft. Microsoft.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at SchwabNetwork.com.
Okay, we're starting to push a bit higher. Okay, looking for more upside. First target right here. Coming up to the first target, liquidity.
Some records, the S&P and the NASDAQ hit some records today. We've had back and forth action. We'll take a look at the outlook for technology with the government's increasing role in the sector, potential on M&A, and the AI build-out. We'll also look at some ETF flows and investment themes, as well as ways to maximize your after-tax returns. And we'll bring in our panel, talk all about those Mag 7 names. In the meantime, the government shutdown is still underway, but someone like Tom Lee, formerly of JP Morgan at Fundstrat, saying, I see the S&P 500 topping 7,000. James Demert, who was on with us earlier, saw 7,100 by the end of the year. So don't get fooled by the government shutdown. In the meantime, here's a look at the markets. Right now, the S&P 500 is up at 67
87.14, gaining 4 points. NASDAQ 100 up a third of 1%, up 81 points, 24,881. The Dow Jones Industrial Average up 81 points, 46,522. And the Russell gaining a quarter of 1%. Right now, you can see here that we're trading at 24.48. Oil and gold both lower. Gold's down $27 after hitting some recent records at $38.70 a troy ounce, $60.46 the barrel, down $1.32 on oil. Oil's really, that is a notable level, by the way. We haven't been at these levels in a time. 16.54 on the VIX and the 10-year bond yield of 4.09. So the yield has pulled back throughout this day. Kevin Green, senior markets correspondent, is with me to talk about some of the action we're seeing on Wall Street. Of course, Tesla front and center. First, got a pop on some news. Let's hear some of the talk.
Yeah, well, Nicole, it's one of those buy the rumor, sell the news type of an event here for Tesla. It's down about 4%, trading at session lows so far here. And I would say the report that we got out this morning when it comes to deliveries as well as production was actually a little bit mixed. Deliveries did actually exceed the street's expectations, coming in at 497,099 vehicles for Q3. Street was looking for 439,612 vehicles. So it beat there, but if you're looking at production, it did come up a little bit light. Production came in at 447,450, where the street was looking at 450,313 here. So once again, a mixed report. You're looking at the Model Y and Model 3 deliveries. That did beat the street's expectations. Energy storage also beat the street's expectations. Smaller portion of their business here, but it is actually one of the more profitable segments of their business. So you are seeing some selling activity coming in right now. I think the concern is about the future of buying of EVs, at least with the tax credits actually expiring here. Actually, they just expired at the end of September, and that is a concern for maybe some investors. The stock was also trading at near all-time highs as well, so a key technical resistance level, seeing a pullback for right now. But as we get into earnings season, we'll probably hear a little bit more from the company as to their vision moving forward, not only when it comes to EV sales, but also when it comes to robotaxi as well as humanoid robots.
Look, I mean, Dan, I was calling it a massive bounce back. It certainly is nice to see the deliveries, the production numbers a little light. I mean, the record as far as the energy storage products, that was some good news there. But as you noted, first started with an up arrow, now down about 4%. What's going on with Apple, Morgan Stanley, with a price target raise?
You're seeing a nice little bump to the upside, at least for today for Apple, and it's trading near all-time highs once again.
Okay, here we go. Here we go.
A lot of bullish activity. We are seeing Morgan Stanley actually updating their price target, raising the price target on shares up to $290, and that's up from $240 with an overweight rating on the shares here. They are actually kind of a little bit surprised when it comes to the iPhone 17 launch. They are seeing demand that's better than the street's expectations, but they're really looking forward to the iPhone 18 outlook, and they believe that.
Okay, S&P, we're moving into that high volatility zone.
Coming onto their platform, they did revise their iPhone revenue estimates, raising that by 4% on a year-over-year basis, and that's obviously going to be a tailwind because of the iPhone 17 launch here. So this is a stock that has been waiting for a new product to hit the market. We've seen a couple of iPhones being released. Not a lot of demand. And this one seems like there's some uptick in demand, not only here in the United States, but also in China. A very key market for them to try to be able to hold and try to build out on the services outside of their business, which provides better margins. So decent little price action when it comes to Apple. Nice little note when it comes to Morgan Stanley.
Okay, we're moving into that high volatility zone.
Good to see you. Thank you so much. A good look there at Tesla and Apple. Folks, now we take a look at the big picture. Aaron Gibbs, Chief Equity Strategist at Fleetstone, is with us. How are you feeling about the market today and going forward, Aaron?
Well, certainly when we're talking about those large caps, it's been an
Okay, here we go. Here we go.
I'm definitely concerned. It's not 100% sure how we'll get through October. And obviously, the Fed meeting is, the shutdown, as well as the Fed meeting, is going to be interesting for this next month at least. But I do feel a lot more positive about the small caps and some of the underperformers that we've seen really ramp up as we maybe tilt into a little more rotation to those laggards for the past 2 years.
I mean, mean, there's been an incredible run up for small caps. The Russell, for example, in 6 months is up about 20%. Does it continue to run up? Because we haven't seen records from the small caps since 2021, and we did see that just recently. What's going to be the catalyst for this group to keep going higher?
So, of course, obviously, Fed cuts. That's going to be a critical point. But I think what we're already seeing now that we're at cumulative of 125 basis points of cuts from last year and then this year, maybe we'll get to 150 of cuts by the end of this year. And I think the catalyst, as long as that narrative continues, is really the massive increase in earnings growth from the small and mid cap space. And even if we look for fourth quarter, the earnings growth and the EPS growth for the S&P 600 is almost equivalent right now to the S&P 500. And we haven't seen that for almost 2 years. So, we've talked about it always being just a matter of what the Fed is doing, but fundamentally the earnings growth hasn't been there. And when we look even further ahead into 2026, we actually see some quarters next year where the earnings growth is twice the rate of the S&P 500. So I think these stocks already are looking very attractive from a valuation point. They're looking attractive from an economic standpoint and from Federal Reserve standpoint, and now even more looking at from a sales and from an earnings perspective, they're also looking attractive fundamentally. So I think when we look at all of those points, this is really the place to start. If you're underrating those small caps, to make sure that you reallocate and do some asset allocation going into 2026.
I know you said it's hard to ignore the opportunity here. Do you almost find it hard to believe yourself when you see those projections that maybe profit growth could double that of large caps?
Well, it's because, one, the large caps are coming off of such tough comps. So part of it is, we're seeing, and we see the narratives that they're spending so much on capex, they just don't have that profit growth. So part of that is just slowing in the large caps, and then finally the small caps continuing. Now it could be overly optimistic, but when we've got that much of a cushion and we're looking at 25-26% EPS growth for the second, third, and fourth quarters, if I remember correctly. I mean, that's plenty of a cushion, even if the earnings projections come down, for still a highly profitable, really expansionary environment for those stocks.
And so now, when you do look at the large caps, and I want to get to your small cap pick, let me do that now. What about Cloudflare?
Sure. So Cloudflare it has to have a really good run. So it is a very good stock, but really
okay, trying to push through this area, looking good. Here we go.
Infrastructure as well as security.
Here we go, back above the London session, swing low.
But they have started with new AI enhancements and particularly AI security, and so they're just one of those front leaders. But they are a small cap stock in a highly.
All right, nice look here.
And as long as they keep getting those big contracts, this is just the very beginning of their run.
And then what about the large caps? I mean, you're not anti-large cap. You just see more potential and opportunity in small caps. So when it comes to the large caps, what are you picking? What are you doing?
Sure. So it's seeing that the sort of theme is starting to look at some of the undervalued stocks, some of the more defensive. I know we've seen healthcare has been in the headlines for the past 2 days. But I would say trimming some of your mega caps, being more defensive, including industrials, including healthcare, and also energy is still a great play. We're still seeing very strong growth because of that AI spend, and so any of the laggards that we've seen where we're looking at healthy cash flows, healthy earnings growth, but maybe not extreme valuations, could be your winners for next year.
How concerned are you about the government shutdown?
Not too much, right? I know we've been talking about it at length. It's obviously all about how long the government shutdown is, and then you tend to recover about 70% of the impact. So if this just lasts 1 or 2 weeks, it's sort of a non-event. Obviously, if we go over those 30 days, then certainly it is something that we have to really take a look at.
And then for the Fed cuts, what would you like to see the Fed do, really?
So I think 25 just for the end of the year would be healthy enough. I think that, obviously there are
Looking good.
messages within the economic.
Nice rally. Buying the dips working today.
Sticky inflation. We're still seeing very good profit.
There we go. Here we go.
In the business world, and so it's just all about employment, and that's reading the tea leaves. We're not really sure about the data. I think the ADP report today was obviously.
All right, nice rip into this area.
Guarantees us that, or not guarantees, but
We're into that high volatility zone. If you're looking at this chart, the red zone is where we're looking for higher volatility. Okay, higher volatility, meaning the stock can rip. I mean, the index can rip up. The cash index can rip up. Look at the hedging flows, hedging flows. We've been talking about this more and more. There we go.
Chief Equity Strategist at Slatestone. Thank you for the conversation. Really appreciate your insight. Coming up, Options Corner. Tom White is standing by.
Looking good.
Highlight unusual options activity from the day.
See if we get some more rip here, some more upside.
Arista Networks Carnival Cruise. We'll be right back.
Looking for more upside as we cruise into this high volatility zone. Okay, here we go. Let's go a little bit more. Let's go for some more. Hate that song. Hate that song. Over and over and over and over.
We literally had this was not planned. Look at that. I think that's a sign. Why do you love Tesla so much? Look, I mean, to me, look, the main thing is my view is on the autonomous and robotics. I mean, I think this now, when it comes to, it's going to be one of the best AI plays over the next few years. That's why we think it's going to be a $3 trillion market cap. But if you look at the demand turned around. I mean, this is a bounce back quarter that shows, still more work to do. But this is now setting up for what I believe is going to be a historical 2026 because the AI revolution now comes to Tesla.
Well, it better because the lead of the show with Dan Veru, you're Dan Ives, by the way, he's Dan Veru, was that every small cap stock in America combined is still smaller than NVIDIA. The same is basically true with cars. Every major car company in the world combined, leave a couple out, are the same size or smaller.
All right, let's push it a little bit more. Let's take out the high of the day. High of the day is within reach now. High of the day is within reach.
But the reality is that Tesla is not an auto company. I mean, I don't think Tesla is a car company. I think Tesla is truly a disruptive technology AI play. When I think about, because the future is ultimately autonomous. I mean,
Buy order blocks on the way back up.
And robotaxis and what's going to ultimately happen in 30 to 35 cities in the next year. That is $1 trillion alone from a valuation perspective, but in terms of a physical AI play. That's why I think it's an apples and oranges what Tesla's doing the rest of the auto sector. They're trying to play catch up.
Connect the dots, okay? I get the autonomous. I'm on the turnpike. I know where you live. You know where I live. I'm on the turnpike all the time. It's like demolition derby at this point. Cars are just going off in the woods. Everybody's on their phone. Half the people are stoned. I have no idea what's going on. I wish everybody had an autonomous car. I'm just going to look in the camera and say that. But we're because then we'd all just kind of cruise along the same way. We're a long way from that, Dan. A long way. How do we get there?
Well, first off, when you look at Tesla, I mean, today, let's call it 15% at full self-drive in terms of FSD. We think that's going to go to 50% over the next year. So from a margin perspective, from a software perspective,
That's going to be a game changer alone as that happens over the next few years. But in terms of autonomous, I mean, it's our view, 80% of autonomous world is going to be Tesla in terms of global. So when you look over the next few years, you're talking about, let's say, 2 million vehicles, 3. We're talking about like eventually you'll begin of 4, 5, 6, 7 million vehicles. I could argue when that doesn't even include robotics and Optimus, that I could argue that.
All right, taking some S&P off into strength. 0 day, taking some off into strength. See if we get any kind of follow through here. See if we can get some more follow through. 67.30. Can we get to 67.30?
The way that we've been sold luxury now, cars are heavy, weight is the enemy of range. I think that's why Tesla.
Coinbase, very nice move on Coinbase today. Note the Bollinger Bands. Note the Bollinger Bands, folks. If you're trading Coinbase, this is probably going to go some more. Last time we had a squeeze like this was over here.
Speaks to really this convergence that we're seeing in tech, autos, and you can say energy and some other things.
Where do they fit though? You got Uber. Uber just seems to get all the attention. It also seems to get all the rides. I know it's not being tongue in cheek. Rode in a Waymo, by the way, out in Los Angeles a couple times. That was pretty cool. It was a little weird at first, but then when you get used to it, you're like, oh, there's no driver. I don't know if that's good or bad. They're probably somebody's probably always listening regardless. Where does Lyft fit in?
I think, look, the issue with Lyft is that obviously when it came to food delivery, mobility, and also being only a domestic player, but you look at what they have from a rideshare perspective in terms of that, in terms of that network. If you combine that with ultimate autonomous technology, that I think is how maybe on the strategic side, PE is going to look at names like Lyft. And look, we just did. This is going to be a tidal wave of M&A that happens in tech. Because with the AI revolution still, we think, bottom of the second inning, you are going to continue to see this bull market play out. And that means strategic and financial buyers are going to be aggressive.
I know you're bullish on NVIDIA. I know you're bullish on Tesla. I know you're bullish on AI. I think AI is amazing. I think it's going to do amazing things. It already is. It will do even more amazing things down the road. But is it also possible that certain parts of the market are wildly overvalued? Because we've got quantum computing stocks that are up 1,000%. Stocks nobody's ever heard of have doubled or tripled. They're up 500 or 600% in a year, Dan. Because everybody's just throwing all their money at everything that has the word AI in it, or the letters, and hoping. A lot of this, I think, Dan, is gambling. Not investing. I don't know.
Look, I mean, the reason we talk about our odds AI 30, like the 30 names that we view as the winners, not everyone's a winner. Just because they say AI 40 times in the conference call or they put it on PowerPoint, I think over the next 6-9 months, that's what's going to separate the winners from the imposters. But that creates the opportunity, in my opinion, in terms of what's happening in tech, is that the numbers are going to speak for themselves. The use cases are going to speak for themselves. And you have names like Palantir, right? They were a teenager. Now, obviously going to what I believe is $200 because they've shown it. But it's all purely in showing the execution that will separate it.
By the way, next to Dan Ives, Alex Karp may be the best hitter. I mean, next to Dan Ives.
I think Karp is in that Mount Rushmore. When you look at CEOs with Jensen, with Nadella, with the others in terms of, and of course, always an epic interview.
Always an epic interview. Great hair, by the way. And Dan Ives, thank you. Great hair, by the way. By the way, you and I are both. I mean, just look at this.
Exactly.
Flowing locks.
It's just,
it's like the Erie Canal locks.
Exactly.
Dan Ives, thank you. All right, coming up, some power picks are here. Stephanie Link is here.
Okay, let's go some more.
Under the radar names, like an Opportunity Thursday here on Power.
Okay, you had to wait. You had to wait a long time today for this to trigger. Noted the TTM squeeze, not the TTM. Notice the hedging flows. Hedging flows ramping higher. Waiting for that to happen. Takes a little bit of patience. I was a little early this morning, but added along the way. Looks pretty good. Looks really good. S&P cash. Looking for more upside. Okay, we're pushing higher now, looking much, much better. Okay, another good day. We had to wait a little bit longer, but hopefully you guys and ladies are taking some trades here. Looking very strong. We had Meta, nice pop. Microsoft off the low. Apple still looking good. Amazon just off the high. Snowflake pushing higher. I'd like to see Tesla turn. Tesla's off today. They reported higher sales and deliveries, rather higher deliveries, but many are saying that they're poo-pooing that because they're saying that people are rushing to get in before the federal subsidy or whatever it is, incentive goes away. Whatever. More sales, more cars equals higher profits. Anyway, nice day today. Nice day today. Nice follow through. Okay, trying to get a fill here. Trying to get a fill. All right, I got a fill on the 6725s, 6725s. Okay, 6725s. Puts dropping, 6725s.
Welcome back. Happy Thursday. Earlier in the show, we gave you some stock picks in small caps. Well, we didn't. Dan Baru did. Now let's link it to something a little bit bigger. Your next guest is Chief Investment Strategist at Hightower. Her name, Stephanie Link, star of CNBC, one of our favorite people. Stephanie, thanks for joining us here on Power Lunch.
Hey, Brian, how are you?
I'm doing great. And, you got me thinking about Jennifer Garner, not because she's taking some company public, but because I can't watch TV for an hour without seeing Jennifer Garner and Samuel L. Jackson try to sell me a Capital One credit card. But there's so much more to that business than just the cards. Tell us why Capital One is also one of Stephanie Link's favorite stocks.
Can we get to 6750? I'd love to see 6750.
I'm bullish on the consumer because of the labor market, wages, the fact the consumer continues to spend. But the real reason I bought it is because of the Discover Financial acquisition that they closed in July. And it's a game changer, Brian. It is 1 + 1 = 3 in my mind, because they bought a payments network company with size and scale, and that's what you actually need. And so I think you're going to see a re-rating of the company over the coming years. And in the meantime, $2.6 billion in synergies are expected, double-digit earnings, and I think that they can do something close to $26 in earnings power. And of course, they've got a lot of excess capital, 500 basis points more than they need in excess capital. So I think you're going to see buybacks and dividends and that sort of thing as well.
Let's talk about the mystery chart, because if you're in logistics, no doubt you've seen the XPO trucks on the road, built by a guy named Brad Jacobs, kind of an under-the-radar guy. Everybody I talk to is like, Brad Jacobs works 8 days a week, 25 hours a day. He just works. That's what he does. He's now running QXO, which is a home products distributor. Is Brad Jacobs part of the reason?
Okay, look at that hedging flow. That's a beautiful move there. Hedging flow. Big move on the hedging flow.
He is an M&A master. He has done 500 deals in his career. He's been at
$7 billion.
And I like the housing and the commercial and residential building products distribution business because it's an $800 billion total addressable market. These guys have best-in-class margins, best-in-class EBITDA, trading at a 4 multiple point discount to its peers.
Yeah, and he just gets into established businesses like logistics.
Okay, so let's go to the other S&P. S&P 6750s. Can we get 6750s? S&P 500. Can we get there? Can we get to S&P 6750? Probably not. Probably not. 6750s.
Because all I need is a buyer and a seller. So no matter what the price is. And so I think this is definitely a risk-on way to play lower interest rates, growth. They have a very diverse product offering. They have 240 different types of cryptocurrency.
Yeah, that's not going to go there. That's not going to go there. 6730s, maybe?
Transaction revenues, subscription revenues, and as well as blockchain technology. So it's kind of I want to say like a chicken way of playing Bitcoin or crypto, but I like the company and I think it's going
Oh boy. Hope everyone's having a good day. Hope you're having a good day. S&P, nice move. Got a lot of what we were looking for off the low of the day. Buy to block, buy to block. We're looking for another buy to block. We're back above the swing low.
Of that, what is the bull case now on Boeing?
Yeah, so it's a duopoly in aviation, right, with Airbus. They have combined, both of the companies have 13,000 planes in their backlog, something like 7.5 to 8 years worth of backlog. This has never been a demand problem, Brian. It was always a product safety problem, culture problem. And the CEO, Kelly Ortberg, has now been there a little over a year, and he's changing all of that. And he's making strides. And the fact that the FAA is willing to lift the restrictions on the company in terms of output of the 737 MAX from 38 to 42 to now 47, I bet it gets over to 50. These are per month. The fact that the FAA did that just tells you that the relations are getting fixed. And that's a big part of the story. When Kelly Ortberg was at Rockwell Collins, stock soared 107% in a 5-year time. So I think he's doing all the right things. The reason we care about output is because the more you can output, the more you can deliver, the better the free cash flow. So I think you're going to go from -$3 billion.
Can we push a bit more? S&P. Maybe scalping the 6725s if we get a bounce here. 6725s. Those are going for 255, 245, 240, 245 bid ask, 235, 245. The 6730s are going for $1.20 per contract. That's a 20 delta. Can we get a pop through this area? We could see 6730, I think, right? Let's see if we have a pivot low first. Let me see if we can get a pivot low. See what Trace is going to do. Okay, we're turning a little bit. Trace is turning a bit. Hedging flows. Hedging flows turning a bit right here. Let me see what charm pressure looks like. Okay, there's a big area in here where we could pin right in this area, 6730-ish. Generally, with charm, you're looking for decay at the end of the day, looking for prices to just kind of sneak right into this little gap between these areas. These little areas are still building right now, so we'll have to come back to this in a minute. You can see a little bit easier to see here. The purple zones overhead and below. Looking for prices to close right inside of here somewhere. Pin on this Thursday, the 2nd of October. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Hopefully you waited. Patience-wise, I was talking about this earlier. The more I've been using Trace, the more I see how, waiting until about 10:30, 11 o'clock to see when this turns, whether it's up at high and turns down or whether it's at the low and turns up. Hard to say. Looking for another follow through. Looking for a push higher, maybe 67.25s. Let's see if we can't push a bit higher. Higher volatility zone for sure. This red zone, higher volatility. You can see hedge flows are still traveling higher. Hedge flows still rising. Looking for a pop, S&P. Futures looking good. We're on a 60-minute buy signal. 5, 15, 30, 60 are all on buy signals. Tick cumulative is red, but making higher highs and higher lows on the 60-minute time frame. That's bullish if we can continue to do this. A little surprised the S&P. Not surprised. I guess surprised is a bad word. Didn't anticipate that we would just like continue to go. We had buyers step up at the low of the day, pushing higher. This looks really good. S&P, this looks good. Okay, hedging flows continue to rise. Okay, you can see hedging flows are absolutely rising. Look at that. Look at that hedging flow. Look at that hedge flow. Look at that hedge flow.
Brian, a source familiar with the tender, says that this undersubscription is being viewed internally as a sign of confidence, being seen that as a win more than anything. We've got employees choosing to hold their equity, and then outside investors are still eager to buy in at a valuation that has nearly doubled from $300 billion earlier this year.
Say anything about the so-called talent wars for AI, where they're literally just throwing $10,000 bills at people?
That's a huge part of what we're looking at here. This is OpenAI's second major tender offer in less than a year. They had a $1.5 billion deal with SoftBank back in November.
Okay, can we keep rising here? We're on buy signals. 5, 15, 30, 60 are all on buy signals on the futures. Okay, if we can just muster a little bit more strength, a little bit more short covering, a little bit more buying, whatever.
And you've got Sora, you've got automated movies, and there's like a new actress, but she's an AI actress that people are watching. It's a thing. People, Hollywood hates it. I get it. What does this say, or where are we in the
Hedging flow is still rising.
Movie generation part of this AI story?
So Sora 2 was this consumer-facing app that launched this week on Tuesday.
Ways to go to get up to resistance, 67.50, 67.60. I don't think we're getting up there, but definitely looking better. S&P still flagging. S&P flagging now.
Sam Altman yesterday specifically spoke to the fact that this could be a key part of their monetization story. They also got into e-commerce and taking a cut from merchants earlier this week. The company is looking to make money because it is spending so much money. You and I talked last week about how it's committed to nearly $1 trillion in infrastructure build-out. But also key here, Brian, is that video generation is a source of training data that they can feed back into the algorithm. That's the missing piece to get to AGI. So it's significant on both fronts. And yes, there's been a lot of talk about blowback, and we can dig into that. But there are some pretty meaningful impacts of this rollout.
It is, and it's going to be a big fight, I think, in Hollywood. But that's south of where you are. So we'll leave it
Apple.
there.
What are you doing, Apple?
Thank you.
Apple trying to break out.
All right. Let's stay on this OpenAI story, because this show has been, we think, appropriately skeptical.
Apple's going to go.
Companies
Meta. Microsoft, nice grind higher off the low. Microsoft. Okay.
It's not just a quest for power, it's a quest for memory. OpenAI now wants to control about
Okay, Supermicro, looking for that to continue. Supermicro, SMCI. Okay.
Is that even possible? Do we make enough that you could take 10% of the market?
So there's only 3 players that play into this market, especially for high bandwidth memory that is used in AI infrastructure: SK Hynix, Samsung, and Micron. The story that you're alluding to today is that OpenAI has signed a letter of intent with SK Hynix as well as Samsung, and so that's why you saw their respective stocks just blow up. Letter of intent, though, is the preliminary stages before a finalized deal.
SMCI looking for a break higher, maybe tomorrow, next week. Big bullish day. We held on to most of the gains. We're right at a long-legged doji right at yesterday's high close.
That is the problem. So for this particular situation, OpenAI is trying to take advantage of gathering as much high bandwidth memory as possible. Why? Because you can't operate these advanced AI models, large language models, without the memory. So it is a very smart move on their part.
Okay.
They're literally trying to control the entire stack. They get the GPUs, they're building the data centers.
Okay, gonna pull back in a little bit. S&P. Let's see. Meta is at the high. Meta at the high. Palantir. Okay, looking better. Meta. Meta.
Big concern we have to keep in mind is that these companies can still back out because none of these are non-binding agreements.
That's the point I think we've tried to
Okay,
make.
Meta. Let's see. Meta's gonna pop one more time. Looks like. I have a day trade on Meta. I'd like to see that continue. Apple pushing higher. Snowflake pushing higher.
I think it's about 6,000 people plus or minus, right? So let's say you get a cruise line CEO that comes on and says, Christina,
Meta looking for another pop here. Meta.
and you're like, well, you mean 7,000 because the biggest is 6. No, we're going to build a 50,000 person cruise ship. Like, that's great, and you hope it happens, but these numbers, some of these numbers that we're starting to hear are so big that you just wonder, is
5, 15, 30, 60-minute time frames are all on buy signals. Futures looking for it to pop out of this range. S&P looking for it to pop out of this little range. Push a bit higher.
Maybe you need to spend $100 billion now up front, maybe 80% of costs to secure the 100 megawatts of power. So I wonder if that's playing a role as to why OpenAI and many of these other larger firms are seeking out such large contracts from other players like NVIDIA, Oracle. They signed up a $300 billion deal. And all of this plays together. And I think to your point and what you bring up often on the show is that these stories are all intertwined with the same players. And the same players that drive much of the S&P 500, the same players that are contributing to our GDP. Maybe just a few weeks ago, we saw that AI spending contributed more to our real economy than actual spending on consumer goods, which is incredible. And AI spending does include data centers, construction.
It's amazing. There's no, so as Dan
Been a good day.
showed 30% or
Not as good as yesterday, but who's comparing? Yesterday was pretty decent as well, right? Meta. Meta, what are we doing, Meta? Meta's trying to break out here, Meta. Okay, Meta. Meta's trying to break out. Okay, Meta's trying to break out here. Meta. Okay, that's the high of the day there, Meta. Meta. So there's going to be some liquidity up there. Okay.
Is that these companies are making big promises, especially on U.S. soil. Why? Because it's putting them in a positive light for President Trump. He's still going to be in power for the next 3.5 years. There's a lot of tariffs and a lot of other export controls, et cetera, that can come down the line, or blockages of building data centers. So when you start
Apple trying to push a bit more. Apple pushing. Nice move on Apple's part. For those of you who took Apple, nice trade there. Apple.
These numbers, I just want our audience to understand that when Christina Partsinevelos or anybody else's network or John Ford were talking to Jensen Huang and these amazing amazing people talking to other amazing people. None of this is happening yet. It will. Some of it is.
Well, think of the $40+ billion that NVIDIA is bringing in an actual quarter, or the fact that maybe ChatGPT will hit 100 billion users by end of
Maybe,
year.
yes.
Or what is it? OpenAI expecting to triple sales to $12.7 billion
Apple.
by the end of this year. So that is the argument that we are not.
Apple, Meta, hanging out at the highs of the day. Microsoft trying to get back to green on the day. Nice reversal off the low. I love buying dips. The reason I like buying dips is should be pretty obvious. If you have something of a bullish trend like you do on Apple, for example, all right, so you have Apple. This is the strategy. Apple's gradually flagging or has a pennant, upward sloping pennant, looking for a bullish action. So what do I like to do? I like to have the price action pull back. Okay, once it pulls back and starts to turn, you can look for a buy order block. That's one way to do it. But the fact that this is turning from the low in a bullish trend on the daily, I can put a stop right below this level. So if I'm wrong, I'm long. I'm wrong very quickly. I can close the trade. The reason why I would wait until this obvious hindsight pivot is because once you see the bullish action to the upside, and you see that fair value gap, there's little left to guess about because we push up, come back to the fair value gap, fill it, and then a buy order block comes in, takes it even higher. So you can move your stop from the low of the day up to underneath this block right here. So you would be buying right in this area. Okay. After it comes down and fills this fair value gap that we see, fair value gap right here, fair value gap. Come back and test it. Buy order block, put your stop right underneath it. Okay. Look for a move to the upside. In this case, we got a nice follow through. 5-1 so far, 5-1 to the upside. Nice trade there. Nice trade. Looking for Apple to follow through tomorrow.
If you are a retail investor or anybody investing right now, you have been proven correct when you buy the dips and you stay on with this narrative of the AI theme, which is
S&P, just looking to see if this is going to get bought again.
They're proven right every time they keep buying.
Got a hanging man, the top of price action. A hanging man, it's the opposite of a hammer. Hammer's down here at the low. Hanging man's inside of price action. Generally speaking, this is looking for a continuation of the trend, 921.50 up and to the right. So I'd expect to see price action continue to cruise higher. My only caveat that I'm watching is junk bonds. I want to see junk bonds get back above yesterday's high for starters. All right, get back above yesterday's high, trying to, and then eventually get back above the 21-day. High yield corporate looks a little better. High yield corporate trending, 921, 50 days trending. Breath is mixed, but you can see NASDAQ, tech stocks, NASDAQ 100 pushing higher. Small caps, mid caps. S&P is even trying to hook upward, so that looks good. Let's look at the equal weight index. S&P equal weight index. Okay, so this looks really good. Okay, so we're breaking to the upside. S&P. So this is telling us, all else equal, that we should see S&P continue to trend. 921.50 up and to the right. S&P 500 index, cash index. Looks good. Looks good. Number of stocks trading above the 20-day is at 56%. Number of stocks above the 50-day are at 58% and trying to turn upward. So we have enough energy to push us higher into Friday. Just keeps up. Looks good. Equal weight. Let's look at the New York Stock Exchange. New York Stock Exchange. When in doubt, always check the New York Stock Exchange. Okay, the McClellan volume oscillator is trying to turn up. Volume, it's neutral. So it's not capitulation at highs. It's not capitulation at lows. Okay, capitulation selling, capitulation buying, exhaustion. It's right in the middle. So there's plenty of energy left here to do something with. New highs, new lows. Let's take a look at that. New highs, new lows. Okay, we got green elder sticks, even though we hear a little bit of bearish flow right now. Green elder stick. All else equal. This looks really good. Equal weight index. We're above the zero line. Advanced decline is just off the highs, making a higher low, looking for a higher high. I wouldn't bet the kids on it, but should see a follow through tomorrow, I would think. Okay, let's take a look back. A couple of charts here. Let's look at the number of stocks that institutions hold in their core portfolios. There's typically about 75 stocks most commonly held in institutions' core portfolios. This is made up of the ARCA Institutional Index. ARCA, they have lots of funds and ETFs. This is moving higher. So if that's a green elder stick 3 days in a row, pretty confident that institutions aren't selling outright like they were over here in April. Doesn't look anything like that, does it? Even these recent pullbacks doesn't look anything like that, right? It's in the upper half of the Bollinger Bands. We haven't dropped down through the 20-day. This is a bullish signal too. Until I get a signal that says, reduce exposure, most likely going to just see more upside. TRBCX, okay? TRBCX, T. Rowe Price Blue Chip Growth Fund. This is more of a swing time frame. Why is this not TRBCX? Okay, so you can see on the daily, this is moving higher. On the weekly, okay, this is at highs, just off the highs that we put in last week. TRBCX, this is all the usual suspects. Blue Chip Growth Fund, growth, think NVIDIA. Okay. Think NVIDIA, Microsoft, Amazon, Apple. Also, you can look at VGT, the Vanguard Information Technology ETF. This is rising. This is bullish. If you're in a 401k and you're thinking about, oh, should I adjust my portfolio? There's no signal here. There's no reason to do anything. Just keep buying every 2 weeks or whenever you get paid.
The Securities and Exchange Commission is considering a move that would allow stocks to trade on the blockchain, similar to
Looks good.
currencies. For such a new idea, your next guest would pick one of the oldest names in tech as her trade around that idea.
Okay, back to Supermicro, SMCI weekly. Look at that weekly chart.
So this is like new and potentially very fancy and whatever. Why is IBM, one of the oldest names in the book, the right company to play on that trade?
Yeah, well, they're constantly transforming and innovative, and
SMCI, Supermicro.
access in the fundamental level, and tokenization is going to give us that access. IBM, even though it's the oldest company, went through some management changes.
All right, we need volume. Need volume.
The fruits of that. We've been talking about Watson X lately, and there's been changes really fundamentally within IBM. But what I think is interesting, if we look at positioning overall across the market within IBM, the changes that we've seen that this new management has brought to fruition is not reflected within position. That's dominated by value and dividend investor funds, which means there are opportunities for repositioning, further strengthening a bull case. But IBM, because of their old history, this is what really supports it, Brian. They're deeply embedded in enterprise information technology architecture, governance framework, in really regulatory compliances. Working in the banking industry my entire life, if you are looking to do something like tokenize assets and securities, think about the transformation from mutual funds to ETFs.
Okay, a little bit more drift lower.
There is a lot of regulation that occurs around that, and IBM is a key player with that because they already have those deep enterprise relationships. They have a consulting arm, so they're in the room when these decisions are even being made.
You used to be, you called up your broker, EF Hutton, you spent $100 to buy 2 shares. Then it pretty much
Okay, that was fun. We had a nice little rally up. Okay, hedging flows turning back down. Hedging flows turning down.
Potential tokenization of stock trading is akin to that of change when it comes to how we invest?
Absolutely, I do. So, and I think this is related to crypto in a way, meaning cryptocurrency.
Okay, Meta's still trying to pop here. Meta still trying to do something. Apple's at the high of the day. Apple.
Separate legs that they have. That is more of access from a global perspective. If you think about it, if you're a foreign investor and you are utilizing and accessing our U.S. markets, it's easier to fund your account via crypto than it is to fund it via a U.S. bank account. There's some really efficiencies that are there. Then bring on 24/7 trading or that 25 trading now that we're seeing. That is all about global access, but we need participation. We have broader participation, as in Interactive Brokers has been doing 24/7 trading for quite some time, but there isn't a lot of volume there, so we needed a market for that. Now that Robinhood has started that, E-Trade has as well, so that's more access. Tokenization is another layer to that.
Okay, NASDAQ Composite 2-to-1 up volume. SPY 1-to-1 up. The Qs 1.7 up. 7 up. The Dow Industrials Diamonds 3-to-1 up, and IWM is 1-to-1 up. New York Stock Exchange 1-to-1 down. So basically, IWM, New York Stock Exchange, SPY, thinking Doji on the daily for now. Doji on the daily. Okay, in this case, we got a hanging man on the S&P cash. Are we going to turn up right now? We're going to turn back up. Let's see how far they go with this. Are they going to sell some more? Okay, nice little rally up so far. Okay, we got an hour and 6 minutes to go. Hour and 6 minutes to go. Okay, Goolsbee at the Fed. Without the official unemployment rate, the Fed will make a decision with the information it has. Okay, so ADP data was a little soft, so we'll see. Are we going to pop it all? What are we going to do here? Okay, looking like we could push a bit higher. Oh, brother. Okay, so all the indices have up volume showing right now, except for the New York Stock Exchange, and that's 1-to-1 down. So that could easily flip to 1-to-1 up. Okay, tick cumulative is making higher highs, higher lows. Currently red on the 60-minute. Hedging flows, still pointing down at the moment. Apple, what are you doing, Apple? Apple trying to make a new high here. Apple. Microsoft, well off the lows, but still red on the day. Netflix, nice bounce. Tesla at the low. Meta at the high. Snowflake at the highs. Okay, we'll see how far we can push this. I had a nice bounce. S&P 500, nice bounce. Okay, nice bounce. Buyers at the low of the day. Hanging man. Still a bullish look. Buyers at the low of the day, pushing it back up. That's a good signal.
sale Squawk Box earlier today.
This is the last step that we needed in our major transformation that we started 10 years ago, which was to become more U.S. based. Back when I took this role in 2015, only 50% of our production was in the United States. Now, 83% of our production is in the United States in the high quality areas, the Permian, the DJ, the Powder River.
Vald is trying to go green on the day.
This deal may finally lower debt enough to start buying or rebuying its own stock. We'll be right back.
Okay, we're just kind of sitting here. Futures are trying to push a bit higher, but stalling for the last 5 minutes or so right here. Oh, boy. Okay, we got our move up, so I'll get rid of this. Got our move up. I don't know how much more we can get out of this. We got a sell order block there. Okay. Okay, tomorrow I'm going to leave at 3:30 instead of 4 o'clock. I'm going to have a hard stop at 3:30. Going to go visit my daughter at her university for family week. There's a family day. I guess they do that. Anyway, yeah, looking forward to that. She's doing good. She's happy. She's out of the house. I'm away from certain people. I'm the easygoing one. I discipline just by looking at the kids, and they know to listen. The wife is constantly yelling at them, so they tend to tune her out. You know the whole saying that the more you yell at a kid, the more they start to tune you out. It doesn't have an effect like it used to. Fathers generally just look at the kids and they're like, okay, I better behave. Oh, dad's home. Hide. All right. So we got an hour to go. We're straight up 3 o'clock, coming into 3 o'clock hour. Let's see if we get anything going here. See if we get anything going. The hedging flows have turned down a bit, so there's some profit taking there. Adjusting positions. Okay, I'm going to take a 2-minute break. I'll be right back.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
Hello, Marley, and I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange today. Let's take a look at what is coming up on the show. We'll check in on some ETF themes with the team from the NASDAQ and discuss recent flows into cybersecurity funds. We'll be joined by the CFO of Zeta Global and discuss AI-powered marketing. And in Options Corner, then today, we will dive into Rivian as shares come under pressure after it narrowed its full-year delivery guidance. But for now, Molly, take us through what you're watching today.
Yes, Sam, FICO is shaking up the credit score market. Fair Isaac Corp stock soaring up almost 20% right now after unveiling a new system that offers mortgage lenders direct path to its FICO credit scores. This is the first time that lenders have been given a way around the big three credit reporting firms. Because of that, we're seeing shares of TransUnion and Equifax both under pressure today. And Occidental Petroleum shares down about 7% right now after Berkshire Hathaway agreed to acquire its chemical division, OxyChem, in a $9.7 billion all-cash deal. Now, Occidental's biggest shareholder is already Berkshire Hathaway. They have a roughly 28% share of the company, but Occidental is one of the worst performers on the S&P, on pace for its largest same-day percentage decline since April. And we got Tesla's third quarter delivery numbers. They are in, and they are better than what were expected. The electric car maker delivered a record 497,000 vehicles, easily topping estimates that were for about 447,000. Buyers raced to get ahead of the end of those EV tax credits that were expiring on the last day of September. And this wasn't the only record-breaking figure in that report. We'll break down those numbers for you coming up. But before we get to that, let's check in with the market. Things have really turned since earlier in the day, now entirely on the green after seeing a sea of red this morning. On the S&P 500, we're trading up about 0.1% right now, 67.1940. For the NASDAQ, up about 0.4 right now at 24,900. For the Dow Jones, up 0.25%, 46,548.67 right now. And the Russell 2000 up 0.5%, our biggest gainer right now at 2454.34. As we look to some of our futures products here, the dollar slightly stronger on the day, up more than 0.1% at 97.53. But we are seeing gold under some pressure after touching another all-time high, down about 0.5% at 38.7660. Crude oil down 2% today, 60.54, one of the lowest prices we've seen for a barrel in weeks. And Bitcoin finally found its way above that 120,000 mark. It's been trying to get through that level for weeks now, up 2.75% at 121,575. Now, Sam, I'd say, and some of the stories that you've been watching.
Okay. All right. Hedging flow is turning back up again.
Where I'm comfortable right now.
Yeah, so one of the things,
Hedging flow is turning back up. You can see that right there. Hedging flow is starting to turn up. A few minutes left in the trading day. We got 57 minutes to go.
and in part because they are using AI as a backbone by which to change their business and to make their business more efficient.
Hedging flow is turning back up.
We have to be careful.
Call walls up there at
Stock prices and saying, well,
was that 67.50 now?
you have to look in conjunction with where the stocks are versus how much the numbers have come up. So these are not you have to deconvolve the two and to understand how much the multiples have gone up.
Where do you see pitfalls? Where do you see possibilities that the run can be derailed?
So one of the things that I'm getting a little bit more worried about, and this isn't really something that's going to impact 2025 or 2026, perhaps in 2027, is I do foresee that the hyperscalers, whether it's Microsoft, Meta, Google, Amazon.
Okay, watching the S&P, looking for another turn back up. Okay, are we going to take out this level? It's possible. 67.25, 67.50.
For growing their capex budgets. So, will it derail anything? No, but I think it will give some people pause because these tech leaders have been massive cash flow generators, which has allowed them to spend the way they spend.
Let's talk about some of the, you call them picks and shovels in this space. For instance, Nebius, which is an AI infrastructure, up more than 8% on the day today.
Okay, Bitcoin going.
These companies that are supporting the overall growth are interesting places to invest right now.
Well,
Bitcoin going again.
We just talked about how we don't have enough supply of tokens or enough supply of GPUs and infrastructure to support the current demand. So where you want to be positioned is where, in those
Bitcoin going again. All right, Bitcoin stretching its legs here. Coin stretching its legs. Okay, big move here. Looking good. Coinbase. Okay, way beyond D. Way beyond D. All right, earlier we were looking at ABCD pattern. Earlier we were looking at an ABCD pattern. Okay, so you can see where we are now. ABCD.
Of a tighter power market because they're not they're price setters in the market.
Are you changing your investment thesis at all, given the massive run up in some of these stocks? I mean, you went in.
Nice move on Coinbase.
Are you switching it all to say, let me see if I can find the next company that
Wow.
is going to transform
Nice move on
the way we
Coinbase.
use power.
You know, I think there are on the margin some companies like in the semiconductor space that are, you know, geared towards power efficiency, but it's a small fraction of revenue. So it would be a great expression of power efficiency in the market. But I do think that there are private companies today that are working on this power conundrum, I call it, and you know, they will come to market eventually.
And finally, the big name in the space, NVIDIA. What's your view?
Oh, love it. I mean, I know everyone's like, well, the stock has gone up so much, but I think, again, if you look at the numbers, I mean, if you just take kind of a street whisper of $7 next year, the stock trades at a 25 multiple, and that $7 is going to continue to grow as, you know, the capacity needs are going to continue to grow.
Alger's Oliver Crawford, thank you so much for joining us. Appreciate your time today. Thank you. All right, so when we look at the markets right now, again, we're on the lookout for breaking new records. We're going to stick with tech. The QQQ ETF is on track to close above its 50-day moving average for the 107th time this year. That would tie its longest streak since 2017. Joining me now to discuss Robinhood's Stephanie Guild and Truist Keith Lerner. Keith, let's start with you. Give me your sense about the tech space in particular.
Yeah, well, great to be with you. You know, it's one of those things, a trend in motion is more likely to continue than to reverse. We've been bullish on tech all year long, and we think it's driven, the foundation of it is still driven by earnings that are stronger than the overall market. I know there's a lot of discussion about...
Okay, Bitcoin is going straight up here. Bitcoin. Bitcoin is on the move. BTC, no dollar sign. BTC, USD. Okay, big move on Bitcoin. Look at that move on Bitcoin. Wow. Wow, wow, wow.
Do the earnings then overshadow whatever lack of data we're getting from the government, say on jobs because of government shutdown? Are you focused more on earnings, and is that all that matters?
If you ask me for the one thing that matters the most, it is, you know, it is earnings. Now, this year, if we think about this, you know, carousel of concerns, shifting narratives, really the main you know, driver this year has been earnings. So we're more focused on that. We have looked back at government shutdowns. We published a piece last week, and really they tend to be high profile but low impact market events. You know, we look back at the 20 shutdowns we've seen since the 1970s. And during the shutdown, the market has been relatively flat. Now, obviously, as if this goes on longer and so forth, it could have an impact.
Okay, we got 50 minutes to go, 50 minutes to go. Bitcoin at the high.
I think that will be more important than the government shutdown itself, at least from a market perspective.
Stephanie, we reached your target for the S&P 500 in September. It was 6,500. Where do you think we could go, given that you
Baba, sold Baba this morning. Baba, let's take a look at Baba real quick. Alibaba.
I'm looking at earnings ahead, and obviously, like, you know, I set that target 6,500, didn't change it when we had Liberation Day and everything became, who knows what's going to happen next. But now that I look ahead, you know, I'm not bullish. I felt like September was going to be maybe a wonky month, which is why I hadn't changed it yet. But it didn't turn out to be. And then once we get into earnings season, we'll get information, as Keith said. But where I think it could go now is if I'm being reasonable about valuation, let's say, and this used to not be reasonable, 2021 times, and I'm looking out to 2027 earnings expectations, which are next 2 years of 13% growth rates, you can get to 6,900, 7,000 easily. But the shutdown is not really on my mind for now. I mean, I think Keith said it, but there's really just not been a big deal. I think the one time it did become a big deal was in 2018, like December 2018, but there was a lot.
Okay, Alibaba, pretty nice move over the last several weeks. I've been sitting in calls forever. I took those off this morning. Okay, you get these gap up, gap down type of situations. It's been trending higher since it broke above 128, 125, 125, 128. So I took that off. Baba, I'm no longer in that. JD, JD.com. JD. Okay, gapped up this morning.
If you're doing that, then you have been investing in technology. You have been starting to invest in things like infrastructure. The stuff that's just been recently announced about pharmaceuticals starting to look interesting. Like I think, and that's our customers have been well aware of that and investing alongside that. I think there's, but it hasn't been as broad a market, I think, as I would have liked because I was really hoping that mid caps would start to wrap. You started seeing a little bit of it on the small cap side, but not much yet. I think the one thing that will help that.
Pretty decent day today, huh? Not a bad day. Did I run out of? Okay, no. I thought I ran out of juice here on my cell phone.
A share of their common stock from 61, so it's modest, but it will be payable on November 28th to those on record as of November 14th and reflects an annualized dividend rate of $2.48 per share. But their CFO did say they remain very much committed on returning this cash to shareholders and balancing their investments in the long-term growth strategy. Also highlighting they've made progress on now they're back to start
Bitcoin.
initiatives and say they're
Look at Bitcoin.
strategic actions taken
Bitcoin's going vertical.
their long-term growth and hopefully healthier profitability. So they first initiated that dividend program back in 2010, and now we've seen that grow at an annual growth rate of approximately 17.5%. So encouraging, yes, from a cash and balance sheet perspective. Less encouraging if you've been caught in the crosshairs of like the layoffs, these store closings. I mean, this would then make you say, seems like you're in a better financial position than perhaps some of the headlines would depict. But for the stock right now, this has been good news. It's up 3%.
Has been good news, and a modest increase is still money in people's pockets. So
True that.
The street likes it. Thank you, Jenny Horn, for that. That's the co-host of Next Gen Investing, Jenny Horn. And I do want to check back in with Sam and see what we have coming up next in the show.
Thank you so much for that, Molly. Coming up, we will dive into some market themes with the team from NASDAQ, including cybersecurity and what kind of ETF flows the group has seen of late. Market on Close. Be right back.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing...
Okay, 46 minutes to go, 46 minutes to go.
Or even retiring.
Dealers closing positions, flattening out.
Live support, powerful trading platforms, and 400 branches.
What's Apple
All at your
doing?
service, all
Apple's still at the high here, Apple.
way. Sounds nice, right?
I'm Nicole Petalini
Okay.
live at the New York Stock Exchange, and this is the watch list. Your midday
Oh boy, hope everyone's having a good day.
with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust.
Okay, Bitcoin's still going.
Eastern, only on Schwab Network.
Whether you're an
Trade
experienced
desk.
investor or just getting started,
UNH.
the webcast is right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth.
Okay, there goes Snowflake popping. Snowflake is popping.
Best of all, you can ask questions by
Snowflake popping.
It's interactive
Nice pop.
at its finest.
Following through. Bollinger Band's expanding. Top and bottom, that tells you look for a fast move. Snowflake, last time it squeezed, the move was to the downside, but you get the point. Okay, tight squeeze. RSI rising. We got a nice pop to the upside. Bollinger Band's looking good. Looks like that's what's going to happen again this time.
Global macro matters. Schwab Network connects the dots. Watch live. Subscribe
Okay.
free at schwabnetwork.com.
Okay, we're coming out of a squeeze on the daily. Snowflake probably keeps going. Don't buy it up here at the high. Wait for tomorrow. At this point.
Alongside Molly Caden over in our Chicago headquarters. We've got about 45 minutes left in the trading day, so let's just check in and see where things stand as we head into the afternoon session and close things out for the day. The S&P 500 is up fractionally. It's really been sort of trading in a narrow
That squeaky voice.
2022 purchase of insurance company that they had, and that's why you're seeing shares down about 7%. Last but not least, Starbucks higher today after it announced a small increase in dividend payouts. The coffee giant approved an increase in its quarterly cash dividend from 61 cents to 62 cents. Not that much per share, but yet the stock, you can see, climbing around 3% just on that little rise. Contessa?
Christina, thank you very much. And we are just getting started here on Closing Bell. Up next, Tesla shares tumble after announcing its latest delivery numbers, and they were good. Reaction from Tesla shareholder Bryn talking
Snowflake.
right after this break.
Nice move on Snowflake. Beautiful, beautiful, beautiful. Nice day today. Almost as good as yesterday. Circle. Let's take a look at Circle. CRCL. Circle. Okay, big move on Circle's part above the 50-day at the highs of the day. I'm going to go ahead and close some of this. Actually, I have January, so let me just go ahead and January. You got 155s. I don't want to sell myself short. Circle looks good. Okay, volume looks good, so most likely we'll see a follow through, right? Circle. Circle. Okay. Circle, circle. Daily. Circle. Turning the corner. Yet another example of something that's turning at the lows, moving above the 50-day. Company that makes money. What kind of money does Circle make? Circle, let's go check it out. Let's go check it out. Circle missed estimates. They don't do too well. Okay, Circle. I'm going to go ahead and take this off. Got a really nice profit here. I got January calls, but I'm just going to go ahead and take it off. Reduce my exposure while I can. I'll buy some more on a dip, I guess. We'll see. Circle. Okay, looking for that to push higher. Okay. Snowflake at the highs. Apple just pulled back a little bit. Microsoft looks like it's going to see some profit taking here. I took a day trade earlier from the low, about 5 minutes into the reversal on the low. That was a good trade on Microsoft. Let's just review Microsoft really quick, okay? Microsoft. Okay, when I saw this at the lows, I really liked what I saw down here. Microsoft. Okay, so this is your entry right in this area. That was your entry. And so far we made it up to this level. So from that point, entry, that's a 3-to-1 trade. So that's not bad, especially if you're trading options. You got to stop underneath. We saw this reversal over here on the left, this area right here, Microsoft. We saw that we weren't making new lows, so put a stop underneath there. Wasn't until it started to break back above these pivot highs you can get long. Okay, so that looks good. Microsoft. Okay, Microsoft looking good. Back above the 50-day. That's the key thing to this buying the dip thesis is that we're above the 50-day for the past 3 trading days. We were below it this morning. I was expecting to get back above the 50-day. That's what happened.
Welcome back to Closing Bell. We're watching Tesla shares falling down almost 4% now, despite a jump in deliveries. Phil LeBeau joins us. What are you seeing, Phil?
Sell the news.
I'm not surprised.
Sell the news. Phil LeBeau. Always in hindsight. CNBC. Where were they when Tesla was grinding higher? Okay, they were poo-pooing this move. We got an outside day now. Probably pull back a little bit more on Tesla. Snowflake looks good. Snowflake. Big Bollinger Band squeeze and breakout. Okay, S&P 500 starting to turn up. S&P. S&P, we're going to turn up now. S&P. Okay, hedging flows. Not enough time left in the day, really. You can try it. You can try some trades on S&P. Last few minutes of the trading day. We're just kind of sitting here in a range, so I wouldn't expect much end of day. S&P 500, we're in this little range right now. Okay, London swing low. We moved below it today, came right back above it. When I say London swing low, what I'm talking about is like the during the London session before the New York session, you plot out the swing low and the swing high towards the latter half, I guess you would call it, of the London session. So at around 5:30, we made a low. Around 5:30, we made a low. The ES made a low. All right, let me just zoom out of this if I can. Okay, futures, ES. No, ES futures. Okay, so this morning, let's see, here we go. So prior to the open, you got a swing low. I guess you can go with this one right here. Hit a swing low, and a swing high right before the New York Open. Okay, we took out the swing low. You could even take this one down here, which was actually, that's not London session. That's not London. This is London session right there. We took that out, came right back up. Anyway, S&P 500 had a nice recovery from that. Okay, S&P with 37 minutes to go. 37 minutes to go.
It's interesting to see such a negative reaction in shares of Oxy right now, down about 7%. I mean, as Romain mentions, some had been expecting a price tag maybe closer to or above $10 billion. We didn't quite get there.
Okay, we're below this morning's high. We're below that level. Let's see if they run it back up. 36 minutes to go. 36 minutes in the regular session. All right, what's moving? Something's moving. Put me over. Oh, it's the Coinbase. That's what it is. Okay. Coinbase, I added to that position. Looks really strong. Circle. I'm going to have second guess this one. I'm going to go ahead and cancel that order. I'm going to do Circle. Maybe I'll look at it tomorrow. See if we get a little follow through. Okay. What do we got there? Apple, Fly. Okay. IBIT. Having a good day with IBIT. I'm going to go ahead and close IBIT only because I have a pretty large position on Coinbase. I'm just going to minimize my exposure to Bitcoin. I'm going to stay in one position, Coinbase. Okay, IBIT, I just took profits. IBIT. Don't be misled. If you still have IBIT, you only have IBIT. You don't have Coinbase. Just stick with it. I'm just reducing my exposure in the Bitcoin assets. Okay, looks like we're going to go here. Futures turning back up. 33 minutes to go. Regular session, 33 minutes to go. We're still in a little range here, a little flag sideways. Okay, hedging flows turning up. S&P hedging flows turning back up. Joby Aviation, that looks good. Joby Aviation. Let me take a look at Joby. Joby. That's on watch list, right? Joby. Or did we just talk about it? We talked about it. Josh Brown talking about it on Monday, I believe it was. Joby Aviation, Planet Labs, and Archer Aviation. These EVs getting some nice price action here. Joby. Most of what I saw earlier during the day and into the last hour, it appears that we'll probably see some grind higher. Doesn't mean we can't pull back a little bit like we did today, but generally speaking, it looks pretty bullish going into Friday. We should have a bullish bias, I would imagine. S&P 500. Okay, here we are, S&P. All right, we got 31 minutes to go. 31 minutes to go.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access.
Okay, so this looks pretty good on the S&P.
Popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter
S&P still in this little range.
with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Joby looks like it's going to follow through. Joby, PL, Planet Labs, all these EVs continuing higher. ACHR, Archer Aviation looks like it's going to break out too. Archer.
Shareholder with a 28% stake in the company, and this deal is the largest for Warren Buffett's Berkshire since 2022. We thought we'd walk you through some of their major acquisitions. OxyChem, the one I just mentioned here,
A little more profit taking. S&P at the high.
today expected to close in Q4. Pilot Flying J, the truck stop chain.
Generally not that bad looking though.
$11 billion. That one happened back.
Okay, starting to see a little selling at the high.
Final acquisition of this one. Allegheny Corp, $11.6 billion back in 2022, and then they acquired BNSF, which is one of the nation's largest freight rail systems. That was collected for about $34.5 billion. BNSF was acquired back in 2020. So some large acquisitions for Berkshire Hathaway. This one, the fourth largest that we've seen in about as many years. But with that, Sam, I do want to check in with you in New York, as I know that we are about to learn more about Zeta Global and your chat with their CFO.
Okay, Super Micro having a decent day.
We're going to be looking at the wells of AI-powered marketing now, and welcome in Christopher Greiner as the CFO.
Fortinet, FTNT, Fortinet, looking for that to continue now that it's above the 50-day. Fortinet, security. We talked about that earlier. Fortinet, it's got double-digit earnings. Fortinet, double-digit earnings. Fortinet. It beat expectations on August the 6th. Looks good. 1.63 billion. Security solutions, network security solutions. That's going to be a big deal, even more so into the future. So any of these names look good. Let's see what Palo Alto looks like earnings wise. Palo Alto, probably better earnings, right? Palo Alto. Earnings growth, not as good. Let's look at CrowdStrike. CrowdStrike earnings compared to, okay, 2%. Okay, what about Zscaler? Zscaler. Missed expectations. So, Fortinet looks pretty good. What about, what's the name of that one? Cyber, that's an ETF.
So we're just super excited about the opportunity and the people that are coming with it and the brands in particular. Yeah, and not just here in the US, I believe. This also helps your sort of global reach across EMEA and also APAC. Tell us about that. That's right. Only 4% of our revenue today is international. Okay. So the vast majority is in the United States, whereas their business, about 40% is international. So it gives us immediate reach and scale into Europe, a new footprint in APAC, which we are not today. So an interesting global scale from that perspective, but the brands that they have on a global basis, the top 20 advertisers in the world, over 40 of the Fortune 500, hundreds of enterprise brands that we are every single day used to selling into that customer set.
Coinbase, let's see, what's Coin doing? CONL, Coinbase. Okay, right at the highs again. Okay, that voice is getting to me. Coinbase at the highs of the session. And the derivative, the 2 times ETF, CONL, that looks good. CONL, COIN. Okay, big move today. Bollinger Bands opening up top and bottom. I'm telling you, look for a fast move. The last time it did that was over here. Squeeze, very similar to the squeeze prior to like 3 weeks ago. We squeezed similar to this squeeze right here. I'm referring to this right here. Okay, this squeeze right here. Bollinger Bands looks very similar to this squeeze right here. Okay, what happened after the squeeze and RSI turned up? Price action moved higher, of course, with Bitcoin. Bitcoin's also looking pretty good. So I would say Coinbase has probably got a ways to run of a swing trade. Okay, this looks like this could get up to this level here. Okay, we got the gap right in this area. We're through the gap now. Coinbase through the gap. The volume over here, you can see the volume. Okay, volume as we push lower right in here. Look at the volume down below. Look at the volume down there. See that volume? Okay, there's a lot of volume along in here. It's pretty negative. These people were selling, so I don't know if there's going to be a lot of resistance to the move back up. Maybe not. We'll see. But we're in through the gap. Very strong price action. Bitcoin also looking very similarly. Breaking through levels. Got supply overhead at 122 to 124. 124,000. So Bitcoin looks pretty good. Looks pretty good. Coinbase. Okay. I'm going to take half of my Coinbase position off. Added some today, so I'm going to take half. First in, first out. First in, first out. Coinbase. Selling into strength. Coin, COIN. Selling into strength. Coinbase. Let's see if we get a fill. Bitcoin. Okay, Bitcoin's just off the highs of the session right there. Okay, 24 minutes to go. 24 minutes to go. A lot of things are moving higher. Okay, market's pulling back. Okay, this is probably somebody taking some positions off. We talked about this. You see these positions over here? As they close these positions, you'll see the markets move lower. See these positions closing? Okay, you can see them closing over here on the left. Okay, looking at over here. Let's go to 0 day. 0 day is more profound because, it is 0 day. So let's see. You can see them closing there. See them? Okay, and as we're closing, you can see that these are starting to drop off. Okay, so that seems to be the pattern lately. The last few minutes of the trading day, they close these 0 day positions and we drop off.
U.S. travel is keeping a kind of running tally on what the government shutdown costs the travel industry. Let's show you right now. We're at $230 million since the government shut down. The industry anticipates $1 billion loss for every week the federal government stays closed. Now, part of this is just obvious, right? All non-essential government travel is canceled, even for workers who aren't furloughed. That, of course, would have a trickle-down effect on corporate travel. If a meeting with a government agency is canceled, there's no need to, say, fly to D.C., no need for hotel, restaurant meals, etc. This is high season for some vacation rentals around national parks. Shenandoah, Smoky Mountain, Zion among them. Skift is warning that segment can take a hit along with restaurants, shops, and tour operators. And of course, there's widespread confusion over what's open.
Oh, brother. 2 days in a row. Pretty decent. If you bought the lows, once we saw confirmation that the hedging flows were turning, if you bought the low, you probably had a good trade if you were taking the S&P 500. I'm been using this for a few months now. I'm starting to get a sense of when's the best time to do it. When's the best time to go long or short? Short from the high of the day, obviously today. We just gapped up and just fell down to the lows around 11 o'clock. Then hedging flows turned back up. Hedging flows turned back up, and that was a nice little rally there. Okay, so we started the day, dropped, rally back up, take Sally up, rally back up. Snowflake, wow, what's Snowflake doing here? Snowflake. Snowflake at the highs.
Airbnb and Expedia. Airbnb off today, and I mentioned some of those vacation rentals in the hotspots where this is high
Alibaba.
season, they would normally have 100% occupancy, but if the national parks are closed,
Microsoft.
What's the immediate impact?
Joby Aviation. Joby looking for that to follow through some more. Circle.
$1 billion a week into the travel industry with
MicroStrategy took that off earlier. MicroStrategy.
The companies that I look at, kind of the online travel agencies, some of the advantages they have, Booking in particular, Booking.com, Booking Holdings, is that they are 85% of their bookings are actually outside the U.S. So it's a true global player, so they'll be less impacted. Expedia and Airbnb both, though, are doing 50% plus of their bookings in the U.S. So over time, the longer the shutdown stays in effect, the more of an impact they're likely to see. Maybe not directly because of reduction in government travel.
So tomorrow, 3:30, I'm going to close the session half an hour early. Get out of town before the traffic. Head up to North Carolina. Go visit the daughter. For Saturday, weekend video should be out about the same time on Sunday.
We've already seen that with Marriott, Hilton, Hyatt. I know that those are names that you don't cover, but just so that the audience knows, they have said, for instance, a big 10% drop in Canadian visitation earlier this year for them was highly irrelevant because those Canadians were still traveling. They were just bypassing the United States and going to Mexico or the Caribbean or other places like that. The same goes for Airbnb. They might see the consumers in other places still traveling, regardless of whether there's a government shutdown and the like.
It's interesting when we're talking about these companies because they are truly employing AI in a way that if the conventional wisdom says, oh, ChatGPT could put Expedia out of business, Ariane Gorin, the CEO, sat with me and said, oh, no, not so fast. We're using AI to make our customers feel more special, to feel more connected. And when we're
Coinbase
B2B business,
at the highs of the day. Coinbase, big move on Coinbase, looking for more follow through.
do you like what you see?
I'll take some longer dated options on Coinbase. I have November's right now.
Whether companies like Booking, Expedia, and Airbnb deploy AI to come up with their own travel agentic commerce options. We did a study on this about 2 months ago. We looked at things like we looked at the OpenAI's project. We looked at Romy, which is the Expedia offering, and Penny, which is the Priceline offering. And I'm not sure any of them are really ready for prime time. But of those three, the one I thought was most ready for prime time was Romy, the Expedia product. Travel is a very considered purchase. I mean, people will spend 3 to 5 hours a year planning their summer vacation.
Okay, we got 17 minutes to go. 17 minutes to go. New York FANGs are somewhat mixed. The S&P equal weight index is looking fine. The S&P equal weight index. Let's see what that looks like. S&P equal weight.
It's not just knowing what all the hotels are in the Florida Keys, but knowing which has availability.
S&P equal weight. Okay, it's sitting right on top of the 9 EMA. Neutral for the last 6 trading days. Okay.
And an Airbnb would have, and I'm not sure OpenAI wants to go in that direction. I think they'll just take the Google direction and just
9, 21 day, 50 day, 100 day, 200 day.
Investors like what they see, though. Over 6 months here, Expedia is up almost 30%. It's way outpacing, by the way, the share increases.
Okay, RSI staying up there. Okay. MACD's lower. Stochastics trying to turn up. Stochastics trying to turn up. Okay.
An existential threat and an opportunity. Is there going to be a bifurcation in terms of scale about the big companies having the means to employ? I mean, Airbnb is using an internal AI engine based off of their gold standard customer interactions so that their customers feel seen, heard, and are delivered recommendations that really suit individuals, not just these bland marketing and promotions.
I think there'll be a bifurcation if companies don't effectively deploy AI. This is a real opportunity for companies. They have
Let's see what the S&P is going to do here. S&P. Okay, it dropped out of this range at the high. Got little dojis there, little wicks, I should say.
Booking, Airbnb, and Expedia to deploy AI. You mentioned the outperformance of Expedia. Actually, thanks for bringing it up. Expedia is one of our top picks for the year. It's kind of a contrarian call on our part. But part of it is it's darn cheap. This thing still trades well under a market multiple. 13, 14 times earnings. You have new management in place. If they are better...
Got 15 minutes to go. 15 minutes to go. Trying to bounce it here. Market's trying to bounce.
Convergence continues. The valuation convergence is going to continue too. And the best way to play that, I think, is to be long in Expedia. That's one of the reasons why it's one of our top picks.
Well, by the way, as long as I'm here and I cover travel, I should mention the cruise stocks too. Up 51% for Royal Caribbean over 6 months. You've got 26% higher for Norwegian, Vikings up 46%, Carnival's up 44%. Again, I'm just adding this in. As long as we're talking about travel, Mark, I might as well make it worth the viewers' time. Thank you for your perspective and your input.
Thanks, Contessa.
Up next, we're tracking the biggest movers as we head into the close. Christina Parts-Neville is standing by with that. Sometimes I just do what I want, Christina. I know, they were saying...
14 minutes to go. 14 minutes to go.
You do what you want. You toss to me. Why? We're talking about a lithium miner getting downgraded after a doubling in price and a crypto exchange hitting its longest winning streak in months. Those stocks and so much more when we come back. You know it.
Okay, Oracle just kind of hanging tough. Doji spinning top right at the 20-day moving average after a few weeks of fading. We're holding on to the 21-day now. Look like we might be headed to the 50-day. So far, the bulls are are holding it up, so we'll see how that goes. Frano said she's going to London. That's cool. London. Kind of quiet. Kind of quiet here.
Tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so sometimes Next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management.
Meta trying to push you a little bit higher. Meta.
Actually, I'm seeing something from Schwab.
Okay, IBIT. I took IBIT off. I'm going to focus on Coinbase and Bitcoin.
Specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Hims and Hers. What's that doing? It bounced. Hims and Hers. Hims and Hers. HIMS. We got a few minutes left to go. 12 minutes left to go. Hims and Hers. Maybe we test it up at Bollinger Band tomorrow or Monday. Looking for a bounce. IBM. Trying to push a bit higher. IBM.
Welcome back to Market on Close. I'm Sam Bartis, live from the floor of the New York Stock Exchange. Skywater Technologies is on the run high today as it touched its highest level in almost 4 years. Shares have now risen 45% on the year and over 130% in the last 52 weeks. It's time now for Overlooked Stocks. I'm joined by George Tillis, who is the senior markets correspondent, for a good look at Skywater. What are you seeing there, George, today?
Well, I was just actually looking at the chart on an intraday basis, even going back to September. It was trading around $10 a share.
IBM.
The stock has effectively doubled.
Looks okay. Broadcom.
I think there's a lot of catalysts.
What's Broadcom doing? AVGO. Broadcom. Kind of just sitting here. Broadcom. Okay.
Market cap of less than $1 billion. It's an advanced semiconductor development and manufacturing company. They also provide packaging services for technologies like integrated circuits and wafers that are used for various applications.
Okay, we got 11 minutes to go.
Semiconductor manufacturing. They also are a company that supplies to the Defense Department, which I think is a catalyst altogether. And some of the technologies that they supply include wafers, integrated circuits that are used in radiation detection equipment. But it's really an interesting company in the light of what's happening in the semiconductor space. I mean, even today, for instance, and just going back, let's say about a month or so ago, we know Intel has caught the attention of investors because it looks like the Trump administration has found that this company, Intel, is actually a company that has a large foundry or production business.
Okay, Circle. What's Circle doing? Circle. Circle coming out of the squeeze. Okay, if Circle gets something going here, this could be a nice one. Circle. Look at the weekly. The weekly on Circle. Looking pretty decent. Let's look at the 60-minute on Circle. Okay, so we're above a rising 20 EMA, both the 60-minute and the daily. Daily is sort of flat, but it's turning from downward sloping to flat. Next phase would be up and to the right, 60-minute time frame on Circle. Okay, so if you don't have a position, maybe start thinking about it. It's a little extended right now. I'd wait for it to come back, at least maybe to 147 or 145. Circle. Circle Internet Group. CRCL. I don't know if they have anything. Circle. Yeah, I guess they do. Circle. Okay, not much in the way of earnings. Circle. Circle has prospects. Looks like it could go some more.
Again, is of critical importance because they supply to the Defense Department. And the other thing is you got to keep in mind is business fundamentals or financial fundamentals. And considering the company's not profitable yet, when they reported last earnings.
All right. Oh, boy. Good day today. Good day.
If you look at the last 4 quarters, the company generated around $290 million in sales. So they're expecting to double their sales between the trailing 4 quarters, as reported, until the end of 2026.
Yeah, we continue to just fade off the highs. Not a bad day. We did have buyers at the low of the day. We're closing in the upper half of the daily range, which is good. S&P closed in the upper half of the daily range is a good thing. Meta. What's Meta doing? Meta trying to hold on to the highs, same with Apple and Amazon. Netflix turning back up, Nvidia flat. Nvidia not getting much action today. Lulu, looking for more upside on Lulu.
Just to talk about other companies, MP Materials, which is a rare earth materials company, they're aligned with the U.S. government, so is Lithium America.
Okay, Circle. What about Core Scientific? Core Scientific, 60 minutes trending. Core Scientific, trending. Okay, Dojis. I might take this off, actually. Core Scientific. Let's see, Core.
So nonetheless, I think the moral of the story is that manufacturing technology.
Okay, taking Core Scientific off the table. 3 dojis. I don't want this to pull back, and I want to reduce my exposure to Bitcoin anyway to just Coinbase. Coinbase. Okay.
They are expecting to double their sales in the next year relative to the last year. So for what it's worth, they're growing their sales, but they have to be mindful they're still not profitable yet on an adjusted or on a GAAP basis.
Okay. All right, we've got 6 minutes to go. 6 minutes to go.
Thank you so much for that, George. Always appreciate your time. I'll send things back over to Marley in Chicago.
So much, Sam and George. And we're nearing the end of the market session. That means we'll be bringing in Kevin Green to break down the levels he's watching on the S&P 500 and to break down today's action. Next on Market on Close.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots.
Coinbase.
Subscribe free at schwabnetwork.com.
Coinbase looks good. Bollinger Band's opening up top and bottom. That's probably going to be fine. Bitcoin back above the 50-day this week. Top Bollinger Bands. Bollinger Bands opening up top and bottom. RSI rising. This should follow through and maybe test 122 to 124. That's supply. Okay. S&P is pulling back. 5 minutes to go. 5 minutes to go.
We track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Okay, you can see these big swings in hedging flows. Should be very obvious where you get long, around 11:30, and where you get short. Okay, that should be obvious. Okay, short up here, long down below. So just waiting for those signals. Very nice way to trade the market, especially if you couple it with ICT methods.
Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the
Okay,
day.
the New York things are all mixed. We got Amazon trying to do something in a day. Amazon, looking for a follow through. See if that can push higher tomorrow. 20 days turning down through the 50-day, probably by tomorrow, if not Monday. Netflix had a nice little dip. Big hammer looking candle. We'll see what happens tomorrow. Maybe it might be an entry down here. We'll see.
session. Kevin, what levels are you looking at on the S&P 500? It looks like it's holding on to that 6,700 mark.
Yeah, we're trying to hold that 6,700 mark, at least for now. What we are actually seeing is a little bit of selling pressure, especially when you're looking at Tesla as well as some of the other companies that are out there. You're only going to close to the downside. You want to be able to hold 6,700. To the upside, the next area of resistance is going to be 67.
Okay, 3 minutes to go. 3 minutes to go.
Just seeing a lot of pressure overall in this market, and I'm not sure if we're going to be able to kind of hold this up for that much longer.
The great thing about S&P big cap options is you cannot get assigned. You can't get assigned. We're closing right at the London swing low, by the way. You can't get assigned like you can with SPY or the Qs or IWM. If it closes in the money, you get assigned shares. Don't want to do that. That's why I like to trade the S&P 500 big cap index. Going into the close, if you for some reason you fell asleep and you didn't realize that you had the 67.10, you were $5 in the money for every option, you'd make $500 in the money. S&P. Okay, if you forgot for some reason you fell asleep middle of the day and you had the 6,700 call, or if you had the 67, say you had the 67.20 put and you fell asleep, you wouldn't get assigned. You'd get $100 per point per option in the money. Always cool. I always find that cool. All right.
If you're looking at the semiconductor space or the stocks right now, there's actually an interesting reversal candle that's taking place, at least for today. That's not really that promising, even though the semiconductors are up right now. Tesla has a bearish engulfing candle right now, and that selling pressure that we're seeing for Tesla is going to be one of the larger volume days that we've seen almost all year for that name. Once again, a little bit bearish. So it just
Bitcoin, Tesla.
Now let's say a little bit of a pullback or maybe a consolidation for the S&P 500 over the next couple of trading sessions, maybe even the next week and a half as we try to
Tesla, pretty decent volume, above average volume on Tesla. Outside day on Tesla.
Okay, for now, it looks like we could be heading for a record close across equities today. But I'm just wondering, you mentioned volatility. I see the VIX has picked up. What are you watching there?
Yeah, so kind of mentioning earlier, when you're looking at when it comes to volatility, I'm actually looking at the VIX minus the VIX 3-month indicator, and then also comparing that to high yield credit spreads, as we kind of talked about early on in this segment here. What you have seen is actually both of those are moving to the upside. Actually, since the September
and that's a wrap. That is a wrap. All right, folks, I got some things to do. I got to go get my hair cut and a few other things. So I'm going to bid you adieu. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 4 o'clock straight up, closing bell on the closing print for October the 2nd, Thursday, second trading day of the new month. Looking forward to Friday, tomorrow, to give you the play-by-play again. Okay, so have a great one. Take care. And we will see you tomorrow. Ciao.